It's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Wednesday to you both.
Hello.
Hola.
Nikki, tell everybody what you're going to do today. Today's the day. Today's a very big day. It's a long day for you.
Today is Liberation Day for us traders.
Okay.
For us little
tomorrow's Liberation Day.
Wow.
This is premature liberation.
Yes. Pre-liberation.
Pre-liberation.
Okay.
Yes. We are still shackled, but soon to be free. It's going to be fantastic. Midnight tonight. That was anticlimactic.
We're going to be broadcasting live. And when I say we, I mean you and Mikey.
Yes.
I will be asleep.
You said the castle?
Yes. So Mikey and I will be here at midnight Central tonight. So you can come join us.
And Matt in production.
And Matt in production.
And Chris I.
We're going to have Chris Ingebrigtsen, who is our CTO.
Yes.
He
At Tasty Trade.
At Tasty Trade. Does all of our back-end tech work. He's amazing. Him and his team.
He has the real keys to the castle.
He has the real keys to the castle.
You got like a big fake one that they usually give, like, you know.
Oh, like a mayor gets a
like a mayor,
or like you know,
honorary mayor, or
like
something like that.
Celebrity gets for the
like I'm an honorary attorney.
Yes.
John Jay College of
I'm sorry. No, none of that is true. Go ahead, Nikki.
But we're going to be broadcasting live because we want to be the first. We're going to be
the first, the only.
We are going to be. You're going to see
live.
me at midnight with Chris. Chris is the keys to the castle. He's going to turn that key, smash that button.
Pattern day trading,
maybe a pinata. Who knows?
Right?
Pattern day trading goes away, so it'll all be done tomorrow.
Nothing for the accounts that were under the patent day trading.
So if you come and join us, you can. We'll be taking questions throughout. You can ask anything you want. We'll have Chris here. So if you have any questions on the tech itself, he is the guy to ask. He is there. Previous administrations would say that they would develop that they were the developers. He's the real one.
Sure.
So if you have any questions on the tech or anything about PDT or the history or anything like that, we're going to be taking questions live. If you have trade ideas, it's going to be midnight. Why not? Let's make some trades.
Sure.
So we'll be taking a little bit of everything. It'll be a lot of fun.
Good.
Yeah.
Very good. Okay. Awesome.
And you came up with this idea organically. You've been very passionate about it. You're carrying it through fruition, and so you made it happen.
No, we've been waiting 25 years for this. Not me.
Longer than some of our staff members have been alive.
Yeah, we got guys that are younger than that.
I've actually gotten blamed for creating patent day trading rules. I mean, it was the market makers that did it, but it wasn't us.
Yeah.
It wasn't us. We didn't have.
You had no
clue.
You had no.
You couldn't come up with something that.
Even though you're an attorney, and you probably could have written that up.
Even though I was an attorney, I could have written
that.
I wanted to.
Yeah, of course.
I wanted to, but I did.
Of course.
Of course.
But it'll be. There won't be, if you are stuck in PDT right now, it'll be gone tomorrow.
Which is nice.
So there's nothing you have to do account-wise. There's no button to click. No.
If only it worked that way for people's student debt. You just flip a switch and it's gone.
This is just going away. If you are at a broker that is not switching the switch, leave. You can come on over. You'll be free as soon as you get the account open. So free as a bird now.
Free as a bird now. There you go.
Exactly.
But also interesting. You're going to have an interesting conversation about the technical side, what we literally had to do to make this happen, which I think is interesting.
Yes.
As a fan of how it's made shows, but Chris I is going to be on to give his insight as well. So. Just gonna watch us 11:59 p.m. Central Time tonight.
Yes,
this should start 5 minutes earlier. No, I'm just kidding.
Maybe. We haven't fleshed that out yet. This was somewhat planned for the moment.
Timing never been a good thing for me. If I only had 1 second to do something.
Here's the thing. Nobody's beating us to the punch.
That's
okay.
Right.
Day one, we told you day one, when this thing is done, it's over.
We mean second one.
We mean right that second. So not in the morning, not in the middle of the day, not after the close. That second, it's gone. We remove it. Freedom. Liberated.
Beautiful.
Yes, it's going to be fun.
Oh, the moment we've been waiting for.
Yes.
Well, who cares about Stanley Cup hockey when you've got that? I mean, boom.
And also, if you don't show up, my time here might be clipped pretty short. So support me.
You got to swing big for the fences, which you might also
miss.
miss.
I do this one and nobody shows up. They're going to be like, you got
we
no
all
yank.
have an expiration date, son.
You got no yank. So, you know.
No yank. There you go.
Like that?
I haven't heard that in a while.
Yeah.
I think it's just crazy. You and Mikey, luckily you live so close to here, but you're literally going to come here. Because then my question was like, if I was already here and it was like 12:30 in the morning, I would just stay here till 6 in the morning.
That's a tough one.
But
everybody was asking me that.
Right,
like,
but
are you
I was
just going to stay here? I was like, no.
No, see, my question was, do you still wear the nitgown? You used to wear like a nightgown. Do you still wear a nightgown with a hat?
I actually thought about that on my way to work today. I was like, should I get like a
flannel
pajama, like with a hat?
Oh, like a throwback, like an old timey.
Yeah, like an old timey pajama hat thing.
I know. I think you and Mikey should go more like Hugh Hefner, like a robe,
bathrobe,
right? Like a smoking jacket, like classy.
Yeah.
Look, I have a credit. Let's get a company credit card, and I can go shopping.
I didn't think about this early enough, though.
Look, we live in a very large.
Go boxers. I mean, there's nothing wrong with that.
Well,
you gotta save that for the lady. That's hers and hers alone.
Yeah.
Yeah.
If I was going truly organic, it would be
no.
And that's enough of that.
Tasty After Dark. It's here. The moment you've all been waiting for.
Are you guys gonna be drinking? Are you gonna be drinking?
No.
Drinking at midnight on a Wednesday?
Come on. Who do you think I am?
Oh, I know exactly who you are. That's why I said it.
Yeah.
Can I have a Domino's delivered for you or something like that?
Sure. Yeah.
Okay.
Oh, that's good.
They got to be downstairs. There's got to be 24-hour front desk. Has to be.
No, there's not.
No, I don't think
no.
I've come here on the weekend. No, but you can. It's a badge. It's secure. So even that front gate there or the front doors will be locked. But you just use your badge to get in. But no, they don't staff that desk.
Oh.
24. Sorry if that's a security violation.
Yeah, we're throwing a party here.
But no, they're not. They're not staffed 24/7.
Sweet. It'll have to be a frozen pizza, though. It'll be in the fridge then for you, okay? You guys just have to warm it up.
Yeah.
Make sure you start the oven about 20 minutes early, okay?
I think Todd has an air fryer at his desk.
Hi?
Todd.
Oh, Todd. Oh.
I was just kidding.
Oh.
I don't. Got all sorts of gadgets over there, so.
Oh, funny.
So good times. So what'd you get up to last night, Pat?
Stanley Cup hockey last night. I mean, I thought the Canes were going to put a whooping on
the who?
On the Knights. The Canes, the Florida, the Carolina Hurricanes, sorry.
Oh, okay.
Canes.
Okay.
Did I do something wrong?
No. I couldn't follow. I didn't know what the team was, and then they switched states.
Yeah, they're playing the Golden Knights, the Vegas.
That I know. That I have heard of.
Yes, yeah.
Well, NBA Finals start tonight, so historic matchup. Knicks Spurs. Who you got? What are the odds?
Shout out to Mr. Vecchio, who I'm sure is preparing.
It is a rematch of that 1999 contest, so kind of like
I originally was saying for Vecchio, I would root for the Knicks.
Yeah.
I think New York would be insufferable. Just in general, just like the state of New York.
The Knicks have had I think 5 more days of rest, so I don't know if that's good or bad.
I have a lot of friends there. It could be quite insufferable. So I'm gonna go with the Knicks.
Okay.
But
how about you, Bat? What are the odds say? I don't know. I don't know
what the odds say.
I think
San Antonio
the Knicks
probably
are. They're underdogs, like 2-1, maybe.
Yeah.
Okay. Yeah. So the Spurs are the favorite.
Yes.
Spurs are the favorite.
Yes.
How can you not love Wemby though?
He's amazing.
I mean, that kid, he just gets into everything. Have you seen his parents?
No.
There's this viral photo. His mom is 6'7" or something, and 6'7", and his dad is 6'9". 6'7".
7.
But he's like standing with his parents, and it's kind of crazy.
Yeah.
Right. Nice.
It's like, oh, okay, good job, genetics.
Yes.
Are you gonna gamble on the game?
I'll probably dabble. It's one of those things. The call of the.
Every time you try to leave, they pull you back in.
Yeah, when you're watching the game or you're like, it's about to come on, you can't. You got to put it. You got to have some skin in the game.
Yeah.
You got to.
I have a Clyde Frazier signed ball, old New York Knickerbocker when they were the Knickerbockers.
Okay.
So maybe I'll give it to Vecchio if they win, so he can have it. So it should be in good hands.
There you go.
You have the certificate of authenticity on that? Or?
Yeah, they're all bullshit, but
Yeah.
sure. I mean, some
I
fat
figure
guy,
for you, you're
there's some
just
fat guy sitting in his basement signing those pieces of paper, sticking some hologram on there. Are you kidding me?
It will be interesting though. Viewership for NBA Finals games or NBA games in general has been declining, so maybe this can revive it. But it will be the 8th straight finals with like a different team winning, so that's fun.
Wow.
That's a little
I didn't know that.
fun
That is a fun
sports
fact. That is a
fact
good
there.
fact.
Yeah. So congratulations to both teams. You're all winners.
Yes.
And millionaires.
All winners. You all get a participation prize.
You're all millionaires. So, all right.
Multi-millionaires.
How about you, Nikki? Did you have pickleball last night, or
No.
you're resting up for tonight?
Oh, you better
Resting up, just preparing
Sure.
for Liberation
You
Day.
better get your pickleball game on point because your brother's coming after you. He's been playing hours of pickleball.
Oh.
Yeah. So he's coming at you. Be careful. I'm telling you right now. You've been warned.
I think
I'm not
he'll be
worried
okay.
yet.
He's
Like
the
I said-
reigning softball Ojibwa champion.
This is right. MVP.
I had this
MVP.
conversation with.
Where's the trophy, by the way? I mean,
I should bring the trophy in.
I mean,
I did have.
You don't really like have that thing in your bedroom, do you? You do have it in your bedroom, don't you?
No. But we were.
Don't lie.
We were in the pool over Memorial Day, and my dad challenged Vinny to a swim.
No, I did
lap
not
race.
challenge him. I don't have to challenge a 16-year-old.
Whatever. He did.
He did. And I said this. Go ahead.
And I had to explain to Vinny. I was like, Vinny, when I challenged my dad,
This is so true.
he was my age.
Yes.
Yes, that's true.
So I'm like, Vinny, if you can't beat him at 65,
4. I'll be 64. I'm not 64 yet.
whatever, you're old as dirt. It's like there was a disparity between the competitiveness.
Right, yeah.
I was 16 against a 40-year-old.
36-year-old.
Sure.
Probably 40
Yeah.
something, 41.
Yeah, versus
It was high
16
tea,
versus
Tony.
64.
Yeah.
I
20
had a high tea,
years.
20
High
years.
tea
20 years
Tony.
I'm like, Vinny, I'm going to have to take that spot and
Yeah.
start whooping you and everything.
Yeah. And Vinny lost.
And Vinny lost, which is...
In fairness, it was underwater, just going back
Yeah.
and forth the length of the pool.
Yeah.
Yeah, don't vape.
No,
Don't vape, little girls and boys out there.
kills your lung capacity.
That's right.
Yeah, there you
Right,
go.
Don't do that other stuff either. You won't be able to swim the length of the pool.
Yeah, well, that's fine.
Like a 64-year-old.
Hey, we got a great show for you today. It's a wonderful Wednesday here at
service
Tasty Live. Little hump day action.
Hump day.
As Nikki mentioned, we will have very special programming this evening. Tune in here
Please.
or on our YouTube channel too. So we would love to actually have you in the YouTube chat. So
Yes.
again, special programming tonight. Mike Butler, Nick Batista, Chris Ingbertson, the Tasty Trade CTO. We are flipping the switch for PDT, Trader Independence Day, Midnight Madness, live. I think the only ones to do it. So tune in for that. But on today in the morning, before you take your disco nap and gotta come back later at the top of the 8 o'clock hour, we have an options jive. Charm School, understanding how extrinsic value decays.
So this is a fun one. A Dr. Jim special. He's the master of charm.
Yes.
But charm is essentially
He is the master of charm.
he is.
Yeah, I agree.
I mean, he's the charmiest.
He charmed
guy.
us even when we
charmed
didn't want to
us.
be charmed.
He's amazing.
Yep.
But we're talking about like charm, which is moneyness, another Dr. Jim favorite, but talking about like extrinsic value, delta, and time, and how all those things change for different types of options. So we're talking about out of the money, in the money, at the money options, and just how those factors kind of play into your position. The decay of delta over time is really what charm is. So It'll be an interesting one. It'll be a new look at out of the money premium decay, what you should expect out of your position.
Okay.
Yes, it's a good one.
Very nice.
Beautiful.
Yes. And then, yes, I see there is a correction to the schedule. I see it. I've been notified. Thank you.
TP in the house.
Yes.
We've confirmed.
Well, but first, though, we're going to do what's your assumption, though?
Yeah.
So we got viewer submitted trades. They have an underlying. They have a directional bias. That's going to be at around that 8:30 time frame because it's assumed the position Wednesday. So the bats are going to do viewer submitted trades. And then at 9 o'clock, TP will be in the house. You don't even need to name the segment. It's just TP doing
electric
what
every single
TP
time.
does. No, you're not going to steal that. That's for Liz and Jenny. But TP will be in today, and that's at 9 o'clock. And then we got live from the trade desk at 9:20. Q in the house counting down all the top trending tickers. And Mr. Ryan Grace on the crypto side of things.
Awesome.
Crypto's having not a great
Knicks
week.
of 4.5 dogs. 4.5
For the first game.
For the first
yeah.
game. Just
I was looking at the series.
My buddy just told
I think-
me. I just wanted to
Oh, thank you.
I think the
Yes.
Spurs are minus 200,
yeah.
something like that.
Something like that.
And then the Knicks are like plus 170 or something.
Okay.
Beautiful.
Well, we will see what happens. Someone said just the greatest thing about this whole series is that it just forces Charles Barkley to go to San Antonio and confront what he said about the women of San Antonio.
What did he say? I didn't hear.
You've never seen the clip of I'll see if we can find it. If you just Google like Charles Barkley, San Antonio.
You said the talent isn't
good.
very good.
Yeah, it's just
Essentially
so
the
right. It was, but it was a
Does
very.
speak his mind.
He is not a role model.
He has a lot of
He
experience.
is not a role model. Yeah, but it was just.
He's not supposed to be. He's a basketball
it was just.
player.
I know, but he's just he's deeply humorous.
yes. He still is funny, skinny too. Like, a lot of times when guys are a little chunkier, they lose some of their funniness when they get skinny. He's still funny.
Are you body shaming someone? Are you?
No, I'm stating a fact. Wasn't he a big chunky guy? Did you not have eyes? I mean, he was a big chunky guy.
Did you say that to his face?
He does Ozempic commercials for crying out loud, talking about how much weight he's lost.
Okay.
I mean that's not a body shame. That's a fact.
Okay. All right, you say that to his face. And then around that 10 o'clock time frame, we also have Liz and Jenny live from the floor. The SIBO, it's always electric when the ladies are live. Yeah. And if you have a question for the ladies, they would love to answer your question during their show. Just go on to Twitter, use the hashtag LIZJNY, and they will answer your question during their show. But hey, in the meantime.
I was with Liz yesterday on Last Call. She's very
Jenny. That was Jenny.
I was with Jenny on Last Call yesterday.
Girl, are you okay?
You are correct.
I told you.
Liz and Jenny.
I get updates almost daily of openings at senior homes.
Sure.
In, the North Shore, across the North Shore.
Yeah.
I have a variety of price ranges.
Okay.
And, facility kind of like scales. So
don't you
maybe
worry.
you should
I took care of me. I took care of me because I know you.
Depending
no, I know
on
me.
how the rest
I already
of this
have.
goes,
I have an executor.
He could be.
You're not it.
He could go to very nice one or very low one. We're not.
You are not the what's it called?
The power of attorney.
Yeah.
Not just power of attorney,
the
but
executor of your estate.
Who has power of your medical? There's you can be specific, right? Like this person is your estate.
Sure.
This person is your medical.
Sure.
I think it's power of attorney.
I think it's.
What's that?
I think it's power of attorney.
I think it's just power of attorney.
Somebody's got help. Somebody got power of help.
The one,
or something.
yeah, the one that gets.
Okay? And I have that set aside.
Oh, who is that one?
Yeah. Oh, forget about it. Not you right now. A third party. I could not trust any of my family.
I was gonna say.
Are you kidding me?
You got
greedy
your worst
SOBs?
problem.
No
Can I get on with this show, or do you guys want to do your therapy?
Sure,
you want to do your therapy time right now?
Like 0-day option?
No, I don't want to take too much time up. It's like we have a schedule.
Yeah.
Oh yeah.
Anyway, that is our run of show for today. Just let's do the daily dose.
Let's do it.
Our leading story. Breaking news.
Coming
across the wire. Leading story.
Top story.
Jump in.
In today's headline.
This just in.
Breaking news.
All right, everybody. Today is a wonderful Wednesday. It's June the 3rd. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name's Vanetta. Are you ready for the news?
Ready for the news.
Earnings.
AVGO.
Oh,
a big one.
That is a big one.
I think Broadcom, also known as Broadcom.
Yes.
Crowd, CRWD.
Okay.
Those are the two that you're really going to worry about.
Yeah.
Palo Alto Networks was last night.
All right, I got it.
All morning of Sienna, another one of the
CIEN.
Yeah.
You're right about
So
that.
a couple. Yeah. I think AVGO and CrowdStrike. Those are the big boys.
Yes, Sienna markets
that's
are as
enough to
bad as
keep-
AVGO markets, to be honest with you.
Yeah.
That's enough to keep everyone busy. Hey, let's get to the first headline of the day. Goldman Sachs CEO Solomon says markets are in greed mode as SpaceX, Anthropic, and OpenAI prep IPOs. We're looking at a $3 trillion IPO wave when this is all said and done. That's the combined target valuations of all three IPOs. And again, I announced yesterday that Google is now, for the first time in a very long time, they're doing an equity raise, but exuberance can go on for big periods of time, and we're earlier in the cycle than later, but he's just saying, hey, we're in greed mode. Do you agree?
I think so. Yeah. Obviously nobody knows
It's unprecedented.
how far it goes.
Yeah.
But yeah, certainly. I mean, the texts I get, the numbers people throw around, it's big. I mean, it's been. You got to trade it. It is what it is.
Greed is good from the 80s. Now, you do remember 87 was
Yeah.
there too, but greed is good was the motto of the 80s.
I think it's great.
I think the biggest concern that people are expressing, though, is just the forced absorption of all people of this, because of it's instantly going to be in the top percentage of all the indexes, and that forced absorption in everyone's 401k, is that leaving us as the bag holders?
Yeah, but the 401ks are always the bag holders. I mean,
This is so fast, though, Nikki.
Yeah, I mean, I was speaking more on just markets in general, but in terms of this, yeah, I think it doesn't make sense to change the rules just for SpaceX. I understand why they're doing it because it's such a big company and you know everybody wants some exposure to it. What if it's good? What if it goes to 2 trillion? Then are we happy?
Sure, I don't. Again, this is unprecedented.
Yeah.
I'm scared all the time.
I know. It's just, over time, I don't think I don't think it's going to be, I don't know.
But but I'm just worried about what this takes funds and money and liquidity away from.
That's the biggest question. I've been worried about that. I think it's good. I think it's already happening. Crypto, your Microsofts, your Metas, your Amazon was down, $6 or $7 yesterday. The big boys are getting taken to the woodshed, and I think a lot of that capital is going to go towards this. It's spread out, so I mean.
Well, right now it's 10 companies doing 69% of the massive move in this. So, if you want it to be 3 companies,
I mean, it is what it is, but he's right, and it's a pretty public way of saying it. A lot of money's coming out of crypto, which I don't think that's really going to get put into, Anthropic and SpaceX and all these other. I mean, I just think it's kind of, I don't know. There's better places to put your money right now to get that upside push that everybody wants than crypto right now. But I think the market absorbs it, no problem. This market, in my opinion, sells off because of interest rates. I think that's going to be the first one. And bonds are hanging in there at 112 and change. As long as interest rates don't change, I'm going to go real old school. As long as interest rates don't change.
They're not changing. They've told you.
I agree.
Nobody's changing rates.
Well,
also, you're getting your jobs report on Friday, though. So,
well, that's my thing. Because nobody even can look at oil. $98.
It hasn't mattered.
It doesn't
Nothing
matter to
has
the
mattered.
market anymore. Once you it's always the first push of prices. They say the sky is falling.
Yeah.
Oil's $100. It
But that-
affects everything that you do in life. And then when it gets there the second, third, fifth, and 10th time, nobody.
But that doesn't mean you're going to see the equity market as a whole, the E-minis could go down 5%, but individual names.
5% gets you to.
I know it's nothing.
Get you to Thursday of last week.
I know.
Just
But some of these names can go down 25%.
Sure.
Like that's the sort of
Yeah.
that's the risk that I think is more out there. Like I don't think there's like a huge downside move on a SpaceX IPO. Like it's not like a crash. I don't think it will be. But I would not be shocked to see Marvell down 25% on SpaceX, IPO, and some of these other high flying, the semiconductor space, just taking a little bit out of that. That takes you back to prices the middle of the last week.
Sure.
Yeah.
You know what I mean?
Yeah,
Like it's like, but it's gonna feel Armageddon-like because it's such a big move.
Well, something that may have felt Armageddon-like for some of the exchanges yesterday is the exchange stocks crash as the CFTC's crypto perp revolution sparks existential fears on Wall Street. SIBO was down 17% this week, CME down 8%, ICE down 3%. The CFTC's approval of crypto perps sparked fears prediction markets will displace conventional exchanges. Kalshi has been aiming to win approval for perps beyond just Bitcoin. What are the real ramifications?
I tried to explain this to Marty at the coffee
At the water cooler?
water cooler. The look on his face when I explained to him what this was, he was back.
50x leverage.
Yeah, I was like, yeah, you can take, instead of just like, buying a futures contract for, $20,000 in margin, you could just put $1,000 on basically, black or red, up or down. And you could do it on basically any leverage you want. And if you go down, you're out of whatever the cash is, and you have, infinite upside, up or downside, whatever you're taking. He thought it was the funniest thing he's ever done. He's like, so you're telling me you could put $1,000 on Bitcoin going up at 10 times leverage, and if Bitcoin goes down $100, you just lose your 1,000. I'm like, yeah, that's exactly it. It's literally like a 10x bet on whatever your cash is. And the spreads, you probably get killed on spreads because you're selling at bids and buying offers. And, just instant liquidation.
What a time to be alive.
What a time to be alive.
But numbers have gotten so big that I've talked about this with options, and options have exploded in popularity as well, which is why I'm long both SIBO and CME into this move. But
it looks unchanged, but it's gotten decimated from around $3. Well, I mean, if you want to look at the top, it's $330 down to $250s.
Both of these are down 30-40%.
Yep. There's the money coming into all.
But things have gotten very expensive. Everything.
Yeah.
And so people need to. People are using leverage, whether it be options, perps, sports gambling,
parlays.
Like everybody's looking for leverage because it's hard to buy Micron at $1,100 a share.
Sure.
Buying one share and watching it go up $20 and making $20, it doesn't change anything for anyone. So.
Well, in other crypto news, Coinbase invests in ProShares' new IQMM stablecoin money market ETF to advance crypto cash management. Its primary stablecoin backing the ETF is the USDC. It represents a 5% target yield versus 0% for traditional stablecoin. The Genius Act, expected to pass the Senate, creates a regulatory framework for these stablecoins. What do you think of a stablecoin ETF?
What do you think about that?
And then Coinbase investing in basically their own book.
But essentially this is going to take away from like T-bills.
Yeah.
Right?
Yeah.
I mean, this would be, if there's less slippage, which I imagine there would be, then this would take away from T-bills, which would be good.
Yeah.
I mean, anything like this, if this is a liquid cash and sweep vehicle, great.
And it's the first ETF that treats stablecoins as cash management vehicles, not speculation. So
Cool. Yeah.
What's Coinbase doing this morning?
Down about $1.
Oh, no.
Hasn't been able to catch itself a bid. Really been whacked every time it's lifted its head. I mean, it started about a year ago, closer to 400. That's $173.
Yeah.
Oh, wow. And what's Bitcoin doing?
Dead.
Bitcoin, my buddy said
It's at 6.7.
It is at 6.7. It is at 6.7. Traded under 66,666 yesterday, which my friend
Oh, that's a good number.
foretold. It's
the devil's number.
It was going to happen
Yeah.
when it was 67.
You're gonna buy some at 42.
No, I think it's dead money right now. It has been dead money, but it had some upside to it.
Well, no, you could buy it at 420.69.
Oh,
So
Nice.
you buy it.
got it.
Nice.
Got it.
Hey, Palo Alto Networks jumps 10% after hours after blowout Q3 earnings. Their next-gen security ARR climbed to surge 60% to $8.1 billion. The SaaS apocalypse has been coming for some of these companies, but it looks like Palo Alto is turning things around. 1,200 customers reached out after the Mythos model revelations, and the company said they've had 800 meetings in 6 weeks.
Reversed last night, kind of quickly too. About
it
half
was
an hour after, maybe a little bit more than that. Was up, flirting with over 300, 310, 315. It's 286, which is down $10, which gives back
And it's gone.
It's gone.
which gives back to yesterday's move. Not that big of a deal.
Yeah.
But CrowdStrike on deck this afternoon to report
Yeah,
their
it's-
earnings, so it
it's
could be in a
also down.
similar vein. Yeah.
yeah.
Crowd looks unchanged, but also on its high.
The space, I mean, those two are really the winners in the cyberspace. They've gone parabolic.
Sure.
Yes.
It's been an incredible move. So
Stock up 31% year over year.
there you go.
Ulta, yeah! Ulta Beauty jumped 7% after hours after crushing Q1 estimates and raising full year earnings per share guidance. The company saw 11.1% Q1 revenue growth year over year. Yeah, it's pretty good.
Not anymore. It's down 10.
No.
No. Yeah, Ulta trading like 280, or I'm sorry, 480-ish here, kind of lower end of where it's been trading. Not a hard one to trade. Hard one to trade.
It is.
They're
It
not
is.
that great. It's also like, I think just going back to what's taking attention right now, I don't know many people that are thinking about, maybe you, but people that are trading that are thinking about going into Ulta over, AVGO, Panda.
Sure. No, of course, yeah.
That's kind of the attention.
No, I get you.
And Ulta's gone from 700 early in February,
Yeah.
March, down to under 500 now, about 485 or so, down around $10, $10, $12.
Yikes.
Ulta markets aren't good, and the option markets aren't good.
I mean, I was in there yesterday, so props to
always
them.
crowded.
Props to them for this new lip combo. I got like this new lip liner and like this new lip stain and the gloss, and I'm like, okay, Ulta. So I'm very satisfied with my purchases, but
Always crowded, always filled. If you're gonna go in there and make believe you're, want to find something good, you can find whatever you
The
want.
Karen basket, wasn't it, or was it the Becky basket? It was the Becky basket.
what are you talking about, girl?
Remember during COVID when we were in the recession?
Yes.
Everybody was looking at
Were we in a recession?
recession. Everything moves too fast now. The recessions are done in like 30 days. The Becky basket was going nuts to the upside, and everybody was saying during a recession, all the ladies like
Yeah, the
they
lipstick
spent-
index.
The lipstick index.
Yes, of course.
So it was like Lulu, Ulta, Victoria's Secret now going up.
Oh,
50%,
V-Sexy.
V-Sexy.
We're buying panties, y'all.
Yeah, so maybe we're back.
GameStop had earnings. I did not know GameStop had earnings.
It's so.
Well, the stock surged 12% after hours out on record Q1 earnings and a surprise $2 billion share buyback. The company kind of beleaguered in a mythical fight to acquire eBay. That's not going well with CEO Ryan Cohen. But Ryan Cohen's transformation of the company seems to be working at least on the revenue side of things. GameStop holds $9.7 billion in cash. And then again, they're going to do a $2 billion share buyback.
GameStop, $23, closed 21, up $2. I run, don't walk from trading it, but that's
Yeah.
just me.
Well, I couldn't not mention it.
I
right.
get
The
it.
buyback stuff also kind of scummy.
Markets are good in GameStop. $4 or $5, 4 or 5 cent wide.
Sometimes with these buybacks, it's a number that they can hit, that they can go up to.
Sure.
It's not like set in stone that they will do this, which is,
That's right.
I don't know, like it's kind of
It's like they have money aside to do it if they want to,
if
but
they
they
want
don't
to,
have to
but
do it.
they don't have to. Yeah, so it's like, you know.
In other news, President Trump has signed an AI executive order requiring voluntary 30-day pre-release government review of frontier models. He signed it in private yesterday. Again, it's an executive order, so you don't have to enforce it. And the rules are voluntary, but it marks a sea change for the president who campaigned on not regulating AI, but now he is. But this is kind of a toothless regulation. So I don't know what the point of this is because it's voluntary. So it's on the companies to submit their models to the government, but there's no repercussions if they don't.
Yeah, I think this will be a big thing over the next couple of years of just like the amount of money that is going towards this, the content, you know, because they're all scraping everything on the internet. Right?
Yeah.
So everything we've all created is getting fed into these AI models, and you're not getting anything back. So it'll be an interesting couple years.
Even if you didn't
Obviously,
want to be
job
scraped
market-
your information was scraped, no matter what you clicked, signed, or did.
Yeah. So this will be as my interview with Jem when he was talking about it, it's a populist movement. I agree with that here. It'll be interesting.
Let's see what happens. Hey, Broadcom on deck to report earnings, but Alphabet's relentless AI spending is giving new shine to Broadcom's stock. Broadcom's Q2 AI revenue guidance is around $10.7 billion. That's what they're implying for Q2 growth. Anthropic has ordered $21 billion worth of Broadcom TPUs, and Broadcom's AI revenue line of sight is around $100 billion.
AVGO been on a tear, up another $10 this morning. $4.91 pre-earnings announcement, which will be after the close today. I mean, AVGO has gone from $4.20 to $4.90, which only was preceded by its move from $3.20 to $4.20, which was in April.
Yeah, but Google's $190 billion CapEx directly benefits Broadcom. So.
For sure. I mean, I think it's, what, is it a $2 trillion company now? It's probably close.
It's probably close. I know it's over $1 trillion, which was a surprise, but yeah.
You get $1 trillion, I get $1 trillion.
Yeah, the numbers have gotten, they're
pretty close, if
enormous.
Yeah. Hey, what are you going to do? What's the expected move in there?
Ooh, AVGO's got a relatively good expected move. IB rank of 80. I don't know if $40 is enough, but it's $45 or so.
It's already up 10 this morning.
All these trades and all these stocks have gotten so big that it's really expensive to trade these in any other way.
This is like 10%, almost 10% move. That's on the higher end typically for any stock for earnings.
But you can't go in here and do like strangles or call ratio spread. I mean, you could, but it's too big. These things have gotten so big that putting on I have a butterfly on the upside around 500 for $200, $300. I put this on.
We've talked about this. The earnings plays, strangles, shorter dated, no bueno.
They've been death.
Yep.
Microsoft kicks off its Build 2026 with Surface RTX Spark Dev Box, and a Copilot super app for developers. Microsoft is having their developer conference, and a bunch of news came out yesterday. So basically, they're like, hey, we're going to build our own AI model, because obviously Microsoft was the first to invest in OpenAI, but now they're like, hey, we need our own model. And they're also going to work with NVIDIA and a dev box for a Surface RTX, something that's going to get unveiled. And OpenClaw, open source software that directs group of AI agents for everyday tasks, is gaining traction, and Microsoft's Azure AI is expanding with more foundation models.
Microsoft
down $2. Sell it while you can.
There was so much news yesterday, and it was still not enough.
Yeah, Microsoft gets no love. I don't know. I mean,
You're getting a GitHub update with like automatic coding and debugging.
Yeah.
Street doesn't care.
Yeah, I'm long it. We've been trading it pretty good. I got out of some of the diagonal spreads the other day. I put some on yesterday. I'm long it.
I mean, it's a pretty seismic announcement to me. They're like, hey, we're making this our own reasoning model. Crickets.
Yeah, it doesn't matter.
Doesn't matter. Streets don't care. Chat GPT, this is crazy. They hit 1 billion monthly active users in May. I'll say that again, 1 billion with a B. There are 2.5 prompts that are processed every single day, and 92% of the Fortune 500 companies report that they are using Chat GPT.
Caleb Williams is the Madden cover.
That's your breaking news?
I just saw that come
Oh,
across.
no.
No, I saw it a couple of days ago. I wasn't going to mention it.
Oh, no.
Yeah.
The Madden curse is.
He's on the New
kibosh.
Heights podcast today, though, so.
That's the kibosh.
good.
GPT, hard to borrow?
No, it's
No,
you
you
can't
can't.
trade
I know,
it. It
just teasing
just
you.
says
Just
GPT
teasing you.
in there. But 1 billion monthly users, that's bonkers.
Yeah, I'm actually surprised at that number.
Yeah.
That's a big.
It's outpacing
Now, you
Google
say-
Maps, TikTok, Instagram, and YouTube.
You say there's a paid format to this?
For Chat GPT, yes. What you're using is just you're doing a Google search, and that's kicking you into Google Gemini.
Yeah.
But Chat GPT is separate. You have to have a login for Chat GPT. And so we have an enterprise account. So I have an enterprise login for Chat GPT, but I also use Claude.
Yeah.
I don't know too many people who are paying for it except for the.
Well, our company pays for it.
That's what I'm
sweetie.
saying. The companies that want it. I mean, I don't know where they.
No, I know people that pay for it.
Do you?
pay for
I don't
it.
know where they're going to get the funding for this. They need a lot more of it. I don't know. Seems like a lofty amount of money.
Lumentum, Coherent, and other optical stocks keep rocketing. Coherent was up 16%, and Light crossed $1,000 per share. That's bonkers. Applied Optoelectrics is up 440% year to date, and Core hit its all-time high, hitting $422 per share.
Bottleneck.
Oh.
So
Where's the next bottleneck?
You're not kidding. Light's down about 20 some odd dollars. AAOI is only down around 2 or 3, but they're just off of their, like you mentioned already, right off or near their highs. Taking a little bit of a breather today. COHR down around $5, but again, huge day yesterday. It was COHR was $350 48 hours ago. It almost hit $450 yesterday, $100. So.
she's bonkers.
425. Yes, bonkers.
Yeah.
Do you trade these optical stocks at all, Nikki?
I don't think we've traded Light. I don't think I did. I've traded any of these. I mean, I know of them. I have not
Sure.
traded them. It's been really hard to trade these other than just very directional.
Gotcha.
I've been leaning more towards the SMH, AMDs.
Sure.
DRAM.
A little bit easier to trade. Even SMH has got wide margins.
The Googles of the world, we've been messing around in Marvell, Intel, stuff like that. I mean, I only got so much brain power.
Sure.
It's all being.
And so much capital.
Yeah. So,
Hey,
NVIDIA.
in other news, SpaceX starts their IPO today, but Morningstar came out with an announcement yesterday saying they value SpaceX at a mere $780 billion, less than half of the $1.75 trillion IPO target. Oh, girl, the drama.
Then don't buy it.
Yeah.
I mean, right?
Right,
That's
yeah.
I don't know. That's the whole point of market.
Morningstar analyst says we don't see Grok as one of the leading AI labs today, and the company has been significantly overvalued.
Fair enough. I don't think that. I don't know how you price these because they've never been traded before. So that's part of the allure of getting in, and part of the allure of
You
not
take
doing
that
it.
risk though, because Morningstar has all these. They have their own, mutual funds and whatnot.
Of course.
So
Of
do
course.
that. So
They're
are they?
talking their book a little bit too. Sure.
So do they say, "Oh yeah, we're not going to put it in our basket"? Is that what they do? Probably
Yeah,
not,
yeah.
because there's no there's
It's
no
too
upside.
big to fail. Like you have to have. They're too. They're
You have
too
to have
big.
it, and if it doubles or triples and you don't have it, it's worse than if you have it and everybody has it and it goes down to where you think it's going to go and gets cut in half. You're on the same plane as everybody else. That's why everybody's going to be buying this. They're going to have to.
SpaceX will debut on the NASDAQ June 12th. In other news, U.S. Rare Earth is investing $1.2 billion in a South Carolina magnet factory, targeting 10,000 tons per year. U.S. Rare Earth, part of the government portfolio.
We've traded these. It's silly season. Like MP is up $20 in a week.
That's
Yeah.
normal.
Bought it.
Yeah,
It was
it's not
great.
one of those. I mean, it's been a nice trading vehicle, MP, from the mid 50s to 70, but it hasn't gone from the mid 50s to 500 yet.
I don't know how you don't have some sort of long exposure to these. We've watched this over and over with Intel, with IBM. The president says buy it, you buy it.
Yeah, there you go.
Dell.
That's
I mean, you don't have to think too hard.
That's nice.
It's
Amazon down kind of a lot yesterday. They announced they're moving Prime Day to June from the 23rd to the 26th, the earliest ever, keeping it as a 4-day event, but they're trying to avoid the 4th of July holiday and like the end of the FIFA soccer thing. So they pushed up their Prime Day earlier. It was last held in June in 2021, and it returns to summer the first time since. What are you doing in Amazon?
I've got some long delta. I've been scalping out of shorter duration calls, so I have call diagonal spreads. I think Amazon is interesting here. I thought it was interesting higher too. So
Okay.
shame on me.
Shame on you is right. 255-ish, maybe down $1 or so, just off its highs at 270. Remember, this in April was a $200 stock, so even Amazon, one of the biggest stocks, is quite a bit.
Yeah.
Shopify is expanding their share buyback program. I know Nikki doesn't believe in share buybacks. No, by $3 billion. The total authorization now sits at $5 billion. Shop's buybacks begin June 8th. What are you doing, if anything, in Shop?
I actually closed out of a shop position. I had a crab trade. I think it was a what's your assumption / fast market trade.
Oh, okay.
Yeah, so took a couple dollars out of that. It was a good trade. And,
Hey.
I currently don't have a position on here. It's trading 115. Had a nice little rally up to like 125-ish, come off that in the last couple sessions.
Beautiful. Sitting there at 116, 117 right now, down maybe 50 cents or so. It seems like everything's down around 50 cents, but the NASDAQ's higher.
Yeah.
Small.
Congrats to Steph Curry, who signed a 10-year, $400 million deal with China's Li Ning, calling it the partnership of a lifetime. It's a shoe partnership. He was under a partnership with Under Armour for 13 years, but that 10-year deal at $400 million was actually so nice. Actually, I guess there were a couple of other Chinese companies that were vying for his attention, but he decided to go with Li Ning.
That's unbelievable.
So
A huge number.
that it blew my mind. I was like,
Unbelievable.
that's a bonkers number.
I mean, I don't know what his contract's like, but a lot of these guys make just as much, if not more money throughout their career. They make more money on these endorsements than they do on the sport they play.
Well, it can't be good for Nike. Not sure what Nike's doing this morning.
Yeah, I'm long Nike too.
Yeah,
I've been
sorry.
long Nike for a couple of months here with like a synthetic long stock play sitting at $43 and change. I'm long it right here, maybe a couple of pennies below where it's trading right now, $43.60. I bought it after it made that big drop from around 52 or 53 down to around 42 or 43 where it sits today and has sat for the last 2 months.
Sometimes if you work a job, you can get into some shenanigans on the job site. But if you do, it's probably best to film them. I don't know if the main boss was away when this happened or if he authorized this, but this is one of the funniest things I've ever seen. It's real. It's not AI. Watch this.
It is time.
Oh, that's good. That's pretty good.
Whoever's doing their socials, amazing
Is this for
job.
like a data center build out or something?
Yeah,
For John
right,
Deere.
right.
It's for John Deere and Cat.
I like it. I
Caterpillar.
like it.
No,
John Deere was up like $30 yesterday.
because of this video.
Probably.
That's all it took. That's all it took. John Deere trade up to $579. You're correct. Up around $30 or more, $40 or so. Down about $8 this morning, $571, but still lofty for John Deere. Good move out of there. Good move out of you, Vanetta. We're going to take a quick 90-second break and come back. We got more Tasty Live. Even the S&P's down 14. We got a little bit of a Tasty Extra. Talk about yesterday, confirm and send, a whole lot more. We'll be back in 90 seconds. Tasty Live. Bye for now.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions, Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
We are back, son. You know what that means. Time for a little more Tasty Live. But look back at yesterday. Go, June 2nd.
12 Central to answer your question. That's
12 Central. 12 Central for the patent day trading.
Yes.
So you might not be #1 if East Coast somebody does it at 12 Eastern, which is 11 Central. Ugh! See, this is why Trump wants to get rid of Central Daylight Savings Time so that you will really truly be first. You might not be first if you pull that lever at 12 Central.
If any of the jamokes at Schwab are doing a show at midnight in whatever time zone they're at, they can have the crown. I'm pretty sure I'm going to beat them.
What if it's Pacific?
Pacific.
You're almost a day away.
If they're doing it lunar clock time, I don't care. If they beat me to the punch, good for them. I'm pretty sure they're not.
Fair enough.
Let's see the index performance here.
June 2nd.
9 straight days.
9 straight days. I believe
it's a record. Ties the record.
10 I'm going to put the kibosh on it. Today we don't make a new record.
We're down 3 points at the
We're going to be down, period.
3.
Yep.
3 on the minis. That's a down day.
I said it yesterday. I'm going to say it today. We do not make a record. This record will not be broken. This is like Gretzky, even though it got broken.
Strong day across the board. I mean, we have single name equities going up 30, 40, 50, 100%.
Remember, nobody knows nothing,
days.
ladies and gentlemen. So just a guess. Go ahead.
So strong day in the markets across the board. When we look at the Mag 7, the Mag 7 have really not been the focus.
So magnificent.
We spent many years talking about how the market was so top heavy. Mag 7 are the biggest piece, blah, 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 blah. That's not the case anymore. Let's jump to the next one here and check out the Mag 7s. On the next slide. There we go. So you got Apple strong at $9 to the upside, something like that. It's crazy.
Yeah, the only stock I have a strangle in had to move up puts twice yesterday. Apple, I think, is maybe down $1 this morning, not even.
Google gave it up a little bit yesterday. It's actually lower today as well, 358. Pretty decent sized move from the highs. I mean, it was up at 400. So Google's this is a correction.
Yes, yeah.
It's not yet a bear market in Google.
Not yet.
It's a correction, 10% from highs. Microsoft as well has been just a complete dog. When we look at the sectors themselves, so it's the metals and mining stocks were having a big move yesterday. You had semiconductors up 4%. I mean, SMH, SOX, those have been just through the roof. It's been incredible to watch there. Energy was up a little bit on the move in oil, but that doesn't seem to matter anymore. You have oil up $2.50 here this morning. On the downside, you had biotech, healthcare. This tells you it's a pretty strong market here. Financials were up. Goldman Sachs at new highs. I'm sure they're going to make a pretty penny off of all these IPOs coming up. So definitely strong across the board. We look at the biggest gainers in the market here. You had HPE up on earnings. Stock was up like 30, 40% at one point, settled in at just 19% there. Coherence Light, GLW, Ciena, these are all in the optical space, optical, glass, fiber optics. 15% to the upside. Why not? You also had SMCI. You had some of the metal stuff in there. So FCX had a really strong day. We had some long delta there.
We did.
And we took off into that move. Alcoa is trading at like $90 right now. If you're looking at any of like these kind of metal mining, copper, aluminum type stocks, they've all gone absolutely bananas. You got AMAT in there too to round off the semiconductor just bonanza that it has been. To the downside, you got TTD, which I think I can crown the worst stock in the world.
To trade?
Have you? Well, no, just in general. Have you looked at that stock?
No, but I
take a look at that chart.
Yeah,
that is a chart of death.
Yeah.
Dude,
it almost looks like the Japanese yen.
That stock goes down every single day. Every single day. Intuit is on there. Then you had a bunch of the exchanges. You got SIBO on there. CME not on the list, but it was down significantly. You got some of the service stocks kind of taking
Service now, I put on a small trade on there for option trades today. So we'll see what goes on there. It looks unchanged this morning, maybe down 50 cents.
Yeah. Dell gave up a little bit, but I mean,
they're all off their lows for the day too, though. They all caught a little bit of a bid. I mean, ServiceNow, I know, just because I was trading it down 7.5% or so, it's only down 6%.
Yeah.
Still a big move.
When we get to the heat map here, again, what was my word? Do you remember?
Starts with a B.
You remember?
I can, but I'm going to say it like Yogi Berra, which you don't remember.
You're going to butcher it.
Yeah. Bifurcated.
See, you can teach old dogs new tricks.
I did good?
Yeah, you did good.
Oh, I win.
Let's look at the heat map here. So you can see tech obviously leading the way to the upside. Everything else pretty mixed here. Financials, very, very mixed. It's been all...
The bifurcation has moved from the right side of the screen to the middle side of the screen. Is middle side of the screen?
Yeah. Healthcare, communication services.
To the middle of the screen.
Big move to the downside. So
good job out of you. I want to take a quick 90-second break because my son told me that we have an option jive to change all option jives. We'll be back in 90 seconds. Let's Tasty Live.
It's a good one.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us. as we celebrate Trader Independence Day tasty style.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
Nicky, we are back, son. Even the S&Ps are down 17. NASDAQ almost went red for a second.
I think it was red for a second.
It was red for a second. Now back up 6. Russell down 19. Dow down 224. Volatility for the first time I can remember up 20 cents prior to the market opening.
Yeah.
Bonds down 13. So you got volatility up a little bit. You got bonds down 13. You got oil percolating to the upside, although it is about $1 off its highs of 97. It's 96 and change. Gold down just about $30. On the earnings front, you have PANW down around $10 or so.
Yeah.
$10, $12, maybe on the bid or offer, depending on what you're looking at. I think Medtronics had earnings too, right? MDT, that was up earlier. It still is up around $5. You can see here it hasn't had an uptick. It'll be the first one. I don't know. I'm saying there's no record set today. Well, we will not have 10 up days. Ooh. That's it. I said it.
Setting the record would set up nicely for a tweet storm. 10 straight up days. The Trump economy.
I did it again.
I did it again.
Even though it's the first time.
Take a look at your 401ks today.
It's so
unbelievable.
Good. It really is so stupid.
Wednesday, June 3rd. Let's do this. Confirm and send. We skipped the first one, I think. Do you track your return on investment like ROI?
I do not. I mean, I know at the end of the year how well I did, but I don't go throughout the year and say I'm up 2%, I'm up 20% kind of thing. No, I just hopefully just chug along.
Yeah, it's kind of a hard one. I mean, we look at the P&L numbers, but when you're trading in a margin account, there's no, you don't buy something for $100 and sell it for $150 and have a 50% return. There's leverage to your positions. And so you kind of have to look at it on a more like broad kind of view, because your positions are not, you're using so much more capital than you actually have.
Yeah.
And you're not allocating all of your capital all at once. Like you might use 50 grand of 100 in positions, but you're leveraged to 4 or 5x. So you're not.
People do look at this because I get the emails.
Yeah.
I traded something for $1. I made 50 cents on it. I made 50% of what I could make. Like they do look at it, and my return on capital.
But do you measure that on the risk? Do you measure that on the buying power?
Do you measure that on total account size?
Yeah,
no,
there's 100 ways to look at it, but
I think you have to measure it by strategy. Like if you collect 50%, I would of possible credit on something that you're selling premium on, look at that as a home run. Like that's.
But how do you measure that ROI?
I don't measure it on ROI.
You can't, and it's too granular. If you're doing this, like we're gonna make 10,000 trades this year.
Yeah.
If I'm sitting here looking at my ROI on each trade, it would take me all year.
Some of the best trades will have the lowest ROI too.
Yeah.
I mean, we could make the most amount of money using more money.
Yeah. So it's just a tough.
P&L's.
I mean, you got to kind of.
I look at P&L by the end.
Yeah. Yes.
Yep.
Next one, please.
I'm long some stock with short calls against it. Covered call. The stock is now above the short strike. Good on you. And I'm worried about losing the stock. Is there anything I can do to keep the stock?
So it's a high class problem, of course.
Stock went higher, was a bullish strategy.
Yeah.
You wanted it. Maybe you didn't maximize your return, but that's so be it.
That's always the problem. That's the problem that is being written in here.
Right, but you don't get the email when it falls in between there and you make an extra
or if it goes
on
down
a $3 move
and you hedge it
or you
$4 or
save
$5.
it. Yeah, right. You don't lose anything.
It's only on the upside because you're missing out, which I get. But that's there's always a give me a gotcha. You can look to roll it up and out. So if you're long the stock, you're short the 100 strike call. The stock is at 110, and you can roll up and out to the next expiration, 45 days out, and do that for $1 credit, and roll to the 105 strike. That gives you $6 of potential value to capture. If you were to roll it to the 110 strike and you do it for a $2 debit, you have $8 of potential value to capture because you're moving your intrinsic value, intrinsic versus extrinsic value. So that is a way that you can continue with the position. That said, it adds risk because that roll up, you're giving up that intrinsic value to the downside. So if the stock drops back to 100, you don't have that same sort of hedge on. So again, there's always going to be a give me and a gotcha.
Yep. Next one, please.
The market breadth of late has been pretty bad. At the same time, because the indices are moving higher, volatility is low. Is this an environment where you look at long volatility positions in case the market pulls back?
I mean, we have adjusted our trading for what's gone on in the market over the last year or more to take advantage of less naked short premium, your diagonal spreads that you've done, some broken wing butterflies that we've looked at.
More directional,
but still with short premium component to it. So I would say, we've kind of ebb and flow to what's going on in the market. 100%. We've always talked about you can't have one strategy in your portfolio and think that you're going to be successful throughout time.
Right now, markets are at highs, volatility is at lows. The put skew is non-existent in most regards. I mean, it's very, very low. Call volumes are off the charts. Put call ratios are at lowest it's ever been. I mean, everybody's just YOLOing calls right now. So from a perspective of okay, am I going to fade the public? It probably makes sense to put on some long volatility, big wide butterflies, put diagonal spreads. I did some yesterday in the Qs and SPY. I hope I'm wrong.
Yeah.
But they're cheap right now. Remember we were looking at the SPY one that was 40 points wide?
Yeah.
It was August, July. It was 40 points wide for $12. I mean, that sort of thing, if it works, you're going to be happy that you had it on.
That's correct.
And it's cheap to put on right now.
That's correct.
Not going to hurt you over the next month if we grind another 200 points higher. You're not even going to think about it.
That's correct.
Last one.
I have a smaller account heading into today. My day trade counter is at 3. If I do a day trade today, it'll put me in patent day trading, but will that just go away tomorrow?
This is not financial advice. I am not a licensed financial advisor.
You should email support at tastytrade.com for a definitive answer.
But yes, it does go away tomorrow. So theoretically, you can do whatever you want today.
That would be my answer
as long as
you've sent an email to support at tastytrade.com and they tell you the same thing.
Yeah. So
let's take a quick 90-second break and come back. We've got more Tasty Live after this. What comes up next, son?
We got an option jive. Charm.
You're going to be very charming after this. We'll be back in 90 seconds with Tasty Live.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
It's option jive. Nikki, we are back, son. You know what that means. Time for a little bit more Tasty Live. We've got it going on with this option jive. Go.
Charm School, baby.
Charm School. Do you ever think
you don't need Charm School because
you
you're
going
so
to Charm
charming.
School? I'm too old for Charm School. I mean, you know.
Yeah.
You could still be molded.
No, you know, there's once you get like past 30, you're not as charming anymore. Like the people look at you as like an equal old person, you know? Like you're just like your own status. Like E and Gus, those are charming guys.
Yes.
Young guys.
I'll give you that.
They're charming. You give them the benefit of the doubt, you know.
They know not what they've done. You should know better.
I'm like on your level now. Like I'm just
so sad.
Yeah, it's sad.
So sad. I didn't think you'd get down here, but welcome.
Yeah. Once you get past that 30 mark, that's when the world changes.
Really, it was 50 for me. So when I needed eyeglasses.
Because you're a pompous.
Wow, 50. I never thought my son would speak to me like this, but all right. Go ahead. Charm School. Somebody here still needs to go.
Yeah. Charm School. So this actually, this is a good one. So stay tuned for this one. So option pricing. It's a little confusing. The Black-Scholes model alone has a ton of moving parts. There's a lot of things that are very intricate, a lot of things that are immeasurable, right? I mean, like there are things that change all the time. People get caught up in, you know, how does this exact option, why is this changing like this? There's a lot of confusion there. If you strip it all back, every option price is really just two things, which is intrinsic and extrinsic value. Those are the two things we focus on when option trading. Everything else, you know, how the sausage gets made, you can, you know, the Black-Scholes model, we've done many studies on it. You can watch many of those. But when it comes down to trading day to day and the value change of options, it's all about intrinsic and extrinsic value. For us as premium sellers, extrinsic value is exactly what we're trading. You know, it's the whole reason why we are trading is extrinsic value, trying to capture extrinsic value along with intrinsic value on some of these trades. But we're going to talk a little bit about intrinsic and extrinsic value, how those will change with both direction and time in the options. So when you think about extrinsic value is always going to be the highest with the at the money strike. So the straddle is always going to have the most extrinsic value. When you go out of the money or in the money, if you are like selling in the money puts, it's the same as being long the stock and short the out of the money call. So in the money and out of the money options, put call parity are the same. So selling an in the money put, same as being long the stock, short the call. In the money call, you're short the stock, short the put. At the money options cling to their extrinsic value much longer than in the money or out of the money options. So when you look at premium, not only is the at the money strike going to be the highest premium, but it's going to hold its premium the longest. The curve,
which is an interesting point to make, a good one actually about at the money options.
For sure, because most people think about extrinsic value and selling premium as I want the most. Mm-hmm. I want that number to be as big as possible. That is not that's not the only thing that you should be thinking about. You should be thinking about how fast X amount of extrinsic value comes out of that position as well. Because the same, you would think if you sold something for $10 to make $1 on it, it would be quicker than if you sold something for $2 and you want to make $1. That's not really the case because of the way the decay curve acts. The distribution of extrinsic value, it stays the highest at the money. Those out of the money options come in very quickly. That's the moneyness of the options. It's the amount of change in extrinsic value those options experience, and that comes via time, which we know passes, and also changes in your delta exposure. The delta of your at the money options are always going to be 50. Your 20 delta calls and puts after a couple week or 2 weeks can be 10 deltas or 5 deltas, depending on various other aspects like volatility and price change, all those things. But those at the money options are always going to be 50.
Absolutely.
So when we talk about charm, which is a measure of delta in time, it measures how fast delta and therefore extrinsic value changes with the passage of time. So it tells you like, okay, 1 day passes, how much is this delta going to move? Gamma is going to be the rate of change of an option's delta via movements in the stock itself. Charm is kind of like a delta, or is kind of like a gamma, but relative to time. So in other words, how much your delta shifts just from time passing. So again, when you think about gamma and time, that's another metric that we look at, specifically more towards those shorter dated trades, like your SPX trades, stuff that's really short term, where your delta moves very quickly based on the movements in the stock. Charm is relative to time, so how much those options move delta-wise via time. So out of the money and because of put call parity, in the money strikes have higher charm. Your delta changes rapidly as time passes. You think of something like an earnings trade. You sell a strangle, a 20 delta strangle. The next day, if the stock doesn't move, those options delta can go to 0.
Right. Yeah.
The at the money strikes are still going to be 50. And so when you think about out of the money options, they're going to have a lot higher charm. The delta changes rapidly as time passes. Extrinsic value from a percentage basis is going to move much quicker. So getting 50% of the max profit on a out of the money strangle is going to come much quicker than an at the money straddle. It's not going to be the same amount of value because the at the money straddle is going to be a lot meatier from an extrinsic value standpoint, but from a percentage standpoint, it's going to come in quicker. It's harder to manage once the trade goes against you. So when you have out of the money options, your delta gets heavier with movements in the stock. The straddle doesn't move as much because those are starting as heavier delta. And so when you think about premium, that's the way you should look at it. For at the money strikes, it's going to have lower charm. Delta doesn't move. So if you sell a straddle and the stock goes up a couple dollars either way or down a couple dollars, your position is not going to change delta wise. You sell a 20 delta strangle and the stock goes down a couple dollars, you're going to go from a 0 delta to a 10 delta. Whereas your straddle might go from 0 delta to a 2 delta. That's the difference in your delta exposure. Extrinsic value is going to be very sticky, so it declines more slowly. It doesn't mean that it's not going to be more profitable from an actual value perspective because you are collecting more credit. You have more time to manage at the money strikes, adjust, or close for profits just because there's a lot more premium there. But overall, your straddles are a lot stickier than your strangles. You don't get the same churn out of those positions as you do with out of the money strangles. And when we look at this next graph, it's going to kind of describe extrinsic value and the moneyness of the options, how much those options change. Out of the money options are going to have much faster extrinsic value decay relative to the extrinsic value that's there. That $2 option is going to go to $1 a lot quicker than the $10 at the money straddle goes to $9. It's going to be a lot quicker. The amount of value that you can capture, though, is a lot less. So that is the trade-off here. When you're talking about moneyness and extrinsic value, you're going to have a lot higher extrinsic value at the money, but a lot less moneyness. It doesn't move as quick as the out of the money options, which are going to have a lot less extrinsic value, but a lot more moneyness.
Yeah, you explained that out of the money, in the money from that little slide much better than I could have. So great job out of you.
Thank you.
Very nice.
So talking about extrinsic value and the stickiness and how it shows up in your P&L, these are things, again, a lot of times I want to get my theta decay as high as possible. I want the extrinsic value as high as possible. That's not always the best case. So closing a strangle early is scenario A we have here. Out of the money extrinsic value, it comes in much quicker at 50% of the max profit. The residual premium is small. You don't have risk of assignment or any of the other issues that come with at the money option. Closing early locks in that value, removes all the gamma risk. It also allows you to churn that position into a new position, a higher volatility position, a position that has more potential value relative to something that's at the money. Scenario B, rolling a tested strangle. So when price converges towards a short out of the money strike, charm is going to accelerate. So your position is going to change a lot quicker on a strangle versus a straddle. It's one of those outcomes that's obviously not ideal. You want to be in the first scenario. In scenario C is managing a straddle at 25% of the profit. So at the money, extrinsic value is sticky. It hangs around much longer. Managing quicker on at the money premium is how you manage the lesser moneyness of that position, because there's so much more extrinsic value. So this is why we manage those at the money positions a lot quicker. Why we target a higher value on the out of the money positions is because of the change in the values. And you'll see it here on this next chart. So when we talk about theta decay and the value decay by days till expiration, theta decay is not linear, so it's not a straight line. There's a curve to it, and that we've identified that a million times as like around that 45-day time frame is kind of like the peak where decay starts to accelerate. You go further out in time, and that decay is very, very slow and more linear. But when you look at this chart, it's an example of a straddle versus an out of the money strangle, and you're looking at the percentage of extrinsic value that remains, and you'll see that the extrinsic value slopes very, very quickly for those out of the money options. And that's because of that curve. Extrinsic value stays a lot higher, a lot longer for those at the money strikes, and so at the money premium is higher and stickier at every day till expiration bucket for those straddles versus those strangles. So the strangles are going to decay a lot quicker.
Beautiful.
So higher implied volatility directly inflates extrinsic value, which amplifies the stickiness of this position. So when you have higher implied volatility, you're going to have higher extrinsic value across all strikes. So the at the money, if you're looking to do at the money positions, the highest volatility would be the most advantageous. It's also the most risky, obviously. But from an extrinsic value standpoint, you're really playing the vol change for a straddle versus a strangle is playing for time, non-movement in the stock. That's really like if you're really playing vol, you go to the straddle.
Absolutely.
And those are just like a couple of our, targets here. IVR over 50, implied volatility crush after earnings is another, huge aspect here. Low IV, you're obviously not looking for these short premium positions because that's one of and even more so, if you're in low IV, I'd be less likely to do the straddle. I'd lean toward the strangle or defining the risk, turn it into an iron condor, et cetera. So when we talk about the stickiness of these trade strategies, here's just a list of a lot of our key trades here, and just giving you an idea of the extrinsic value, the stickiness of that extrinsic value, the best case for entry of those trades, and then what we look to manage them. And you'll see here, the stuff that has more extrinsic value and has more sticky extrinsic value, your short straddles, your tighter strangles, your iron flies, your tighter iron condors, your butterflies, stuff like that, you're targeting a lot lower profit potential than you are with stuff that's going to be on the tail end of the distribution, that's going to decay a lot quicker, that's going to have a lot more moneyness to it versus that at the money option that, is going to hold its value. That's going to be a lot more sticky.
Good. I love the little graphic there too, the way you have it all set up there. Very, very cool.
So a couple takeaways for you. Extrinsic value, obviously, is what we're targeting here. It's important to understand it, how it's going to change with time, with changes in the stock price, with gamma exposure, et cetera. All those things are important. At the money strikes will have the highest extrinsic value and the most stickiness, which means they have the lowest charm. And straddles are a prime example of that. Out of the money strikes, like strangles, will have a lower, faster moving extrinsic value. So we like to capture profits on those at 50% versus those straddles that we do at 25%. Charm is going to accelerate as you get closer to expiration, especially for those out of the money / in the money strikes. So this is why we are looking to roll those positions as you get closer to expiration, somewhere around that 21-day window. These things start to move a lot quicker for and against you. That's always going to be the trade-off. So higher IV inflates extrinsic value and amplifies the stickiness, and we're calling this an edge, meaning that if something gets really, really high implied volatility, going to the at-the-money straddle is probably the way to go. For something that's more normal high volatility, you go to the strangle. And in general, we're mostly doing strangles just because the stickiness of the position is something I'm trying to avoid. I'm trying to get out of the position, get to something else that has more opportunity, more
trying to move on, put my money someplace else,
book my winners, etc. So when you look at positions, 50% on strangles, 25% for straddles, managing early, it's going to avoid some of the issues that you have as you get closer to expiration.
Good job out of you. You did not disappoint. That option jive was very good. And now we're going to have the opening, which looks okay. Even the S&P's down 16.
Why wouldn't it?
Yeah, why wouldn't it? Right. NASDAQ up 38. Russell's down 21. Dow's down 260. Actually, the Russell's weaker than the Dow. The Russell and the Dow are the two weakest, and even the S&P's and the NASDAQ are a little bit of a mixed bag of tricks. We take a quick 90-second break, come back. All that means nothing because in 3 minutes, we got the opening bell. Back in 90 seconds, it's Tasty Live.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80+ Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Pay for back testing? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
Nicky, we are back, son. You know what that means. Time for a little bit more Tasty Live. Even the S&P's down 16. NASDAQ up 30.
They're crashing.
Crashing.
This is a crash. I don't know how will I ever financially recover from this. As what was that guy? What was that? Tiger King? Was it?
Tiger King was the.
Yeah, that. No,
allowed to say hillbilly. I don't think it was a hillbilly, but go ahead.
Was it Tiger? Yeah, it was Tiger King.
Yeah.
How will I ever financially recover from this?
Well, we'll see. We'll see.
Yeah, whoa. Look at the soundboard. We got
nice one. Nice one.
That was good.
Dow 300. Those are the two leaders in the clubhouse to the downside, Dow and the Russell on a percentage basis. You got 5 seconds before the market opens here, so I'm not going to tell you that Intel is up $10 because it's only up $9.80. Let's see what else is moving the market here. Before we look at across the board, you've got Bitcoin 67,000 after going under 66,000, 65.5 yesterday. Ethereum down more this morning on a percentage basis, 2%, $40, although it is off of its lows. Oil back to 95. I say back to 95 because it was up to 97, down to under 94, sitting under 95, 94.87, up $1.15. Gold down $40, about $10 or so off of its lows. Silver down a full $1 and change. That's a 1.5% move to the downside in silver. Nat gas, which was about 8 cents higher, is unchanged at 3.17 or so. Let's take a look at what's moving the market. I'm going to change this from all earnings, although you do have all earnings on here. And you can go down to BAT. Go ahead, find it. I'm in the wrong spot. I'm so sorry. There you go. High option volume list and change it to high to low or low to high. We'll go what are the buckers first or the downside because we don't see that. Palo Alto Networks for earnings down around $13, $4 off its lows, $4 off of its highs for the day. IBM down 13. Does Trump know about this? 315 earnings are until July. Crowd, CRWD, which has earnings today after the close, down $11. Oracle down $7. Tesla down around $4. Adobe down around $4. And the NASDAQ is catching a bid up 75. Surprising. OKLO down $4. Qualcomm down $2 and change. Let's see what's on the upside here. SanDisk, which was lower yesterday, up by 34 today. Marvell never goes lower. It's up $25. AMD up 15. Meta, which doesn't usually catch a bid, up around $10.
Wow.
Yeah. Intel up around 8,000. AVGO earnings coming out after the close up around $6 now. Go.
I got some short delta in Snowflake. I did a put diagonal that I closed out for a couple $100.
Oh, I just had a friend of mine call me Snowflake. What do we got going on? Snow.
I'm working one in Datadog too.
Snow 254 down around $6. Good Ivy rank of 63 in there. How are the markets in July? Yeah,
they're not great, but I was just looking at. I mean, these things have just gone straight up.
Cray.
It's been,
yeah, I can see that.
What else here? My Pan W position hasn't really moved all that much. Now we're moving a little bit.
Oh.
Maybe I'll put in a.
Look at you.
Let's see if we can.
Moving.
It's moving.
It's moving.
I'm just putting orders. Some of these, I mean, like Pan W markets are $5 wide.
Yeah, you've got to be.
So I'm just putting in orders, and we'll see if we get hit on those. I did the same thing in Datadog. Markets stink there. Markets stink pretty much everywhere. I think the numbers have gotten so big and just the amount of movement you're getting day to day. If I was a market maker, I'd be making them $10 wide.
Sure.
So it's not a shock.
Sure. Your dad was a market maker, and he made them well over $10 wide. Believe me, you'll make them as wide as you can. Although we had rules. You know, if an option was over $3, Frankie will confirm this. I'm a little old with my knowledge. It could only be $1 wide unless they the floor officials said you can go to triple wide, and then they could be $2-3.
Oh, there's my Pan W.
Oh, look at you.
Put it in at $10. So I did that. It was a put diagonal I did at like 7. Oh, there's Datadog.
You're getting dings all over the place here.
So Pan W I did yesterday for earnings, a put diagonal 794. I just closed it at $10. And the Datadog, another one that I did with Snowflake, both these stocks have gone parabolic. You figure someday there's a downside, right?
You would think.
Finally got it. So I did that at 1371, closed it at 1775.
Sweet.
And same thing in Snowflake. And then I closed out, I sold some Intel calls into the puts into the downside move. that we had, the one little dip that we had.
That one
So
little dip.
I sold those.
You caught it?
I need a lot lower in Intel, but that was a couple dollars. I made like $1 on each of those, so that was a nice little scoopy there.
Very nice.
I actually have some calls that I can sell now. I mean, I've been putting on these call diagonal spreads, which I don't want to
NASDAQ
work.
down 3, just up 80. Go ahead. Sorry.
I don't want them to work, but
they are working.
Yeah. So, and I've been scalping out of the calls too as a way to. I've been basically selling strangles around the long calls that I have in July, and then the short delta that I have in the stock. And so I am laying out those calls again just now. So I sold some of those at 230.39 at the 140 strike.
Good job out of you. Right?
Yeah.
Like it. Even the S&P down 16, NASDAQ down 27, volatility only up 14 cents. Now it was up 20 cents just a moment ago. I don't know what it means. Just reporting. Yes.
What do we have here? I have a lot of positions. I took off a handful of positions. Like we had a KWeb long stock position. KWeb was up like $3 yesterday. The China stocks had their 1-day bid. And I took that off and I was like so happy. I was like, oh God, I can't wait to remove this from my line of sight.
I could understand that too, to be honest with you. Volatility up 20 cents. Bonds are down 15. Let's take a look across the board here. Our upside has gotten less upsidey with Caterpillar up 16. Marvell up 16, but it's about $18 off of its highs. Meta still near its highs.
Are we finally getting a down day?
I think you do. I said SanDisk, which was there you go. SanDisk, which was trading up to 1763, is 1730. Even the S&P's down 19, making new lows.
I also did like a little crab trade in CrowdStrike on the downside, but these markets are horrific as well, and I don't know if I want this stock, it probably goes down tomorrow, similar to Pan W, just because it's had just such an incredible run. But I'm going to try and take the money and run on this, free up some capital too.
Okay. Take the money.
I have no idea where
nothing wrong with that.
Build here. 32. I worked that down from 36. So I did a 1x2, July, June. I took like $360 out of that.
Good job out of you. What can't you do?
Well, I mean, I have some short delta that hurts. That does not feel good right now. So
understood.
There are things that I
understood.
I do not like. I mean, these are nice.
And it's not like the market; it's individual stocks, right?
Yeah.
Yeah, I've got that too. Apple up another $1.
AVGO down now. Wow.
AVGO down on the day. Nvidia down 2 or 3. SMH up $2 doesn't tell you the whole story there. SMH trade up to 642, about $8 higher than that.
You got volatility going nowhere. This is another buy the dip. It's unbelievable. I hate to say it, but
well, that would be count. I said we're going to have our first down day. I said it.
Yeah, we might. We're going to be down. It's not going to break the record. We're going to be down 5.
Yeah, right.
We're going to be down 5 at the close. You know, oil is
up $1.
Is off $1 from the highs. Like this is nothing. It doesn't.
NASDAQ moves around $50
matters.
at a point. It was just down 50. It's down 9.
No, you got to have it.
Got to have it.
All the normies are waking up. They're ready to buy the dip.
They are ready. All the normies.
Yeah. All my friends are like, I'm up $500 on Micron. And they're going to buy more today.
That.
Why wouldn't you buy more today? And is Micron down today? Probably not. Oh, it's down $5. Why wouldn't you buy it?
Down $5.
Stock goes up every day.
Yes.
Why wouldn't you buy it?
Why not? Right? Why not?
Yeah.
All right, my friend.
Is there anything new? Well,
Palantir down $5 or $6. Microsoft down $5. Some big names here to the downside. Tesla down $3 or so.
Yeah.
High flyers are a sea of red. Apple still up $1 because I have short delta in there now.
We do have What's Your Assumption?
We do, where we're going to take a look at our viewers. Here's NASDAQ up 8 or 9. Kudos to you.
What else?
So far, so good?
Yeah.
You ready to take...
SIBO still up?
Say again?
Yeah. I bought the dip for the boys. SIBO and CME.
CME trading at up $2.37.
SIBO up 11 though.
What is it? SIBO?
Yeah.
CBOE. Yeah, you are. They have run in conjunction with each other. NASDAQ up 8. The S&P's down 20. Really kind of interesting market here with volatility.
The nothing day. We hit that SPX butterfly yesterday too.
Which is a good one. We should look at an SPX.
I closed that. I closed it early and I should have held it because I think SPX settled right at like 10 over, right? Well,
SPX, let's take a look at it. SPX is up 18, down $18.
76.09. Our butterfly was 7,600, 76.10.
That was right.
I closed it at $4 or $4 and change. I took like $4 in profit.
That's good.
It would have been it closed at 70.
Just about as good as you could get.
Yeah, 22 cents off as good as you could get.
Right, 22 cents off a pin.
Which is just insane. Are we going to do that again right now?
We could try, or you can do a regular iron condor. It's completely up to you.
I know we'll probably get one for the...
What's your assumption? You want to wait then and see what they say?
Sure.
Let's take a quick 90-second break and come back. Even the S&P is trading near the lows, down 21. NASDAQ's flirting with unchanged. Russell down 32. That's your lead of the clubhouse at the downside, full 1% down. And the Dow down 250, volatility up by 20 cents. Bonds are down 15. Oil up $1, hasn't moved. Gold down 47. Silver down $1.30. Both got a little bit weaker. We'll take a quick 90-second break. We got more Tasty Live after this.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
We wanted to call in because recently, some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted, and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Looking for market insights you can count on? Check out Option Trades Today, your go-to podcast for timely trading analysis and strategies. New episodes drop every Tuesday and Thursday at noon. Available on YouTube, Tasty Live, or wherever you listen to podcasts. Don't miss out on the trades that matter. Stick with the bat, stay ahead of the market. Watch Option Trades Today.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Nicky, we are back, son. You know what that means. Time for a little bit more. Look at you, another ding. This time in Roblox.
Taking off. I haven't done a lot of. I did a lot of opening trades yesterday.
You did. We started out closing a lot of things. Even the S&P's down 30, by the way, as foretold. Nasdaq down 80, as foretold. Go ahead.
Now I'm just taking off like some of my how I've been trading these diagonal spreads is because volatility is just so high in the front. And you're getting these moves. The realized volatility through the charts. The VIX at 16, while single name equities are moving 15 to 25% every single day. Is insane. And so I've been using these diagonal spreads in both directions as just ways to not have the naked risk, obviously, but to trade around that long option as just kind of like my static delta. So when a stock goes down and I'm long a call diagonal spread, long delta, and the stock goes down, that call that you sell at $3, $4 that goes to $1.60 like I did in Microsoft just now, I scalp out of it because tomorrow Microsoft could be up 20. Like that's been the movement in the market. And these trades, these diagonal spreads, your risk is defined at what you put in. When you buy it for $12, you buy $1 back on the call. You're in it for $13. The stock goes down $50 and you're out $13, and you're fine and you move on. So the stock goes up 20, you sell out that call for $5 again. There's just a lot of moneyness.
A lot of moneyness. There you go.
The moneyness and the charm has been the key to this market.
Absolutely.
Because there's been a lot of change in those out of the money options, a lot of volatility.
Good job out of you.
Okay. Thank you.
No problem.
Good job out of you.
Good job
as always.
What do we got coming up next?
We got fat. What's your assumption?
Let's do it. Even the S&P down 30. Good. Nasdaq down 135.
Let's do it.
I'm ready.
Bonds down. Shocking.
Bonds down. Shocking, he says.
Okay, first one, Nike, bullish, July. Nike has 100% IVR and the stock price is low. Selling naked puts is the move for me. So I actually did, I think last time we had we did like a poor man's covered call type trade. So I was long the 35 in July and short the 42.5. I closed that yesterday, or what is 2 days ago?
That's correct.
Monday. So we took some profits on that. Thank you, Eli. Back to the well, though.
Back to the well we go.
What does a new subscriber do here?
What does a new subscriber do here? What do you think?
You sell like the 40 puts?
You certainly could.
There we go.
That was easy.
All right.
You'll push these through on the... Okay.
On our... E-minis down.
The S&P's down 39.
And
Ruh-roh.
SMH is down 4. It's crazy. Like the stuff that's moving right now, like you look at some of the single names, ARM, and we were talking about this on the break. ARM got as high as 410. It's at 375. So we've had, let's call it a $35 intraday range, 10% move. I mean, those are just huge numbers. I think that's what you're going to see. I mean, the market's down 0.5%. It's a paper cut. You know, you look for the 401k boys, you look at it and you say, oh, it was a nothing day. For the trader boys, this is a big move. It's a painful one.
This is as good as it gets.
YOLOing.
Right.
All right, so I'm in. Nike, I sold the 40 strikes puts in July. I like it.
Beautiful.
Stock
Nasdaq
is
down 200.
Dog.
AVGO earnings play. What do you think about that?
What's the upside safe play after earnings? Almost every AI-related sector is ripping. You're right. They've gone absolutely parabolic. I put on a butterfly yesterday. And just to give you an idea, so I did the 500, 525, 550. I put it on for 282 yesterday. It's marked at like 210. So you're out 75 cents. The stock is down $6 or $7 today. It was higher That's the sort of trade that I am interested in these stocks. I don't want a ton of risk. I took off that CrowdStrike position, another perfect example. I just don't want a ton of risk on these stocks. Play them as a lotto ticket. But I think a butterfly is probably the way to go, Reed. You want to add?
Sure. No, I think
let's do it. Let's add into the down move. We're going to do this 25 points wide. I'm going to put the shorts right at the expected move. We'll do like the 490, 515, 540, and it trades at 289. It's exact, or might be a little bit. I'm going to try this lower and see if we get filled here. But same setup as yesterday, just closer because the stock is down a handful. All right.
That was easy.
So I did that at 275.
Right.
These trades,
defined risk.
If you are looking at these trades, it's all or nothing.
Yes.
We open, I shouldn't say it's all or nothing. If the stock is unchanged, it probably trades at $1.50. Whatever that long option's extrinsic value is going to be. And something like this, I'm not discounting the upside ever, so I don't think there's going to be you're going to hold this until Friday. But if the stock goes down 20, you're dead. It's done. It's over.
That's right. I have it up here. You did it for 275 debit. The lower you pay for it, the better off you are. Markets are quite wide in here, so please work the mid price as best you can here. You'll notice here that the stock is trading closer to 275. There's an upside play here on a $41. Remember, we said $44 expected move earlier.
Yeah.
Beautiful.
Cool. All right.
Defined risk trade.
So we're in.
We are in.
We are in. SPX neutral 0D 0 DTE neutral to slightly bearish, and I pushed the short put further away. Okay, Mike, I like it. The market feels heavier after this massive rally. I feel you.
I feel you too.
I think I'm going to go with a butterfly again.
Okay.
I think we can do this kind of back. Similar to what I like doing these. This is not,
push that AVGO trade through?
I will put it through as soon as I get this one on.
Sorry, thank you. NASDAQ was just down 200, it's down 130, volatility up 24 cents.
So 0 day is not my bread and butter.
It has not been. But
and so,
as foretold, you said we would get one.
I like these butterflies that you do for basically nothing. They have $500 to $1,000 of risk if you get
as opposed to
skip strike.
$1,600 on an iron condor. So a little bit less risk.
Yeah, and you only have risk on one side. But usually when we do these butterflies, 10 by 20, 15 by 30, it's a skip strike butterfly.
Mm-hmm.
These, I like to move the long strike in, do this for a tiny little debit, and it gives you a lottery ticket. You have some risk here.
Upside lottery ticket.
Tail risk to the upside. Mm-hmm. If you get a big move, way well past the expected move. But I think it makes more sense from my perspective here. I've got the short delta. We move lower. I'm great. Doesn't seem like that's going to happen now that E-minis are only down 36. NASDAQ down 100.
Okie dokie. Unbelievable how it comes right back. I mean, NASDAQ's moving 100 points at a clip sometimes.
I mean,
it really is crazy.
Watched it every day for 60 days now. It's like this. So what
changes?
When is this different?
Right.
So we're in. SPX, we did it. Neutral.
Good.
Neutral. Go. We have no risk to the downside. Playing a lottery ticket on the upside.
Lottery ticket.
Next one.
Next one is in IBM, which is down today. NASDAQ down 90 now.
Another one where you look at it and you're like,
down $20. $308. You would think that the world was imploding here.
Yeah, you'd think that things would look a lot worse.
But you have to look at where they've come from, right? That's why it's context on where the stock has been.
Yeah, we actually hit IBM not once but twice with diagonal spreads. We had one into the initial move, which was pure luck, and then I took that off, put on a new one, and hit that one into the second day move where it was up like another 30 points or whatever silly number. IBM options are carrying rich premiums now. I'd rather sell some and wait for the IV crush, maybe with an iron condor. Matt in Atlanta.
What do you think about this?
I don't hate this idea.
Okay. Okay. Neutral in IBM, even though it's down 7%. I'm just kidding. That doesn't tell you the whole story. Take a look at this chart here after trading all the way up to 330, taking a breather here to 305. But remember, it was just let's just say 205 2 weeks ago or less.
What do you do? Like maybe a 20-point wide?
Hmm.
Let's see. Yeah, we can do like a 20-point wide iron condor, 275. The markets are not great here. They've actually gotten better, shockingly. But they're like 70, 80 cents wide. I'm going to do a 20-point wide iron condor here. We'll do...
Okay. I don't have a problem with that.
350 on the upside, which is above the high. I think it got to 335-ish in the overnight session that one day.
Okay.
I'll trade it right around 1/3 the width of strikes here, but the markets are a little wide. And with 4 options, it's going to further... okay, 730, so I'm in. So I did the 350, 370, 275, 255 iron condor, 20 points wide for $7.30. It's about 1/3 the width of strikes. Pretty mechanical, selling right around the 25, 30-ish delta for the shorts. You can make it $10 wide, $5 wide, $50 wide, whatever your risk tolerance is, right around there. Should be 1/3 the width of strikes.
Okay.
You're not like that? Are you okay?
I like it. Good job.
Cool. So we're in.
Next one, please. EEM.
Down $1 here. Basically turning into an AI ETF at this point. EEM is, Ian? Selling the July 65.75 strangle for $250. So we've traded this kind of okay. Which is shocking. We've done call diagonal spreads.
I find EEM the hardest to make money on. So you've done something I think that nobody else has been able to do. I mean, if you have a two-sided action here, it only goes in one direction. That's the problem.
Yeah, it's 30% implied volatility, so it's a tough one. You know what I'm thinking?
What?
Do you remember? Was it EEM that we did it in? I forget what stock we did it in, but we did that double calendar. EWZ. We did a double calendar, and I closed.
We waited forever on it.
No. We waited for like 30, 40 days on it.
Well, I mean, that's forever.
It was the whole thing.
Right.
And we said, we're like, you will never make money on this trade. It's never going to move. You're going to hold
like
this
30
forever.
cents if I remember.
No. If you remember, I closed out of the strangle.
Okay.
The short strangle for like 20 cents or something.
You traded out of it.
I traded out of it, and I just had the long strangle. And then like 3 or 4 days before expiration, there was some sort of, maybe it was when we took over Venezuela, but EWZ dropped like $5. Let's look at the chart of EWZ. Because I'll tell you exactly when it was.
All right.
I think it was like around here. Right here, the stock went up just infinitely and then just came down here, I think $4 or $5 in the span of like 2 or 3 days. And we made like $1 or $2 on an 80-cent double calendar. Excuse me on that.
Nobody makes 80 cents. Nobody.
So I think we go back to the well and do a double calendar.
Okay.
These markets are horrific.
They are horrific.
These markets... 12 cents. I was looking at the 65 strike. Ian, I'm sorry, I don't think I can do this because I'm looking at, and just to give everybody an idea, you look at these options in July, you have bids and offers that are so goofy here. I mean, this is just nobody trading it. Obviously, these half strikes probably just opened up, so those are going to be even wider. But you're looking at dollar wide strikes here across the board on something that's trading for $1.
Right.
You can't do anything here. My bid-ask spread on this double calendar, 12-cent credit at a $3.67 debit. You put this trade on, it's going to move around. You're going to see $100 P&L go away in a second to be a $100 loss. It's just untradeable. I'm sorry, guys.
Yep.
Ian, I got to pass on this one.
That's okay.
Oh. Crowd, I don't know. Okay.
Crowd is an
Still
earnings
bullish.
play too, right? CRWD.
So I took off a big position from a
Crowd hadn't had a downtick. I mean, you look at this chart here, like so many other stocks, 300. Well, I don't know so many other stocks from $375. Oh, just round to $775 in basically a month.
I have been bullish these stocks when with the start of the SaaS apocalypse. My thesis being that if we're turning into freaking Skynet, we're gonna have to have something to police it. And,
You did say that. I will give
we
you
have
that.
gone to banana land though.
Even you didn't think we were going there though.
No, I was not. So I'm going to do the same kind of thing that I was looking at in AVGO, a downside butterfly here. The 700, 650, 600, I did it at $7. Again, it's a trade that's, essentially an all or nothing trade. It's a lot less risk than the 1x2 that I had on into today. I was naked on the downside. I took a couple $100 out of that. I'm rolling it into this butterfly. That's the play.
I like it. Good job out of you.
I am unfortunately not bullish. Well, I guess I'm bullish, but I think sometimes you gotta
put
sell
it out
something,
there.
right? Like if you're bullish, you gotta have a spot in mind that the stock's doubled. It's as good as any, right?
Absolutely.
Rocket Lab.
RKLB. You just got out of a lot of RKLB, didn't you?
No, I had a call ratio. I'm long the 125, 140 call spread, short the 150 call. I bought in the risk on this a couple of days ago by buying the 165 strike. So I have a butterfly on the upside that centers right around between 140 and 150 is my sweet spot. I own that for like $2, so it's a cheap butterfly. What is Jack looking at here? Selling the strangle?
He's neutral. By the way, Ulta down $32 after being up for earnings, and Palo Alto Network. Let's just do a little bit of a look-see there. Down 16 on that. NASDAQ down 100. It was down 200 just about 15 minutes ago. Even the S&P is a week down 33, but they are about 15 handles off of their lows. Weakest of the group is the Russell down 37, just about $10 off its lows. Sorry. Volatility up 15 cents, not doing anything.
I'm going to do something spicy.
Spicy, did you say?
Yeah. I mean, you got SpaceX IPO. You got to think, if it goes to the moon, these stocks are all going to get bid. So we're going to do a 1x3 crab trade. I'm buying the July 135. I'm selling 3 of the June 145s against it. I did it for a small debit. If it stays over the next 15 days, I got $1,000 in extrinsic value that comes off the table, $3 per contract.
Yeah, this is the type of trade Jenny and I were talking about
1x3
yesterday that you like to put on these stocks. Remember, the less you pay for it, the better off you are.
Yes.
Good one.
All right.
You do have some risk here.
Yeah, I got that butterfly on the upside. That you look at that as like a pseudo hedge. Stock goes to 200. I'm in major pain.
I like it. It's
major pain goes to 200.
Major Pain. Horrible movie, by the way.
A great movie.
You liked Major Pain?
You didn't like Major Pain?
I don't know if I watched it, to be honest with you. I just remember it being silly.
Who's that guy? Is that one of the Wayans brothers?
Apple down 55 cents.
Wayans.
Who was it?
Damon
Wayans.
Damon Wayans. Yeah.
Service Now down $6. That's going to be my new problem child.
All right.
Gold down $3.
Grant looking at IBIT.
GLD.
35.36 is a support zone, and this price hasn't been seen in 2 years, starting to get long around 38. Well, good for you, Grant, because I've been long at way higher prices, and I'm bag holding. So if I didn't have
I hate crypto. I know we might have Ryan on today, but I hate crypto.
It's the worst.
66.8, by the way, on Bitcoin, down $555, about $1,000 off of its lows, about $1,000 off its highs.
Good on you for waiting, Grant. I think it's interesting. I think the more interesting play, and I have this on as well, is out of the money, like leap calls. If you really want to, if you want to play that sort of upside, capitulation, convexity to that position. They're very, very cheap, in my opinion. Obviously, the price is the price. As a lottery ticket versus buying shares. If you told me, should I buy 100 shares or buy, 5 of the 45 strike leap calls? If you're bullish Bitcoin, I would buy the calls.
Agree.
Like volatility is at lows.
Yeah.
The asset is at lows. It has.
This is something you really like to do, and it's not something that I look to do, and it's a very intelligent way to trade when volatility.
Because
is low.
if this thing,
even though volatility is higher in the back months, predicting this, if volatility goes higher in the short term, it's going to move all of those tails too.
Yes, and they're going to explode.
And if you get a real big spike in volatility,
and you don't have the downside risk, the thing goes to zero, you lose a couple dollars, and you're out.
Yep. Good job.
Meta actually. Seeing some life today.
Yes.
I have long delta here. And it's funny, if you remember, I did the leap call in Meta at the 750 strike, and then I sold the 800 against it. And I did that package for basically nothing. The 800 call has come in $500. The 750 call has increased $250. It's up $750 at lower prices. Because volatility, like when you talk about moneyness, when these stocks go up a lot, the delta of those options further out in time get really, really big. And then when it comes down, there's more moneyness to it. So as it goes down and time passes, the delta changes.
Got a lot of moneyness.
July, August, Meta has lagged the other mega caps. I'm late to the party, but still want to get long exposure. Any big risk I'm missing? Derek.
None that I wish he put this trade on yesterday, right? Meta up $21.
Yeah. I would
coming
like
for the pigs?
Is Meta one of the pigs?
I don't know. It hasn't participated.
It really has. There's no good. Meta has not participated in any capacity in this AI revolution. I mean, it's never in the headlines.
No.
Other than laying off
coming out with glasses.
Yeah, and the glasses.
Yeah.
I'm already in this. I think if I didn't have a position, an August, July diagonal spread is how I would trade this. You go to maybe the 650 and you sell the July, 700. It's a pretty expensive diagonal spread, but it's a big product. But you have a lot of time on it, and if you're bullish, I think that's the way to go. You could sell the puts if you wanted to too. But I'm already locked and loaded here. I'm long Meta. Long and strong. Zuck. Can't fade Zuck.
Long and strong.
Every time you faded Zuck, he smacks
you. Smacky poo-poo.
Smacky poo-pooed.
Yep, you're right. Costco bullish. Costco, I don't know what it's doing today. I haven't looked at it.
Marty was
up $12. I talked about this one yesterday. I should have done that instead of my service now. Bad on me.
Yep, diagonal or bullish spread, Jeff.
Costco $12. I hope Jeff did this in Miami.
He said he's long it at 950, so shout out Jeff.
Nice work.
So what do we do? What does a new subscriber do?
It's up $12 from there.
How about what do you think about a calendar spread? Is that crazy?
Just right a straight out calendar spread? Are you doing July, August?
I was going to go August, July.
Yeah, I don't have a problem with that.
It's a big one. It's an expensive one. You could do it at diagonal too.
Yeah. I mean, July.
There's no vol difference.
No, there's no vol difference. That's the key.
And that's good.
Right. Here's what we're talking about when we say there's no vol difference. I'll just close up those two. You look at in July and August, 25% vol on both of them. You if anything, you would want your July vol for Nirvana to be lower. Your August vol to be lower than your July. Or at least, you don't want to have two vol differential points between the two of them.
11-11, make a wish.
11-11, make a wish. Good job out of you. You paid about right there. Mid price has been bouncing around right there. So good fill on that one. Good job out of you. How many did we get done? I think you got Costco, RKLB. Oh, there they go.
Yeah,
only EEM, which I don't mind not doing.
Yeah.
Meta, you already had a position on. iBit, you already had a position on. So
yeah,
good on you.
Cool.
What do you think of this market here, son? Volatility not catching a bid.
I think it'll be down 5 because it can't break the record.
Okay. At least we agree. Volatility only up 10 cents. Even the S&P is down 32. NASDAQ down 74. It was down 200 in the middle of that segment we just did. Russell down 31. That's your leader of the clubhouse to the downside. Dow down on a percentage basis. Dow down 325. Bonds down 11. 112.01 was the low. 112.22 is the high. Bitcoin down 500. Hate it, Ryan. I will call you out when you get on the show later today. Oil up 87 cents, kind of made its run for the road. Oil seems to make its run overnight to highs and then promptly gets sold off, only to be bid again the following day. Let's see what's helping the market move lower here. Light down $52. That's a 5% move.
I got long a little bit more Google.
Okay.
Into this move. Diagonal spread.
Okay. Good job out of you.
Thank you.
Dell down 23. IBM down 21. MU down 17. Crowd down 15. Palo Alto Networks earnings down 14 and change. Snowflake's down 12. Microsoft down 9. BE down 9. Adobe down 7. And to the upside, Meta up 20. Caterpillar up 17. Marvell up 16. Trade up to 324. It's 307. Costco up 11. SanDisk up 9. Let's take a quick 90-second break. We've got Mr. TP coming in here. He's got an option jive that only he can explain. We'll be back in 90 seconds. We got more Tasty Live after this. A little anticlimactic on this move lower as the NASDAQ is only down 60. We'll be back in 90 seconds with Tasty Live.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's market measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Mikey, we are back, and nobody puts things in perspective like this man. I'm talking about TP. How are you, brother?
I'm doing well, Tony. Good to see you again, Nick. Good to see you, brother.
I like that shirt, TP. It's like a camo, like a newfangled camo shirt. I love it.
This is my look, and you know, Tony, I'm always about my look.
You are.
This is the TP lookbook, first page.
And I gotta hop off pretty quickly because I got Vogue and Cosmopolitan calling me after this. Okay,
I love it. I love it. I love it a lot.
The other thing too is these are inexpensive shirts and they're very lightweight. And right now it is freaking hot in Central Texas. It is humid. We had a massive storm last night. The dogs were freaking out. Well, not every dog. Slim, the big dog, he doesn't care. Slim takes storms like whatever. But the little pit bulls, they vibrate in fear. Vibrate. So hey, Nick, all right, Nick, have you stopped going to Shake Shack?
No, I'm actually long some Shack. I appreciate a good burger. I mean, it's a good spot.
Mm-hmm. So I wanted to ask you. I haven't been to a Shake Shack in years. Though I think the last time I was there was when I was up in Chicago. Where is it? Over in Ohio or whatever.
Close enough.
And it always had a line out the door. But I haven't gone to one recently, and I remember it was pretty good. The fries were tasty, whatever. Mm-hmm. But I didn't know what the cool kids were doing. If you're going to a new spot, if you're still going to Shake or whatever.
I like it. I like a Shake Shack. I haven't been to one in a while. I mean, we got Small Cheval right by the office, so that's Small Cheval and McDonald's are essentially the same price. So
are they really?
Not far off.
Yeah. Not far off.
I mean, it's not far off. Yeah. So,
well, what's the Small Cheval double?
What is it? It's a burger, TP. It's 2 patties. No, I'm just kidding.
It probably gets you
one less than you usually put on your burger.
With fries and a drink, you're probably like $20 to $25.
Okay. So with 20, what did you say? $25?
Yeah, it's like $20 to $25.
And so, what's at McDonald's? I mean, isn't McDonald's less expensive?
$15.
$15. All right.
So where you guys been? All right.
I don't know. I don't go to McDonald's or.
I got the big arch the other day. It was like $14.
$14. See, I got
the burger.
Condition.
The burger, the fries, the drink.
Okay, you got a burger, fries,
Nobody just
drink,
gets a burger.
Which you don't get at.
No, I'm saying with Small Cheval, burger, fries, drink.
Oh.
$23.
Yeah.
You want the nice fresh broiled burger for $23 with nice hand cut fries, or do you want the McDonald's for $16, $14, whatever it is?
I see that is
That's what I'm saying.
Nick, it all comes around to risk versus reward.
Exactly.
And how you have to balance them out.
Yeah.
So you're thinking, gee, I'm spending more money on the Small Cheval, et cetera, but it is
the big arch has more risk like 3 hours afterwards. That's really where the risk comes in.
Is Small Cheval?
No, Small Cheval is fine. It's fine.
No, I'm talking about McDonald's.
Yeah.
So the problem I have with Shack is the markets, when I looked at them this morning, were awfully wide. And I, was thinking about maybe selling a put in there and checking out the vol skew and et cetera. But I looked at the markets and they were wide.
They stink.
They have some okay open interest in them here and there. But for the most part, if it's, like we always say, if it's not liquid enough to get in and out of easily and efficiently, I move on to the next trade.
Sure.
The other point is, though, and this is kind of a long-standing gripe, is what did Shake Shack come out with yesterday? Just guidance? Was it an actual earnings call they came out with?
No. They had earnings already.
Yeah.
Because it moved big on earnings. It
moved big on earnings to the downside. And
then this guidance comes out and takes them even lower. That's why I am in favor. It's going to take a long time. Just eliminate this whole quarterly earnings report. If news like guidance about future growth is enough to knock the stock down, which whatever, up down doesn't really matter, but it moved the stock. Just just have this rolling news cycle. Forget hanging it around certain specific dates in the quarter. That's gone. That's like Depression era reporting back 100 years ago. I would eliminate all that. Just have this kind of, hey, we have some news, and there's no anticipation. There's no Jack and Vol up ahead of a number. I would eliminate earnings.
Are you running for office in Texas?
You know what?
Yeah, we could put you in power to make these decisions. I like it.
You know what, Nick? I'm not sure if I have the look for it.
No,
Okay.
no. With your lookbook, for sure, you got it. You got this covered. No problem. Yeah, no problem.
And I'm also, I don't like kissing babies and stuff. I don't like the, whatever. Anyway, so that's my take. But the big news, and here's what I was wondering now, is has the Iranian war jumped the shark? I don't think it has. But right now, all the IPOs are getting the news, whether it's the Anthropic, whatever, valued at presumably $1 trillion coming out, I guess, in October. You've got the SpaceX. They're saying they're pegging the valuation at $1.75 trillion. Is that going to be the new news cycle? In other words, hang here and we're going to wait for OpenAI. Is that going to dominate the market just like this whole Iranian thing has done over the past 3 months? I don't know.
I think that is the focus right now. I mean, it's anything AI related, and it's news. I mean, we had, Jensen was the move on Marvell. He says it's going to be the next $1 trillion company.
Yes.
Stocks up 50%.
Yes.
I mean, that is
after they invested in it too.
Yeah.
But if you invest in something, don't you think it's going to go higher? I mean, just because you put it into work. I mean, it's banana land, you say, but just don't get in front of it, is what I say.
Yeah, agreed.
So let's get into the segment here today, and what I'm talking about is exactly related to this. Is the bullish sentiment in the AI sector. Okay. Whatever you think of AI, and I have my own opinions about what AI could do, can't do, what it's good for. I use it. I use Claude, and there was a news story coming out today that Uber is actually capping its employees' spend on AI, which is kind of like you're using Claude. So there's probably an Uber developer fires up Claude. You get if you run out of time on Claude, you pay for it. You pay $50, $100 or whatever. Uber is putting a cap on it. Everybody is using this stuff now to the point where it's like, why should I bother learn to code? I'll just throw it into Claude
for sure
and get an answer faster and cheaper. And that is part of what's driving this. What I noticed, Nick, is, and we talk a lot about volatility, and you know me, I love a good volatility skew. What I did was I picked 7 what I thought representative stocks in the AI space: AMD, Avgo, NVIDIA, Micron, Oracle, Palantir, one other. It's and TSM. Taiwan Semiconductor, because you could argue there are like 40 or 50. I don't have time for that. Nobody really wants to see 40 or 50 symbols. What I did was I pulled the implied volatilities, the 10 out of the money calls, 10 out of the money puts, pulled them for the 45-day expiration yesterday, 44 days today, pulled that data, threw them into a little program I have, and plotted the IV skews. And all but NVIDIA had their skews pointed towards the call side. And that is fair. That's fairly unusual, for equities in general. And we'll see in another slide, we'll compare it to the S&Ps. But it's unusual that it's so consistently bullish in these AI stocks. And I looked at some others that I didn't include, saw the same behavior. So here we have, and what these slides show you, these are just the first 4 AMD, you see the little red dot in the middle. That's the current stock price, or was the current stock price yesterday when I created this. And you just see the implied volatilities on the right-hand side. The right-hand side of the graph is out of the money calls. The left-hand side of the graph is out of the money puts. The only one that has more of an even typical equity skew is NVIDIA. And if we go to the next slide, we'll see what is stocks? Oracle, Palantir, and Taiwan Semiconductor. Same thing. Palantir is a little bit more balanced, but still, for the immediate, to the first few strikes, 2, 3, 4 strikes out of the money, Palantir also has its calls trading over the puts. Skew does not point to direction. Skew points towards risk.
That's right.
Yeah.
So the
Or velocity of risk, right?
Thank you.
Yes.
Exactly.
Yes.
That's exactly right, Pat. So in other words, it doesn't say, this isn't saying the market says Palantir's going up, Oracle's going up, Taiwan Semiconductor's going up. It says that's where the market is, what it's afraid of, where it's pricing in, as Tony just said, the velocity of risk. So nobody wants to be caught short this stuff. So what do? They buy some calls. The buying activity pushes up the implied volatility. It is a very mechanical process. That's all it is. This is just a reflection of the market supply and demand. Okay. And if you go to the next slide, this is where I sort of, I didn't do a great job with the formatting here, but anyway, you get the point. So all of these stocks, with the exception of NVIDIA, where, again, the 10 out of the money calls, 10 out of the money puts, what I did was I averaged their implied volatilities. And then said, okay, what percent are the calls trading? What percent is the average call vol trading over the average put vol? AMD, 2.68% higher. Avgo, 5.75. NVIDIA is flat, 0% difference. Oracle, 10.3% higher. Those calls are getting jacked. Look at the SPX, 3.05. The skew is still pointing to the downside in SPX. No surprise there. Okay, that's what equity risk is. It's people fear the downside, so they're buying SPX puts. But in this AI space, for these 7 stocks at least, the skew is pointing north. And that's why, and what's really, I think, most telling, if you go to the next slide, we should see the actual performance. These stocks, one day they were kind of mixed, but over the past week, past month, they're all up. And the skew is still pointed up. It is reinforcing the bullish fear, the sentiment in these stocks.
Yeah, I mean, some of these are. I just looked at Oracle, and I'm working to close an option here, but I have 9-day calls going into Oracle earnings at the 325 strike. I put these on yesterday, and the stock is down $10 today. Like a minimum, I guess at 4.5%, but the stock was up $30 yesterday.
Sure.
These calls that I sold yesterday at 452 are at $1.80 right now. I mean, that's the sort of velocity of movement you're seeing in this upside skew. And I just got closed on a 179.
Take a fill. Nice.
But you're seeing this across the market. I mean, that's why we've been leaning into these butterfly trades where you're selling those kind of tail type premium. It's really, it is so juiced on all of these options. It's unbelievable.
It really is.
And you can say
puts are free. You can buy puts, no problem. They're nothing.
I mean, I'm not a huge fan of just buying out of the money puts, but to that point, Nick, is this is why.
But if you're talking about, I'm sorry to interrupt you, TP, but if you're talking about like a black swan type event,
you can get it for free.
Your downside, especially in shorter dated options, and I'm talking about 20-cent options, 30-cent options. It'll even decrease your buying power on some short puts that you may have, 45 days out, 30 days out. You want that black swan hedge. You still lose money to the downside unless you buy 20, 30 of them kind of thing against one contract. But if you're just doing 1 to 3, 1 to 5, 1 to 4, 2 to 5 kind of thing, you can get some margin relief and I don't know, sleep at night black swan risk, which is still losing money.
That's fine. That's fine.
Yes.
And the only caveat to that is that, if you do that consistently, if that's your part of the long term, that could be a drag on your return.
It will be a drag. Sure. It will be. So you have to decide.
It's like paying stupid house insurance or car insurance or whatever.
Sure.
So when you don't have to, if you want to self-insure. That's exactly right. But here's the point. That if you are just watching the S&Ps or the NASDAQ, like we're talking before the open here, or the VIX, you're missing so much. And that's why engagement is so important. Just like Nick was saying, the volatility is high in all these things. Right. And if you're just looking at a couple of things like that, and I love the VIX, guys, my middle name is VIX. But the point is, if you're thinking, well, gee, the VIX is below 20 or whatever, there's no premium in the market. There are options to trade. There is premium to collect if you look a little bit outside of that, like this AI sector. I don't care if you're bullish or bearish on this thing. I really don't care. Whatever. You can make money as a bull. You can make money as a bear.
Sure.
Okay. But this is where the premium is. I'm longer term bullish on this AI stuff. And if you go to the final slide, this is just illustrating the implied volatilities. These things, generally, they have been strong. NVIDIA is a little bit lower, but something like Micron, or Oracle, or AMD, the volatilities have been climbing. Premiums in those options, just like Nick, you saw those Oracle calls. The premium has been going up even as the stocks have rallied, and you can get paid here. You're getting paid to take risk. For sure. Let's put it that way. If you're willing to take risk, Tony, just like you were saying, if you think there's risk to the downside, sell a call spread.
Right.
If the puts are cheap, okay, buy a cheap put spread or something like that. But you're being rewarded for taking risk.
Good job.
I like it.
TP, I'm being told your camo shirt is an underwater camo shirt.
It could be. Yeah, all right, guys, I gotta hop. The Cosmos on line 2 here.
Oh, I thought you were more of a Victoria's Secret V-sexy.
Well, I can, but you know what? For some reason, they're not calling me, Nick. They're not calling me. Maybe I'm out of the age demographic. I'm an old fart. It's
good job out of you, my friend. We're gonna take a quick 90-second break. You know what else has had a good job? I got to give the Nasdaq credit, even though it's down $4. It was down over 200 before we started. Look at it, up 50 cents now. Even the S&Ps have not caught a bid. They're down 29. Volatility definitely hasn't caught a bid. It's down 5 cents. TP. Get your volatility hat on. It's not moving right now. I need it higher. I want to do things. We'll be back in 90 seconds. We got more Tasty Live after this. What do we got coming up next?
We got the boys.
Tasty Trade World Headquarters. You are 100% correct. Back in 90 seconds with Tasty Live.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Switch to Tasty Trade and earn up to $3,000 in commission rebates.
We are back, son. Without further ado, let's bring in this man. Q, aka PDT aficionado.
PDT whisperer.
Whisperer. There you go. Good one.
Fellas,
Good one.
how's it going? T-1 day until we at Tasty Trade.
T-minus a couple of hours. Well, he's going to be here at midnight.
Oh, wait, I saw that, actually. You're going to be here at midnight.
Flipping the switch with the
that's kinda
Tasty
fun.
Trade personnel. Absolutely.
Nobody's going to say they were first.
That's right.
Yeah,
I'm gonna
I
be
mean,
here
yeah,
at
we're, yeah.
12:01 Central. I know that we said this. I said if anybody beats me on whatever their time zone is,
I heard other firms aren't doing it till the 6th. So they're doing.
Yeah, I've heard some of that as well,
3
like
hours.
6th or 7th, you know. Yeah, but we'll be ready. Day 1 tomorrow. You'll
Awesome.
be good to go.
Awesome.
Be
Awesome. Please don't disappoint us.
Freedom.
We'll have to.
like Braveheart.
I'll have to. Yeah, like Braveheart.
I mean, no one wants this to like, no one wants this to go more smoothly than me because no one has to face the brunt of the customers like I would if that does it. They're going to be, you know, with pitchforks, riding, but I don't think that will happen.
Everything's going to be
go.
smooth. It's going to be beautiful. It's going to be.
All right. So I have a question for you that's not on your list of questions.
Okay, yeah, because I've got a bunch of stuff to go over. We'll get into the weeds, but
All right.
yes.
So
What's
I
your
have
question?
one quick question. That a customer.
I already answered this.
Was it right?
Yeah, it's right.
Well, where do you
All right,
think he
ask
gets
the
his?
question.
Where do you think he gets his information?
What if they get a patent day trading problem today?
Yes.
Will it be expunged and go away tomorrow? They will have no issues.
Yes.
It's just like your record, expunged.
Just like all Batista records.
Yeah, just like the
They
Batista
get
records.
expunged.
Expunged.
All right.
Yeah. So just to go over some.
We
new
said it
stuff
would,
today.
but I wanted to get it from Mr.
Yeah.
Ed's mouth.
Yeah, well, where do you think he gets it from? You know, so I gotcha. Yeah. And so with the new intraday margin rules replacing the PDT rules come tomorrow, there is no longer a classification of PDT on the account, and there's also no longer any day trade calls as well. Day trade calls are like the worst to deal with. So very grateful that those are going away too, with the PDT rules going away. And so with the new margin rules, you can day trade as many times in a margin account in any type of account value. So people will talk about like, what's the $2,000 minimum? That's still the same minimum just to buy stock on margin. When it comes to trading options in a margin account, option spreads, things like that, you can day trade that with less than $2,000 in your account if you would like. And then also, there's like something called a good faith violation in a cash account. Those will stay.
Those will stay?
That's cash accounts.
That's a cash account, yes. So the new intraday margin rules don't apply because it's a cash account. However, if you're
a lot
an
of
active,
things don't apply to cash accounts. We don't even get into that because it's one of the.
Yeah.
I mean, I know I get their advantage, but man, that's really limiting.
Well, so we have a lot of customers that are like the PDT refugees, right? That will trade like single leg options in a cash account.
Yes.
And so if you're an active day trader and getting hit with the good faith violations, then you may want to consider switching to a margin account to do your day trading. Of course, there's different risks if you change your trading style in a margin account, but you will no longer be limited by the good faith violation.
The reason why you had a cash account is going away, if that's the reason why you had a cash
like
account.
synthetically, yeah.
To avoid patent day trading problems, if you opened up a cash account, that's gone. That reason has gone away.
Correct. Yes, exactly. Yeah. And then so to get into the weeds a little bit, the way the whole intraday margin levels work is that it's a real-time buying power measurement rather than like your starting day trade buying power. And so every time you make a trade that resets, the Tasty Trade system thankfully will not let you put yourself into a margin call. So you don't really have to worry about like intraday margin deficits and intraday margin calls, things like that. If you do, give us a call on the trade desk. We'll be able to help you out.
And that's because you can't trade options via margin debit. You cannot be in
options are not marginable securities. Obviously, they have like inherent leverage to them, but you can't like borrow to buy calls or puts.
Exactly. So if you are trading just options, you'll never be in a situation where you will be in a margin debit. Unless you get assigned after hours and then you're long. That is a totally different situation. So from an option perspective, it's going to be all good.
Yeah. You're all good.
Yeah.
Nice. Good job. All right.
Yeah. Cannot wait. And I think if I remember correctly, I think we're ringing the bell at the SIBO tomorrow, Tasty Trade.
Awesome.
I will say I got offered to be there. However, I'm going to be on the front lines with all my people as this goes through tomorrow morning.
So who's going to be there? I didn't get asked.
Sorry.
Did you get asked?
I don't get asked to do anything anymore.
We're like second class.
Redheaded stepchildren.
You know what I said? I was like, if we get any swag, just get me something.
I can do it.
That's all.
I got some CME swag, and I will say it is
primo.
One of my coworkers, like brothers, used to work at the CME. I asked him all the time. I was like, "Can you tell him to get me some merch from the CME?" And now he doesn't work there anymore.
I felt like,
and I don't have any merch. I'm
bribe
very sad.
Like they gave me the good swag. They were like, hey, there's more of this on the other side.
I like that you're staying on the desk. I would stay on the desk if I was you too.
Yeah, I was like,
I would share a foxhole with you.
Yeah,
I appreciate that. Appreciate that because we can ring the bell at the SIBO any day. Market will be open, many days to come, but PDT only gets removed once.
That's true.
Let's get to your list. Got to end on that high note. That was beautiful. Good job.
Alrighty. Top 20 symbols going through the system, and their IVR at number 1, NVIDIA with a 42, Microsoft 59, Tesla 34, Marvel 112, Intel 76, AMD 95, Micron 93, Meta 46, Apple 45, PANW 67, Palantir 33, Broadcom 87, TQQQ 58, SoFi 22, GLD 31, Oracle 89, Google 44, IREN 55, SOXL 113, and SLV 28.
Good job, that is you, my friend. And now I must bid you adieu.
Yeah, and then any questions about the PDT rules going away, new intraday margin rules, always feel free to reach out to us on the trade desk.
Awesome. We're going to let you go get back to the front lines because I've got this man. Ray, what's up?
What's up, my friends?
Everything good?
Brian?
Everything is great. Though, unfortunately, I don't have any swag, man. Not from the SIBO, the CME. I'm not really involved either. So, no swag over here.
I feel like next time I'm there, I'm going to get you something.
Appreciate that. We might know a couple people.
Yes. Yeah. I got somebody over there probably owes me money somewhere. I'll find them. They'll get me something. I'm going to get you something.
Thank you.
How's everything going, my friend? Crypto traded down to 66,666, actually lower than that, 65,005 and change on the futures, 66,300 and change on the cash. Seems like, the story is all the money's coming out of crypto to those people are
YOLO calls.
YOLO calls, or by Anthropic or SpaceX or everything else like
unreasonable.
that. Any validity in your mind to that?
I don't have any empirical evidence to support that, but when you just look
if you're
at...
gonna talk like that, I can't get you any CME swag. 'Cause those guys are like knuckle draggers, okay? We can't do that.
The price action would lead you to believe that that's absolutely the case. I mean, if you look at what's happening as well in crypto, we've gotten to that point where you're getting the headlines around biggest liquidations since February, over $1 billion in perps that were liquidated. So that amplifies the volatility. When I look at the chart, we've been here before. So last time we traded lower than this was in April. I just think this, again, is what crypto is. Everybody wants it to go up. I mean, it hasn't for some time here. It did bounce from 60 to 80. And it's correcting. I'm buying the dip. I'm working orders in there. I think you put a couple limits in. You see if you get a big ass candle and you buy it at 60 and it's back at 65 by the time you wake up.
Yeah.
Wow.
I talked about leap calls today. Somebody put in a
in IBIT or
in IBIT or Ethe or whatever you want to do.
Right.
As just a way, like if you're bullish, that's great. And if you are a little bit afraid of the downside, volatility is cheap across the board.
Yep.
You have this obviously mimetic sort of vibe to this space. You have these massive moves. We've watched them before. It's really cheap to take, like you were talking about with your cheap call spreads, that sort of risk and not have to worry about it. If you a couple months from now, Bitcoin's at zero, like everybody foretold, you're out a couple bucks and it's whatever. And it stinks, but it seems to be an asymmetric bet at this point.
At a certain level, right? I mean, and I'm not saying that it can't go quite a bit lower from here. But again, I must remind everybody, this is a six-figure, 50 vol asset that everybody loves it at 150, wants to chase it at 150, and nobody on planet Earth wants it at 50.
Yep.
But trades well within what the options would imply and what historically it has done from a realized perspective.
Yep.
So, unfortunately, it just moves really quickly, I think, is what catches people off guard. You go back to 60.
Getting its wings underneath it. It was so
We were so
good.
back.
It was so back.
We were so back at 80.
It was so back.
So
and then they
back.
just pulled the rug right out. It was really a horrible thing. I mean,
sick.
When it happens in a high flying stock, or a meme stock, you kind of expect it.
I will say I am seeing the tweets come across like, all the kind of like meme crypto accounts being like, I can't believe I held this for like a minus 50% move. Wow. Literally, you could throw a dart at the board and stocks are moving 30% a day. It's like almost like
the FOMO.
It's crypto-like movements in equity stocks while crypto has done absolutely nothing.
Mm-hmm.
Only goes down.
Down only.
Yeah.
So SpaceX is supposed to come on Thursday, right? Is that
Thursday of next week? I think.
Yeah, Thursday next week. Yeah.
11th.
Okay. All right. So we got more of this. I'm trying to see if there's any weakness in Bitcoin and I don't see it. I don't see the play, but I'm gonna.
Yeah, I think if you look at where a lot of the flows have been concentrated, which is in the ETF space there, and you look at who those investors are. Of course, you could trade options on those products, and we invest in them at times to trade those. But that's largely institutional money.
Mm-hmm.
And so again, I'll just go back to what I said yesterday. I do think there is something to, if you have limited amounts of capital, you have to allocate it in certain areas. you can't really miss this AI trade, and that might blow up too. I think it probably gets a correction at some point. Doesn't mean it doesn't go higher.
Yeah.
But again, I think you have to take a long-term view, and I'll just give everybody one headline here. Crypto is dead, but I mean, here's just one from today. Payment giants Stripe, Visa, and MasterCard are among backers of a soon-to-debut stablecoin platform. Stablecoin growth only continues to move higher.
There was a stablecoin ETF too that Vanetta mentioned on I forget where it was, what the basis of it was. But,
Okay, yeah, I'm not familiar with that.
but it seemed like it was basically like a T-bill alternative, which you would expect to get a better rate because you're doing all short-term T-bills in those stable coins, whereas like a BIL or an SGov, they have like 3-month, 4-month, they have like longer duration rates in there that are much lower. So, you might have another couple basis points.
Yeah, and that's back to the the real world asset theme where you're only seeing that grow money market funds that are tokenized, and that opens up, the technology opens up access to global investors. And so I think when you look at this just as a quick tangent, this is a huge positive for the United States. When you go back to the Genius Act and the Clarity Act, which hopefully is passed here, it opens up U.S. debt markets more than anything to all of these investors. And it doesn't seem like we're going to go backwards in terms of the debt load. And so you need to find more and more, I don't know if you'd refer to it as greater fools in the grand scheme of everything, but you absolutely have to find more buyers of U.S. Treasury debt. So this facilitates that. I would only expect those numbers to go up. Stablecoin market cap, real world assets, tokenized equities. You mentioned SpaceX. It looks like Kraken's parent company is looking to launch tokenized access to all of these new IPOs. Yeah. So I ignore the price short term. I don't know. Nothing's changed.
Are becoming a thing, hyperliquid.
Right. If this
parabolic.
If this isn't real, so I think everyone is probably looking at the reaction in some of the exchange stocks yesterday. There was some weakness in there, but that definitely resulted in a flush. And you look at that around Kalshi news. It's not about Kalshi. It's about Hyperliquid being able to do the same thing. Hyperliquid has that product today, and that's been one of the outliers in the space. So I, again, think there's a lot of opportunity here as well. The Bitcoin price is certainly lower than it was a few weeks ago.
Price influences sentiment.
Yeah, totally. And there will be the other side of this at some point, and we will be, as many others will be, in disbelief that it's going up as much as it is in such a short period of time.
Yeah.
Good job out of you, my friend.
Got a couple updated trading ranges if you want to take a look really quickly here.
Oh, these performances are not going to look good. Go.
Oh, we don't have performance today, Tony.
Thank you.
It's bad.
Thank you.
It's
Yes.
bad. But we can look at the 1 week, 1 standard deviation moves updated given the new spot price and a little bit of a move higher in volatility here. But still looking for a $4,000 move in Bitcoin. It takes you down about 63 to 71 on the upside there, which is good to see the 70 handle. ETH about 150. Much weaker here over the last 24 hours. Big move down to 1,800 or so, but you're looking at pricing in 1,700 and 2,000 on the upside. Solana volatility picking up a little bit, $10 range in there, 69 to 79. And then Doge, not really doing much, but it has outperformed Bitcoin. It mostly just has held up when you look at that ratio. XRP, volatility has picked up a little bit in there. So yesterday we were looking at downside, a 1 standard deviation move of 120. You're now pricing in 115, 131 on the upside. 130 was about where we were yesterday, so that hasn't changed.
Good job.
But yeah.
Very nice.
At some point it will bounce.
Someday, one day.
Right. From your mouth to whoever's listening, although probably not in our lifetime, right? I mean, that's what I'm thinking about. What do you think about this market overall, son? Even the S&Ps are down 35. They've been pretty consistent.
NASDAQ was just up like 30. NASDAQ's been so, it's just on, you can't sell it.
Can't stop, won't stop?
Can't stop, won't stop. It's insane.
NASDAQ down 30. It was just up 30 a minute ago. It's down 200 about an hour.
Volatility?
Unched 1770 after catching its first bid today before the market kind of started going a little bit lower.
Wild.
AVGO on the docket, crowd on the docket, Sienna later in the day or tomorrow morning. Ryan, I'm going to take a quick 90-second break and come back. We got more Tasty Live. I said we were going to have our first down day today because we have 9 up days in a row. 10 would be a record.
I said it would be down like 5.
He did.
I said
down is down, man.
Yeah.
Inch or a mile.
It's looking more like you than me to be quite frank with you.
I hope more, but it just, you cannot stop this right now. There will be a point where it'll stop, but it's not right now. The normies are waking up. They're YOLOing their Micron calls. It's all or nothing.
All right, keep going now. You're on a roll.
That's
You're like
it.
butter.
That's it.
Let's take a quick 90-second break and come back. We got more Tasty Live after this with Liz and Jenny next. Peace.
Peace.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
When the market moves, traders need to move faster. Tasty Trade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, Tasty Trade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on Tasty Trade.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Why do you want high IV rank when you sell options? Because you get more money when you open your trade. People get all tweaky when they don't know how a stock is going to act. They'll pay more for guarantees that are written into options contracts. And if they're getting super scared about it, they'll pay a lot more for the options. If you're selling those options, that means there's more credit you might keep at the end of the trade. Since IV rank measures today's IV against where it's been in the past, high IV rank tells you if people want to throw more money at you now. So look for high IV rank when you sell options. Pretty simple.
Global markets never sleep. Explore them with Forex on Tasty Trade. Get in on 80 plus Forex pairs, 24 hours a day, 5 days a week. FX marks the spot. Trade it on Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
I got a good feeling. I got a good feeling. Yeah, I love this life and I'm living it up. You can't stop this dreamer. I'm a mad hatter. Call me one of a kind. I'm a true believer. I got a good feeling. 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 Yeah, I'm up with the sun, soaring high as a kite. Call me an overachiever. Leaning off of that edge, don't need a green light. I got that fever. I got a good feeling. 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 And when it comes, you gotta grab it. Never let it go. I got a good feeling. I got a good feeling.
I think we are. I can't tell. Okay. Hello, everybody, and welcome to the Wednesday edition of the Liz and Jenny Show. My name is Liz Dierking. The beautiful brunette to the left of me is Jenny Andrews. I couldn't tell.
Hey, you know what? Sometimes different people start the show off for us here, and instead of we had a real slow point. Liz didn't know if we were on or not.
But I didn't. That's okay. But you know what? That is the fun of a live show. But my name is Liz Dierking. That is Jenny Andrews, and we are in the world famous SIBO's SPX pit for the very last day of the pattern day trading rule, which means it's technically over, isn't it? Because you could trade in and out of it 3 times today. It ends tonight at midnight.
Yes, it ends at midnight tonight. I was just talking to some of the traders about that. I think volume's really going to increase once that PDT is over. Anyone with a $25,000 or less account can be in and out of these options.
So I think we talked about this. We're gonna screenshot the volume at the end of the day. Actually, let's do it during the day, during our show now. We'll take a look at it, and then we'll do it during our show tomorrow, because I think it's going to be a trickle effect. I don't think this is a floodgates opening.
Right.
I don't think it's a floodgates opening. I really do think it's going to be a trickle down effect, because I don't think the people that are victims, if I can use that word, of the pattern day trading rule realize the power that they are about to yield.
Right. I agree with you, but I don't think at 10 a.m. we're going to see a huge difference. I think we'll see a big difference by the end of the day, because if you think about it, if you're opening a trade and you would be able to close it, like you think of your son selling that put spread, he may not be out of it by 10, or people trading, they might not be out of their trade by 10, but eliminating the PDT allows them to get out of it at some point in the day.
I am bad parenting 101, but I told him double your size. Like, you're going to do more because you can get out of it.
You can get out quicker.
You can get out quicker. That's, I mean, like I said, bad parenting 101. I'm sure it is, but he is the son of a trader where I was like, you can now do more of these and get out for 50% instead of doing one and waiting for 80 or 90.
100%. We know that from just experience, right? From experience, we know if we're going to take 10% or 20% out of a trade, we get it much quicker than if we're waiting for 50%, 75%. So I get it. And if you want to size up and take a smaller percent,
there's going to be one extra contract in there.
Get ready, boys. There's going to be one extra contract tomorrow. Now, hopefully we see a lot more. I wish we were down here tomorrow.
Kick the boys out. We'll come down.
Yeah,
I can't. I got too much stuff to do, but yes.
Oh, yeah, it's party weekend. Party weekend. Liz is in party mode.
Yep, party mode.
Party mode. We were talking about if she should take off on Monday or not, but she's gonna come in. Stay for the party.
I'll be wearing sunglasses, but I'll come in. No, I mean the show is easy. The show is fun.
Are you ready to take a look at some earnings from last night?
I would love to. Now, how was the show with one Anthony Batista?
I'm not gonna lie, he got a little crazy. He gets a little nutty. It was nice to see him. I'm happy to have him fill in.
I was laughing because I was listening as I was driving home. I didn't quite make it all the way home in time. And he called you public, I think, 4 times.
Everything was public. And things that I don't think are public, it was
ConAgra is public. That's what I was talking about. He's like, ConAgra, this is your grandparents' generation.
And that was partly a joke. But I think my point was, I'm not going to get hurt if the wheels fall off the market, because I'm not going to get stuck naked long some of these high flyers.
Oh, I am. Did you see Marvell?
You're not going to get stuck naked long either.
Did you see Marvell today? Up another $30.
Oh.
No, I'm still naked long, 200 shares.
Oh, well, yeah, you've got your couple. I know you covered most of them. I know you covered.
And then I moved the other one out and up. I mean, hey, listen, I use my options knowledge for good, not evil.
Well, that's what I'm. So people, you don't have to get stuck naked long, because with options you can come up with ways to do something else.
I wielded my options power for good, not evil, in the Marvell options.
All right, well, let's get back to earnings. So yesterday we had Palo Alto Networks. They came out with earnings. They were up after hours after the announcement. Now they're down 5%. So
they were up bigly after the announcement.
Oh, yeah, and Tony is texting me, Palo Alto Networks is up. Good work on the diagonal, because he came up with a diagonal. I didn't put it in only because I didn't want to risk that much in the account. It was expensive.
Yeah.
But after hours, I thought, geez, I wish I put that diagonal in.
Did you trade any earnings trades yesterday?
GitLabs, GTLB, GT.
Oh, yeah, GTLB.
GTLB. So we put on a diagonal here. It's down. Let's take a look at what the diagonal's doing.
It's not down that much. It's only down 3%, $1.
So we have this 32.37. When I look at this chart and you see the move, do we want to keep this on?
I mean, honestly, this didn't move. I would leave this. You've got one day tomorrow.
There's nothing left in our short, though. There's nothing left in the short. So what we could do would be almost turn it into, if you have just the 1 week next week and you're going to roll your call out, all you're turning it into is a call spread. Because then all we're turning it into is an out of the money call spread. So I'm not sure if I would leave that. Sometimes I just close these diagonals and sell a put instead. To
Do you know what I've been doing? And no, you're not getting much for it. I like, because there's not much left in the short, you can buy your 37 back and make it a calendar for X amount of days. You're going to take a little bit.
No, you have the 9 day. There's no week.
No, you stay in the 2 day. Take your 37 to your 9 day strike.
Okay, sure. I'll do that.
I would just like to tell you something that happened yesterday. I was at the studios. I had so much fun with Vanetta. She's absolutely the best. The best.
Vanetta is the best.
Okay, well, the whole crew is. It was wonderful. Like, it was wonderful to see everybody. And Annabelle and I were doing some promo photos for Trade Like a Mother. But Garrett was trying to tell me that they're gonna not see this button, that we can kind of control our show. Garrett was saying that they want to be able to do it in studio. And I love saying things on air because nobody can stop me. And I said, Garrett, what you need, what we need. And that's just what happened back there. Is I was like, I don't care if it's just one way. When we hear something, we need to be able to go to the full screen.
Go to the full screen.
Because the microphones are so good, you can't hear it. So what we do like is when there's something wild behind us, we want to be able to get to the shot. And I just heard something and it made me think of it.
And I see your point with that. But what with what's your plan with Annabelle?
Oh, no, we just filmed a bunch of promos for the new show, Trade Like My Mother. It's called Trade Like a Mother, and we crossed off the A and wrote in crayon my.
That's cute.
It was cute. Yeah.
That's cute.
So
that's going to be fun.
Yeah.
I didn't know if they wanted you and Annabelle in studio.
No. Oh. No, here, this studio. This studio is where they're going to take this button away from us.
Oh, no, they can't take that button. I didn't know where you were going with that.
I know, that's what I'm saying.
They can't take that button away from us.
This. What I did, and
why do they want to take that button away from us?
You can see when we're distracted. Why would I tell you about something in the studio?
Why would they want to take this button away from us?
Why? Because if you see something behind us, we can then address it, and it's very hard for the in-studio people to see that.
Oh, okay. I mean, of course, you wouldn't want that button taken away.
I said no.
I wouldn't want that button taken away.
We're not gonna take it. No, we ain't gonna take it.
All right. Here's what I'm going to do. I'm going to go back to the platform. Okay. I'm going to buy back that 37 call, and our long call in the 9-day is the 32. I'm going to go in the 2-day. I'm going to sell the 32, taking another 50 cents.
I mean, it's just
I get it. Now we got a little bit of a calendar. If we get an slightly up move, that we're going to get 55 cents in decay out of the 2-day. We'll still have the 9-day. We can figure out what to do with it then.
And sometimes it works, sometimes it doesn't. Because I've had them before where you can't calendarize it.
Where you can't get anything.
Or you're not getting anything. Yeah.
Okay, so that was one. Medtronic, MDT, they had earnings. They're up small, 4 or 5%. And Ulta. Did you trade Ulta?
Ulta's up huge, I think, isn't it?
Oh, down $23.
Can you see where it opened? Because I wasn't looking at Ulta because I didn't trade it, but I heard that it was up like 10% or something.
No, it was never up today.
Then it was up pre-market. It must have been like Palo Alto.
Maybe pre-market.
Yeah.
Maybe pre-market. Movers that I don't know what else is on the move. You said Marvell is up again today.
Oh yeah, let's see if it still is.
Up $18.
Look where it was though. Look at how high it got.
Got up to $324.
Yeah.
Marvell.
In the words of Chris Vecchio, all tech, no breaks.
So, okay, what was the prediction? So right now, Marvell market cap says $179 billion. The prediction is going to be $1 trillion. So, hey, if you're not in yet, it's not too late. Not too late. Did he have
with a T?
Trillion. Crypto. I know on the side here it says BTC up to $300. It's trading 66,000. All lies. Crypto not looking good again. IBIT's down. Yeah, crypto's been really taking a hit. We'll see what the future holds. As far as management, we can get to that later. We can get to management, new trades later. We can also get to tweets later. We are going to be taking live tweets. Send us a tweet, include this hashtag LIZJNY, just like Bradman here.
Oh, yeah, there we go.
Liz, are you still taking your 0DT SPX expected move short put spread to expiration? Do you plan to eventually have your son do that as well, or do you like 50% for him? Or do you do both on different days?
Okay, so the answer is yes and yes, right? So with him, I have been putting he's got the 0DTE put spread. He puts it in, but up until this point, up until tomorrow, I've been momagering him more than I will put an order in to butterfly it off. So he's taking about 90%. Because he's taking about 90% because I'm butterflying it off for about 10 cents. That is a moot point now. As of tomorrow, I'm going to let him put his own closing order in. So if he's taking between $80 and $100, I was going to say take 50 if you want, take 60 if you want. Leave it. You can leave it for a couple hours and see what you want, and then put a closing order in for it. The world is your oyster, but I am going to have him double his size.
Double his size.
I say double your size and take 50.
Right, because if he did one for $100 and was taking 90 out of it, he could do two and close him at 50%. Our research shows better results from closing earlier and not letting it go till the end of the day. Now, our research on just the short put spreads, I don't know what the clear winner was.
No, you could let him go on just the put spreads. They said you could just let him go. It was okay, but it's still better. It still behooves you. So we were leaving. I butterflied off for about 90% because I was like, that's fine. Or sometimes I would pay 15 cents for the butterfly, which is about 85% profit.
I've been doing the Jade Lizards lately, and I have been putting a 50% GTC.
Hey, listen, I've been doing the Jade Lizards, and I've been letting them ride. And they've been amazing, but things work until they don't. So I think I'm going to probably start taking my profits a little bit sooner.
It kind of depends. So in some sense, I like Blue Wackadoo when he says, done for the day at 10:30 during our show. He'll write, done for the day, made this much. Now I'm going fishing, going to lunch. Like, I like that concept.
I think it works when you have a larger size parameter. I know Blue Wackadoo is not a one lot.
If you're going out further, we know on the open you can get really far, and then that decay comes in pretty quickly. Whatever Blue Wackadoo's doing, however far out he's going, he's doing $25 white put spread, $25 white call spread, and he's usually, and I don't know if we've heard from him yet today.
Not yet.
No, not today. That was 24 hours ago. So we haven't heard from him today, but I like the idea of being out and done and not worrying about it. It depends on your lifestyle.
Well, like I said, if I do multiples of it, I'll take a percentage. If I'm doing a one lot, I want the whole thing.
Like, let's say you are retired, or you only work in the morning, or you want to go out to lunch and out to the go lay in your pool.
You can leave them. You don't have to do anything.
I might like to just take it off 50% and not a care in the world.
So like I said, I understand what you're saying. You can have not a care in the world when you leave them as well, because you don't care what happens. Like at this juncture, like if you look at our SPX, go to our SPX right now. We did it yesterday. We put on the.
It's all in the money.
We did the downside SPX.
Okay.
No, see, that's what I'm saying. Like the downside SPX. So what we're doing with this, we're leaving it, right? So we'll see how it goes.
With these downside his question was just on the put spreads, and
I don't think there's a right or wrong. I don't think there's a right or wrong, and you don't have to say you're not carefree if you're not closing it.
So what I do want to say is we do have research to back up these strategies, and so you have research, and it shows you what has reaped the best results over the past 3 years.
Leaving the put spreads was number one.
Was it?
Yes, that's why I had JD doing that, because just the put spreads was that. And we'll go back and revisit it.
Yeah, well, let's pull up that study for another day.
We'll go back and revisit.
Find that study.
There's nothing wrong with it, but in my mind, because you get so much credit, the drawdown was so much less when you leave it. So think about it from this perspective. If you're getting $1 and you're closing 50, 50, 50, 50, you need X amount of wins to make up for it. But if you're taking the full profit, it's much less of a drawdown.
I get it. I get it. So here, SPX is such a big product. Here's our little broken butterfly that we have that we put on yesterday. Right now, we're
in a sweet spot.
So I'm glad this is happening, because we had the question of what's our management here? What's our management here? I bet it looks like a loser right now. Yes, it's an $80 loser. So someone might say, 0 day, we're out of time. This is a loser. What's our management? You go to the analysis page, and it's right in your profit zone. If we have a little bit of an up move, it could hit the perfect spot for this trade. So there is no management here.
No, there's none. That's what I said from the beginning. With these, there's no management.
If you had just a put spread and it was then the money and making you nervous, you could roll it out a day, or roll it out a week, or roll it out a month. You could roll it if the underlying's trading in the middle of your spread, you could roll it out as far as you want and not pay a debit for it.
So once again, nothing I say is advice, but I think your management in this is, I think your risk is managed at order entry. Personally, that's mine. My risk is managed at order entry. And guess what? I'm narrower if I don't think that risk is okay for me.
And when you're narrower, you can leave them. There are plenty of people who...
Yeah. If you've got a real wide one, then you're a little bit more nervous. Your risk, in my opinion, your risk is managed at order entry.
It depends on your size, your width, your risk. Because we've seen on the road, people doing very wide spreads, and when the market starts moving against one side or another, they're rolling down one side, rolling down the untested side, taking an extra credit. We see everyone has their own way. It's not it's not cut and dry. It's not like this is the same trade for everyone. This is the same management.
Mikey, I need you. It is the way. That's from Mandalorian. There is no baby Yoda. There is no this is the way. Pick your path.
It's not everyone sell $15 wide put spread at the 16 delta and take it off for 75%. Like everyone's got to come up with their own whatever they're comfortable with.
Yeah, I agree. Especially the zeros. I think the zeros are a choose your own adventure.
Yeah, right. I mean, there are people who just go out and buy the zeros and are trying to wait for a quick move to get out and not do anything other than just buy an option and use it like trying to scalp it.
Yeah, true story. All right, Jenny, I'm keeping an eye on the time. It is now 10:18. Do you want to get to Jacob's study?
Why, yes, Liz. So today for our market movers, we have an amazing piece by Jacob.
Yes, Jacob it's kind of the culmination of the past 3 weeks, all put together, wrapped up with a nice little bow.
From your words to Jacob's ears, short-term jade lizards, putting it all together.
Yes, so this is jade lizards. Now, I know the question that we got was on just put spreads. I feel there's a difference between jade lizards and put spreads.
Oh, 100%. Yeah, 100%. Because if it's running through your call spread and it goes all the way through your call spread, you won't make anything if you don't.
Or you could lose, depending on how you set it up.
Yes. So this is short-term jade lizards, putting it all together. We're going to take a look at what we've been studying the last 3 weeks and come up with maybe our final takeaway.
So, but I think, like I said, looking at this, he takes everything and puts it together. I think you could have a different takeaway than I have. I think people could have different takeaways.
You just said with these 0 days,
Yes.
everyone can, pick your poison.
Because he set them up a little bit differently than we usually do, so there is something in there that I don't typically do that might be.
All right, we'll go through the study and see what Liz is talking about. The classic jade lizard pairs a short call spread with a short put, collecting enough total credit to eliminate all upside risk entirely for short-term option trades, where only defined risk positions have reasonable buying power reduction. The naked short put is replaced with a wide put spread.
This is my first interjection into this. Sometimes I'll set up the jade lizards when I'm not collecting all.
Not collecting. It's very hard. This morning at 8:30 or 8:40, I was looking at the jade lizard, and it was very hard to collect the total width of the call spread without bringing that call spread way down.
Yes. So that's the one thing. I like to keep it wide. We like to keep them at the expected move, and it's okay if I don't collect over. Or the same amount. Over the past month, we've tested this structure across a range of expiration lengths, spread widths, strike replacements, and management approaches, all in short-term SPX options.
The question driving this series: does a structure built for weeks-long trades translate into a world of same-day and next-day expiration? So we've been doing long-term jade lizards, 45-day out jade lizards for a long time. So does that strategy, which has proven to be successful in the 45-day, translate to this 1 day, 0 day, 7 day, 5 day?
Short answer is yes. And today we'll walk through what we learned, highlighting the standout setups, and give a practical guide to putting jade lizards to work in short-term markets.
All right. Let's get into the study. Using over 3 years of data in short-term SPX options sampled every 10 minutes on the day of expiration and market open and end of day before then. So that's where it gets a little tricky.
Read that again from the top.
So using 3 years of data sampled every 10 minutes on the day of expiration.
Okay.
So if he's using a 5 day, he's only looking at it every 10 minutes that last day. Otherwise, at market open and market close the other days.
So he doesn't have a GTC in for it?
No, there's not a GTC.
So that's a big differentiator as well.
So I think, I don't know why. I know with the back testing, you can put close at 50%. So I'm not sure.
I don't know, but maybe that's next week. We'll see. Okay, across 4 segments, we tested entering short-term jade lizards at 0, 1, 5, 7, and 10 DTE, using a variety of combinations of narrow call widths and wider put spreads, and short strike placement ranging from at the money to 1.5 times the expected move, and managed with profit targets from 10 to 75 of max profit, stop losses at 100 to 200 of credit received, or nothing at all.
All trades were assumed to exercise at mid-price. All times are Chicago. Here is the trade entry, DTE. Choosing your expiration is the first decision. This sets the tempo of the trade and how actively you'll need to manage it.
Okay, the first from 5 to 10 DTE, our results were remarkably stable, leaving 7 DTE a natural default. But traders should feel some flexibility here. Okay.
See, so again, everyone has their own choice to make. After we read that study, we chose the 5 day, didn't we? After that study, I think we said, well, we kind of like the 5 day.
I started with the 7. That's where, and I'm the one who brought the study to them. So I started doing 7-day jade lizards, and they worked out very well for me. But then I got greedy, and I was like, I want more. So I started shortening my terms.
And I do think the 7-day had better average P&Ls, but then when you look at what you could have made in the 5-day, and then you're in another one quicker, again, no clear right or wrong. It's a choice.
So but before we read further, let's review the chart, because I feel like there is a choice here. I feel like there is a clear. To me, there's a clear. With the 30-day, 10-day, so you got a $30 wide put spread, a $10 wide call spread. The 0 DTE, you have an 82% win rate and your average P&L of 162. That to me is the winner.
And the 0 DT. On the 0 DT.
Yeah, so
I was just talking about I was talking about the billet where he said from the 5-day to the 10-day.
Because, but I will tell you, if you covered up the 7-day or you covered up the 1 day, I would be like, oh, they're all good. They're all good.
They're all good. They're all good.
They're all good.
They're all good. And honestly, some people, let's say some people work, they're a nurse working 12-hour shifts 3 days a week. So they're not in their computer every day. Then, you know what? Nothing wrong with the 7-day.
Because you work 12-hour shifts and you're off for 3, you can trade on Tuesdays.
You could only trade certain days of the week. Then they might choose the 7-day. Everybody has a different schedule. So you pick what suits your schedule. And these are not trade recommendations, but these are the results over the last 3 years of these 0 DTEs.
I'm a junkie. I've been doing the 0 DTEs.
And I like the 0 DTEs. And honestly, I've taken a hiatus from my 45-day because I keep rolling the ones I still have so many. I keep rolling them and rolling them.
Yeah. Okay, so then the 0DTE produced the highest raw P&L per trade, but with slightly lower win rates. See, it's 87 versus 82.
Right.
But you got to keep in mind, that's a daily P&L. Okay, so then with slightly lower win rates, almost no margin for error, resulting in a higher intensity trade that rewarded close attention. This also is, he's collecting the width of the $10 white call spread.
So you've
it's
got to
pretty
be bringing that call pretty far
in.
down.
Yeah.
1 DTE was the weakest fit. Overnight exposure undermined the structure without offering the efficiency. Because when you go 1 day out, you get further than the 0 day, but you've got that overnight risk, and you don't get nearly as far as if you're going all the way to 7 days out.
I also want to say, too, with his study, when you're collecting over, right? So when you are collecting over, you're bringing it in, you're not making any money if the market continues to go up. So the wider out you are, so if it blows through, you haven't lost anything, but you haven't made anything. And that factors in. Do you know what I'm saying? With the Jade Lizard, if you're collecting at least $10 on this, and every day, that means it's pretty narrow, and every day it's above it, that means you're not making anything.
But no, and my question is he putting in, is this just leaving them till expiration, or is this closing them at a percent? Choosing your expiration, 5 days.
Oh, it says 20% target, 50%. No, it's 50%. You can see 50% on all of them. Hold on.
25% profit target for the 7 day.
50% for the 1 day and 50% for the 0.
Okay, so these results are 50% on the 1 day and 0 day, or 25% on the 7 day.
But hold on. This is a lot clearer for me to read. The 1 day, I think this is the winners of all of them, was 25% of the expected move. 0.25 of the expected move, which means that you are really tight.
The 1 day.
In the 1 day.
Yeah.
That means he's bringing it all the way in. Now,
and the 0 days at the money. That's the only way to collect over 5.
Well, and it's over 10. It's over 10.
Oh,
and
over
you're
10.
Usually collecting about 12, which is why that P&L is so big.
Right. Okay. All right. Good thing we read this fine print.
There is the fine print. Jacob's really testing us on this one.
Okay. Once expiration is chosen, strikes. We spent that whole time just talking about days till how many days out we're going to go.
Yeah.
Once expiration is chosen, strike selection determines how much premium you collect, how likely you are to win, and how much capital you're putting at risk.
Okay. The put width drives max loss and buying power requirement, letting you determine how big you want to play it.
Because we must collect at least enough to cover the call spread, call width sets the ceiling on how far out of the money you can reach.
That is true. So with his, he's doing a true Jade Lizard, and we love it because he's making sure he collects it. Within any combination of widths and 0 DTEs, as far as going out of the money as possible, almost always gave the best results. Pick the widths that fit your risk preferences and see where you can place it.
So here, typical max out of the money. Do you know see how he has that approximate symbol?
It's approximate, yeah.
What do you think of when you see that?
Approximate? That's what it means.
Okay, every time I see that, you know what it brings me back to?
I'm sending it back. I'm sending it back, right?
Takes me back to the, I don't know where we're doing that.
At every sporting event.
That's all I think of when I
the way it was like this. Okay, so taking a look at this.
Yeah, there's no sporting event. There's no like Bulls game, Bears game that everyone in the crowd is doing this.
The Kentucky Wildcat. Okay, so taking a look at this, $10 wide put, $5 wide calls. That's at 1.5 the expected move. So that's going really far. That's the most far out you can get. You've got a 91% win. This is all 7 days. 91% win rate, but you're only getting $49. I kind of like expected move. My clear winner is stick with the brown bar.
Stick with the brown bar.
Go to
the expected move. Go to the expected. Okay, so this is all 7 day. And we've already decided we prefer the 0 day. So I'm just going to move on.
Keep going.
Okay.
Did you go to the next one? No.
I did.
I didn't.
Okay. With expiration and strikes chosen, the final question is how to handle the trade. How to handle the trade. So this is management?
This is management. Yeah, you can see the profit targets. Okay. So we've got, now it's like a head-to-head 7 DTE versus 0 DTE. Okay.
Okay.
At expected move or 1 at the money. Okay. Profit targets, consistently improved results. The question is how quickly you want your capital back. I want it back.
I want the 0 day.
Yeah.
I will happily take $162 in 0 days rather than $119 in 7 days.
These are two separate trades. I can't believe there's a head-to-head comparison, but it's kind of like, remember, what were they called? What were they called where they would like head-to-head? It was your son
Rock'em
loved the show.
Sock'em?
No, your son loved the show. They would be like, which Cheerios do you like? Or which cereal do you like the best? No, like this one versus this one.
Oh, Rhett and Link.
Rhett and Link. I like Rhett and Link.
I can't remember. Oh, good morning.
Good Mythical Morning.
Good Mythical Morning.
Okay,
That was
so
good. If no one ever saw it, go back and watch it.
So here's what I want to show with this. So let's look at the top. Look at this top bar where it says 7 DTE, 30-day put spread, $30 put spread, $10 wide call spread at the expected move. Okay, that's at the expected move for 7 days.
Yes.
The next one is the 0 DTE, $10, $30 at the money. That's the iron fly where you're collecting over.
So you're just, it's kind of crazy because where it says
they're almost different trades.
50% profit target, 75 profit target, that $160 or $141 is nowhere near 50. You're getting $10, so 50% would be $5. So it's nowhere near
The
what you're
target.
actually the target
Because you're getting the overage.
Because when you're doing the at the monies, you can only. Today I did a Jade Lizard at the expected move, put in my profit target for 50%. Today. Yesterday I did the Jade Lizard at the monies and I put in a profit target of 20%. You have to lower your bar on the profit target when on the
No, keep in mind, the way Jacob sets these up, you're always, all of these you're collecting at least $10 on. Every single one on the board, we've got $10 on.
Yeah, and honestly, the 50%, so
50%
you have to,
in the zero is the clear winner.
50% in the zero. If anyone asks us, but again, that's only if you're doing that money, $10,
And 5 hours, I can have $162.
I did
This
that
is on
trade.
average. We did it once, but we got burned.
We did. And today I just did my little baby, like $5, $20.
Yeah, I've been doing them every day and then letting them ride.
Rolling the dice,
But
letting
you
them
know,
ride.
once you get to that point, when you let them ride and they go winner, 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 you only need 4 winners to make up for 3 to make up for 1 loss.
Right. So here, if you've got a $30 ride and you're collecting $10, you've got $20 in risk. So but again, you're never going to have a full winner on that at the money. I'm going to go to the platform and just, it's too late today. It's kind of too late in the day to really show because this bar, the expected move for the day is really shrinking. So we're down to only $14. If you look right here, IVX, $14 expected move for the rest of the day. That's too tight. But what Liz and I are talking.
Well, and I want to show you. If you keep going, I don't know if you went to this slide. It'll show you the expected. He gives you a setup.
Okay, I was just going to show the viewers what we're talking about. When Jacob is putting on these spreads and he's saying $10 wide call spread at the expected move and $30 wide put spread, it's so tight. You're not giving yourself any room, which is fine. The results are really good. But what we're doing is we're going to the end of the brown bar, the expected move, and then putting on a trade there. And choose your risk, how much risk you want to take. But you've been doing this $20 wide, $5 wide.
I do 2010. I collect.
2010.
Yeah.
2010.
Yeah. That's exactly where I'm at.
2010. So $10 rate call spread, $20 rate put spread. And that's in the morning at the brown bar, at the expected move.
So I've got risk to the upside.
Yeah, you do have risk to the upside.
I've taken some off for a $100 win because it's gone through it.
Because your put spread is $20 and the call spread's
When
10.
I see it through it, I'm like, oh, I'll close this one today.
Maybe you should give Jacob a phone call to ask him to study that.
Well, it's so hard. The parameters are so difficult because if I wasn't collecting at least 580 or whatever my parameters are, if I did a $20 wide, $10 wide, and I'm collecting $2, I'm not putting it on.
I know.
We haven't been there yet.
Now today I had to bring my call spread in a little bit and I only got $4. I did $5 wide, $20 wide, and only got $4, bringing that call spread down a little bit.
Yeah.
So I just wanted to show people what we were talking about but I don't mind this, the $30 wide, $10 wide at the money.
No, I actually really like it. Okay, we've got 3 more slides.
All right, highlight sample trade 7 DTE entry. Highlight sample trade.
He's just giving us the entry about how he's got the 0 DTE, $20 wide, $5 wide, which is exactly what you did.
What we just pulled up.
But it's a quarter of the expected move. So it's not just what you pulled up. So you're bringing it into a lot nearer term, and that's why you're getting so much.
That's on the 7 day.
Correct. So if in this example, he's got the $20 wide, $5 wide, and he's collecting $740. That's why you're getting so much more. And maybe that's the way
in
we
the
go.
7 day.
Maybe we need to keep the overage on that call spread huge.
If you're going out further in time.
If you're going out further in time.
And then his next example, highlight sample, he's going to March 7th, looking at $20 wide put spread, $5 wide call spread at a quarter of the expected move. This is a 0 day.
Yes.
And so your quarter of the expected move, when we say go out to the end of the brown bar, that's the expected move. Quarter of the expected move, it's very tight, almost at the money.
Just move an inch away from it.
And here he's getting $7, $7.40.
Yeah.
So he's collecting quite a bit over.
The overages, I think that's what I love about this is Jacob took it and he's doing a true Jade Lizard. We invented the Jade Lizard, so you need to know the rules in order to shirk them.
Yeah, we break the rules, but again, you got to know the rules in order to break them. Let's end this with Jacob's takeaways. Short-term Jade Lizards, technically iron condors skewed to eliminate upside risk, have been a consistent winner in short-term SPX, helped in no small part by the bull market of our study period.
True.
They definitely, I think, have outperformed Strangles.
I think so too. And then the duration, 7 DTE trades offered steady, capital efficient results with a minimal day-to-day attention. 0 DTEs produced higher profits, but demanded active intraday management at closer to the at-the-money strikes.
Okay, all right, because it also determines the target width, because it also determines the target credit call with controls, both the max profit and how far out of the money the position can be placed while still collecting enough credit. While a long-dated Jade Lizard would use a naked short put, for short-term options, a wide put spread will determine the buying power.
Correct. Okay. And then short strikes within any combination of widths and 0 and DTEs, going as far out of the money as the credit allows will give you the highest win rate and has been consistently successful approach. Agreed.
Profit targets improved results across every configuration tested. Stop losses in isolation reliably hurt them. Stop losses,
that's why he didn't
we
talk
don't like
about
them. Yeah, we don't like them. Taking some profits is the main rule. The exact target is here we go. He says it right here. Taking profits is the main rule. The exact target is a matter of personal preference
and capital efficiency.
There, you heard it here. You heard it here first.
Whether a quick 0 DTE scalp or a multi-day 7 DTE position, there's a Jade Lizard setup that suits almost any short-term premium seller. And that is true. I look at things differently than, thank you very much. I look at things differently than I set up for my son. My son needs every ounce. He needs every ounce he can get, so his drawdowns are less. Do you know what I mean? Now it's going to be different, but you needed $1 in order to have it only be four of them that will make it up, because he will stop. This is true. If he had a full loss and was only getting 50 cents, 50 cents, 50 cents, 50 cents, and it was going to take 10 of them to make up for one loss, he'd be like, I'm out. So you know what I mean?
This has been an age-old question with option traders when you're selling spreads, right? And our research team years ago came up with the whole idea of, if you're selling a spread, collect a third of the width and manage it at 50%. So if you're collecting a third of the width and managing at 50%, that's not that different from JD getting $1 on a $5 wide and taking 80 or 90%.
All of it.
Right, taking almost all of it. So it's hard to find that sweet spot of credit to collect and when to take it off. But you don't want to be in a situation where you need 10 winners to make up for one loser.
Well, and that's why I like his sentence where you said it's a matter of personal preference. It's not personal preference. It all matters how much capital you have. Because you can take more risk the more capital that you have, right? So I'm apt to take in, I'm taking in, $10, and he's taking in $1, and he's like, well, I want $1,000. I was like, you don't have enough money.
It's about how much capital
it's
you
how
have.
much capital you have.
How much capital you have.
Yes.
Because the more risk you take, the higher the probabilities. So you see someone like Jack JT or Blue Wagadoo who will be taking a lot more risk, but they've got further out strikes. They're beyond the expected move. They're going beyond the expected move, and they're taking a lot of risk. And those have a much higher win rate, 90-something percent, 96%, 97% win rate. But they've got a lot more buying power, a lot more capital allocated to that.
Correct. More risk, more return is kind of the way to go with that.
All right. Are you ready to get into some trades?
I am. Let's do it.
First up, we're going to see if we have to manage anything.
Okay.
Now, this SPX, if we continue to fall down, this could be a full loser, and that can be painful.
These are ones you got to sit on. I mean, we bounce around all day, every day.
Right. Yeah.
Yeah.
And the only time...
Let me show what everybody's looking at.
The only time I just want to look at this just for the sake of questions of, I don't want this to turn into a I don't know how much risk we took on this $400 loser. I just want to take a look at this. If I bought this whole ratio spread back right now, it's $2. $2, right? $2 to buy that back. And if I moved it out to tomorrow and put on a ratio spread,
you have to take another $500 in risk, maybe even more.
And I bought one, sold two, bought one. You're paying like 35 cents to roll it out a day.
But why would you put a ratio spread right at the
you're right. If someone's worried about it losing today, then they want to hope for a bullish day tomorrow. They want to roll it out, give themselves one more day. I would never widen it and put more risk.
You can't roll a broken wing butterfly. In my opinion.
A ratio spread at the 45-day mark, when it gets to 21 days,
you can take it out.
You can take it out in time.
Well, there's no buying something. Your risk is managed at order entry, meaning like you bought that wing, you handcuffed yourself.
But for the answering the emails of people wanting to manage it, right now, this would be a full loss. If we fast forward to 3 o'clock,
no, management right now would be closing it. Management right now will be closing it. Your only management right now is close this and save yourself X amount.
Because right now, fast forward to 3 o'clock, this is full loss. But we would never put on a broken wing butterfly if we weren't willing to leave it till the end of the day, because that's kind of the point of the trade.
Correct.
I just want to put some of these emails to bed about managing.
Your management right now would be closing it. You'd save yourself $300.
So, yeah, you could save yourself a few $100s by closing it now. But then we would have, if we were worried about that, we would have put on a put spread instead of a broken wing butterfly.
Correct.
Okay, as far as big movers today, Apple down $4. We have on.
We just put on an Apple trade yesterday.
Yesterday, we put on a diagonal.
In honor of the World.
Yes. Guess there's
Digital Conference.
I don't know what's going on at the WWDC, but
26 WWD 26.
I will just leave that. We will leave that. Any other big movers?
Rocket Lab, we need to get the heck out of the way.
Okay, and Micron is another problem.
Well, that's because we are bearish Micron with Dr. Jim.
What?
We are bearish Micron with Dr. Jim.
Oh, yeah.
It was right on top. We sold it with Dr. Jim when he came on when we were on the morning show. This is something that we have, we're not saying Dr. Jim put us out, but I will give you something right here. There's a little nugget.
You've got quite the memory going on.
Thank you. But so I slept great last night. Okay, so here is the one thing I will say. We have the 930, 940. Okay. We sold it for $4. It's only trading $7.80 and it's $70 in the money.
Almost 100,
Almost 100,
right?
Maybe even more.
930,
so that's
$120.
So that's what I was going to say is this thing is not trading for a full loss.
No. Well, there's 2 weeks to go. And
once again, the management of this would be to close
it.
Yes.
Yikes. Yowza. I don't know what to think about this Micron position.
I'm glad we collected $4 instead of $2.
I'm just going to
because anywhere we would have sold a call spread, we would have almost been at a full loser.
I know. And that was, now it's all coming back to me. You had a lot of sleep last night. I did not. It's summer vacation. My daughter is on a mission to get through this series we're watching because all of her friends have watched the whole thing and they're talking about it. So she's like, Mom, we have to finish this series. So it was just one. She got home from dance at 9:30. She's like, can you watch at least 3 episodes tonight? I was like, well, that puts me at like 12:30.
Pour the wine.
Maybe I could make it through. Okay, so Rocket Lab, Liz mentioned this. We've got a lot of red on our screen right now.
Well, let's get Rocket Lab the heck out of the way. We gave it the old college try. We wanted to participate in the up move. Unfortunately, we didn't close it in time, so then we kind of created a short naked put. Now it's not doing its job. Now we've got the 9-day short 127 put. Let's get it the heck into the 45-day.
Rocket Lab's trading 115, around 115, 116. We've got the 127. When Liz says the heck out of the way, I'm not going to go to the June 15 day. I'm going to have to go to the July 44 day. And $14.95. This is going to be the second time we've done this because there's a lot of premium in Rocket Lab. Second time we're able to move it out. This is moving it down 12 strikes from the 127 to the 115. Moving it down 12 strikes and taking in a collection. Beautiful. Can you believe that? Moving it down 12 strikes.
It's a lot. But we are going out another 35 days.
And when I say taken in collection,
you're not paying a debit. I understand what you're saying.
Yeah, it's like 10 cents.
Yeah, we're not paying a debit for it, which makes me feel better to not pay a debit.
And so when we go out to July, we have $5 wide strike. So it's trading 115.82. Our choice is the 115 put for 10 cents or the 120 for $3.
I don't want to pay $3.
No, we could take in $3.
Take in $3.
Yeah. Okay. Then we're gonna shift it up a little bit. 120. Take in $3. Rocket Lab. Jeez. Yeah, okay. I don't know. It was funny. I was in the car and we had a handful of people in the car. I think all 4 of us and our family were in the car. And I was talking about Rocket Lab and everyone liked it. Everyone said, oh yeah, Rocket Lab. So I put on quite a position in Rocket Lab.
What do they do?
I don't want to say they're not like a direct they have some products that will be a competitor of SpaceX, but they also have some other space products. You can read it right there. What is
Rocket Lab is an end-to-end aerospace company that, of course it is, an end-to-end space company that manufactures rockets, designs satellites, and provides on-orbit space management services for commercial and government customers. It operates through 2 primary divisions, launch services and space systems.
So Rocket Lab has been taking me down lately. But with all that premium, you can't complain.
Well, what it gives you the ability to do is kind of defend. We've moved down by $7. We went from 127 to 120, if my memory serves right, and we took in another $3.
127 to 120.
127 to 120. Right? Didn't we go from 127 to 120?
Yes.
Okay,
yes.
And we took in $3. You know what?
The markets are a little wide.
Do you know why I think my memory is so sharp?
Why?
Because you know how when 1 cent gets taken away from you, your others get clearer?
So since
since I cannot see that, because I can usually see it.
Her mind is just
my mind
sharp
as
a tack. Sharp as a tack. I have to keep I can't even say penny this down. I have to keep nickeling it down. The markets are a little wide in Rocket Lab.
I don't like that.
I don't like that either. Rocket Lab. It's going to be another one that's with me for a while. Okay, finally filled. So to your point, if I go out in the activity and I can read to you how this Rocket Lab has gone in the last 14 days, I'll use my in Rocket Lab. We have $5 credit, $5 debit. That's a scratch. $9 credit, $8 debit. So we're $1 credit, then another $2 credit, and another $3 credit. So 3, 4, 5, 6. We have $6 in credit, and we have the 120 put, taking our break even down to 114. Yeah. And it's trading 115.63. Life doesn't get any better than that, Liz.
The power of options.
Life doesn't get any better than that.
The power of options.
Okay, so that's pretty good.
Speaking of, do you want to go see the new He-Man movie with me?
He-Man movie?
Oh yeah, it's out. It's Masters of the Universe.
Who is He-Man?
I don't remember who it was.
Depends on
but
who
the
it
power of Grayskull just reminded me of that.
Sure. Okay. Anything as I look at our positions, nothing looks terrible. Nothing looks too terrible. Let's go to you. I was going to say go to YouTube, but I'm going to go to Twitter. I'm going to go to Twitter. I'm going to go top down. Oh, Mikey. Do or do not. There is no try.
Yes, I was saying it is the path. It is the way. I didn't know that, but do or do not. There is no try. This is real Yoda. Baby Yoda from The Mandalorian, it says it is the way.
Isn't his name Grogu?
I don't think it's Grogu. I don't know, though. I don't know.
I don't know. What's Baby Yoda's name?
Are you asking the screen? Because I said I don't know.
I think someone's Grogu. Who's Grogu?
I don't know.
Okay. And Punish Pixels. Morning, ladies. In preparation for PDT Day tomorrow, we've got to have pop fire. What are those things where you pull the strings? What are those called?
Confetti?
Yeah, when you pull the string pull the little string and all the confetti comes out. We need blowers, hats, whistles.
It is going to be the greatest day. The greatest day. This is a day that's going to live in infamy. June 4th.
All right, morning, ladies. In preparation for PDT tomorrow, XSP, SPX, 0DTE, Iron Fly with expected move wings.
Okay.
Add a put butterfly below the put wing as wide as you like to protect you from a mini crash, provided it is less than the credit you collected. 2 separate trades.
All right.
Punish Pixels, that sounds a little confusing.
Go to it.
You want me to go to XSP or SPX?
Go to XSP. We can't afford SPX. Oh, I guess you can do put spreads. Iron fly with expected move wings.
Yeah, we have to go. Okay, 1 day.
In preparation for PDT day tomorrow. Yeah, I guess. Right?
0 DTE.
It says in preparation for better day trade tomorrow. SPX iron fly with expected move wings.
Yeah, I don't know if you want to go. Do it on 0 day? So an iron fly. I'm gonna have to go 1 day. There's nothing in the 0 day in XSP. Or I
Two separate trades.
And I hesitate at SPX because we already have that.
Yeah, that's why we got to go XSP. Do iron fly with the expected move wings.
So if I go iron fly, selling the at the money,
got it. Two separate trades.
Expected move wings.
Yep. Hit it. How much paying? Or how much you collecting?
We're collecting $288 with only $100 in risk.
Okay.
But this is very similar to the trade we have on, like where we wanted to just hold
today. Today we want to hold this for tomorrow. And then the other thing too is he puts a put spread on the bottom with he said to put a put spread on to protect you from a mini crash, which means he's buying a put spread.
Wing.
Below the put
butterfly.
Buy a put spread.
No, add a put butterfly.
Below the put wing as wide as you'd like to protect moving across.
Yeah, add a put butterfly. So let's say we had this on that ends at 7:53, and if I added this butterfly,
maybe the brain's not as sharp. I can't read this.
1 by 2 by 1. I mean, it's cheap.
You broke it. You broke a wing.
Oh, I did?
Yeah.
52.50. Oh, yeah. 10 cents. Add that to pick up in case you keep going down. These butterflies are cheap. It's not bad. But that's an XSP.
So if it's, I'll cash that on the
honestly, Liz, look at this. If that's only a dime in XSP, if I go to SPX,
it'll be $1. But he's in the 1 day. We're in the 0 day.
He's in the 0 day. We were in the 1 day.
No, we're in the 0 day. He's in the 1 day. You pulled up XSP in the 1 day. It's not the same strikes. You pulled up XSP in the 1 day.
I know. So I'm just want to see how cheap that butterfly is. I'm pulling up SPX in the 1 day.
Got it.
Because that butterfly.
You just want the butterfly?
Well, it seemed very cheap. How wide was it?
It was
I want to see. Here's $10 wide by $10 wide. $10 wide by $10 wide. Like, how wide can I get this thing for $1? 25. So $20 wide by $20.
You're broken on the one side. Yeah, there you go.
Yeah, here we go. $20 by $20 for $1. It's not bad.
It's protection for a crash.
Yeah, kind of is.
Yeah. But why does he think it's going to crash as a pattern day trading world? I think he thinks it's going to stay right there.
No, but again, when we look at people's messages on Twitter, there can be some confusion because I think he wants this all in the 0 day, in today, XSP. But we already have that position. We'd be overlapping it. That's why. But I like it, punished pixels. I like it. In preparation for the PDT, I put on a SIBO position. I don't know if you want to take a look at SIBO.
Is it down again today?
So SIBO has been falling, and I put on a bullish trade in SIBO in preparation.
It's up today. This morning it was
just
down.
a little bit.
No,
just
this morning it was
little.
down though. If it opened, where did it open? Its low was 22.73, so it was a little bit lower than this.
Right. Yeah, and I mean it was as high as 290.
Yeah.
Because did you put that on too?
No, I did not.
So I don't mind putting on a bullish SIBO position in preparation for the PDT to end. What do you think?
That's got to be a durational one because I think, I said, I think it's going to be a trickle down effect.
I did July.
I don't mind a bullish SIBO position.
What if we could just do a put spread? Here's a $10 ride for $2, or we can get a little more aggressive with the 270, 260 for almost $3.
Let's go 270, 260 for $3. It's fallen so much already.
I know.
It's got a 95 rank.
Well, look at the move it's made. In the last week, it's gone from 370 to 2. It's fallen 100 points.
Okay. But it is exactly where it was on March 30th.
I get it.
So that's the problem is if you just say, okay, well, you know what? It's March 30th and now it's actually whatever. It's not even that far. It's June. So you just gave back April. That's it.
I know. But in honor of PDT.
In honor of PDT.
And
in honor of where we are right now, we're bullish, SIBO.
And this will be, so we're sitting here in the pit, and tomorrow it happens, and we're just going to be in our home studio tomorrow. Mm-hmm. And this is our last trade of the day. It's 10:53. This is our last trade of the day.
Last trade of the day. Do it. Bullish. Bullish
put
SIBO,
spread.
pattern day trading rule. I don't think it's going to be a giant upward trajectory that day.
No, it's not like tomorrow.
Yeah.
I just think it's going to bring. I think it's going to bring a little more business to the SPX pit.
I was talking to another co-host who films from here, who's not on our network, and I was telling him about the pattern day trading rule, and it was one of those. It was like eye-opening when I was talking about it.
People don't realize how big it is.
I think it's huge.
So looking at this now, 1054. Keep these since you've got the sharp memory, Liz. I'm just looking at the put side volume for the 0DTE, 35,000, 47,000, 49,000. So in your mind, think 30, 40,000. 30, 40,000. On the call side, volume for today, 17,000, 25,000, 40,000.
So this is puts over calls?
Yeah. Well, right here, where we are right here for today's volume, yes.
That's pretty interesting.
Okay, so 20, 40,000 on the calls, 30, 40,000 on the puts. Tomorrow, end of the show, we'll take a look and see if we're seeing a big change. A big change in volume.
I think it's gonna be a slight change, not a big change.
I think, like you said, it's a
trickle down effect.
It's gonna slowly, just like JD's trading, then maybe one friend's trading, maybe two friends are trading. It gets more friends trading. As the word spreads that all these young kids can all start trading in and out every day, they'll get more and more of them.
Yeah, that's true. I don't think that they knew that they couldn't.
That's funny. And I did get to all the tweets, so we got to everybody. You know what we didn't get to?
Good. Earnings. Oh my goodness. AVGO has earnings and CrowdStrike has earnings today. So I have a very large AVGO position that I'm long. CrowdStrike, I don't know what I'm going to do.
So Broadcom, CrowdStrike, AI, and Ciena, all of those have earnings today. And we
do not have a position in any of them though. So I think that's why we kind of like
okay. So we'll see what happens. I'll be watching them. I don't know what I'm going to do, but good luck with your earnings trades.
Thank you. All right, everybody have a wonderful afternoon. And remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We will see you tomorrow.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with one or two clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
We built Tasty Trade's web platform for today's traders. Drill into data, find opportunity, and track the action with hundreds of indicators. Fund your account and start trading right in the app. Join the club. Tasty Trade.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Think you know where ball's gonna go? Test your theories with backtesting.
Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Trade what you want, when you want with Tasty Trade.
I got a good feeling. I got a good feeling.
What's up, Tasty Nation? Welcome back to the show. This is Options Trading Concepts Live. My name's Mike. I'm here with Jamal, and it is Glenn's day. So we have Glenn Freiberger here.
Hello. What?
How you doing?
What's up, man? Pretty good. I did. Apologies if my my demeanor is muted. I'm gonna give it my best shot. I haven't eaten yet. I did ropes and rowers at 6 a.m. today.
Did you? You're just letting your body decay after doing something like that?
I had one of those little Kai's bars.
Okay.
Whatever excuse for having a chocolate chip cookie flavored thing at 7 in the morning.
You're too young to be worried about this type of thing. I mean, really.
About my figure?
Are you in a deficit? You're trying to create a deficit here?
I'm not trying to create a surplus. That's
what I mean. Do you like play soccer? Like, I know you played soccer. Do you play regularly now? Do you play pickup soccer or anything like that?
No, I play tennis, and once or twice a year I'm in a pickup basketball league.
Okay. Tennis hack for you?
Yep.
So you know how like you go outside and you have to wait because all the courts are taken?
Sure.
So Whitney Young,
reserve, $15.
Yeah, you already know. You got it.
Oh, you're ready.
He's on top of it. I'm surprised I haven't seen you out there. Do you ever go out in the evenings?
I do, but not as much this summer yet. They've been booking up. It's much easier once school has ended.
Yeah.
Because they can't block off for practice.
Yeah, for like a day.
Team pickleball or something.
Don't you live on the north side?
No, I live here.
Oh, you do? Oh, okay.
But closer to the river.
That would be good. I'd like to see that match. I'd like to see Mike bust your ass. I mean, seriously, like.
You think that would happen?
Yeah, I do actually.
I'll take all the action on that.
This dude almost went pro. Did you know that?
I did not. Almost pro?
Not almost pro. Semi-pro. You ever seen the movie?
You got scared, didn't you?
Yep.
You got scared.
But no, I used to play competitively. I can play. Like I haven't picked up a racket in years, and I can still like serve and I will rush the net on you for sure.
And I will pass you. I will pass you. Without a doubt.
You got that bending ball around the net.
The banana ball?
Yeah.
Yeah, it looked just like Rafa Nadal in 2007.
There you go. Yeah, it's a great sport. You know, there's a lot of data saying that if you play tennis, your longevity just skyrockets.
Yep, you're just better than everyone else. You live longer than anyone else.
Yeah. Something like that.
Is the French Open still going on? It's still going on, right? Or am I
Still going on.
right?
Yeah.
Top seeded.
The last I checked, I was paying attention was Sabalenka and who was that? Oh,
Osaka.
Naomi. Who won that?
Sabalenka won, but she just this morning lost.
Damn.
So she was top
Who'd
seeded.
she lose to?
I don't know her name.
Oh, wow. I like Sabalenka and Naomi. That
Yeah.
one was hard for me.
I know, but they're both out. The men's side is wide open. Haven't had a major champion not named Sinner or Alcaraz since 2023. For certain, we will have a new champion this year. Could be second seed
Diana
Zverev.
Nader. Who is
Could be
that?
fourth seed Felix.
You know what's funny about Zverev? I was watching the U.S. Open one year, and I was like, what am I doing? Why am I not playing? I haven't played tennis in so long.
Yeah.
What am I doing? Zverev is sick. He's got that double chain look going on.
Yep.
I was like, I'm just going to buy all of his equipment. So that's exactly what I did. I bought his shoes, bought his
Adidas?
racket. Yeah.
Very nice. What about headband? You go headband? He's notorious for the headband.
Could do the headband.
But you did not.
When I play against you, I will be wearing a headband.
Okay.
Yeah.
Me too.
Well,
I love this energy. I
Good.
love it.
I've got the kind you tie yourself. Full
Oh, yeah,
Rafa.
that's the only way to do it.
Yeah.
Yeah. That'd be crazy if we both show up wearing headbands and shit and we can't even hit the ball. Yeah. Oh, man. Good times. Good times.
Yeah.
Great, fantastic.
But you guys are excited for game one tonight?
Finals? Yeah, for sure.
Game one finals.
Yeah, season's winding down. Was watching the game one last night of the NHL game. That game ended up being crazy.
I know, my Canes,
believe it.
man.
I-4.
Your Canes.
Yeah.
That was nuts.
It was
I was literally
something
sitting there, I was like, "Wah, they scored. Wah."
Yeah, yeah.
But yeah, I'm
tonight's
excited
gonna be
for
awesome.
tonight's game.
Who are you guys rooting for?
Well, I hope for Vecchio's sake, the Knicks win. Because if they don't, I think that might be like the most like he's already dealt with a lot of sports pain. I think that might
You say this,
Yeah.
but just remember how New York people are when they win. I don't know if you just remember or you forgot.
Yeah,
You will
it's chaos.
not hear the end of the Knicks
Yeah.
for a very long time.
Cars will be flipped in the streets.
Dude, I mean, it's going to be a crazy next couple of months if they win. It's not going to stop when football season happens because guess what? They will be in the booth at the game. They will show them at the game. It'll be, I mean, every single event that you can think of,
Yeah.
however, whatever it may be. I don't know, obviously not Met Gala, but
Yeah.
a lot of things over the next several months, they will be at, just so you know.
Yeah. It's
So
like
trust me.
it's like the Taylor Swift effect for Kansas City games.
Yes.
Every 3 seconds they just pan to her, see what
Yes.
she's up to.
It's going to be that
Yeah.
if they win.
That's a good take.
Yeah.
But
I don't have anything against either one.
I'm most excited to see where they sit Timmy, game one. Timmy Chalamet.
Oh yeah.
Oh,
You know, the Cavs they push him back to row 2.
oh yeah, because it's at Spurs, right? Yeah,
Correct.
That's Spurs. Yeah. Yeah, that should be funny. Oh yeah.
There's gonna be celebs everywhere.
Who are the celebs from San Antonio? Who are they? Like besides the former Spurs
Former players, yeah.
Who's famous from San Antonio? This was
Selena,
always funny to
Selena
me, like-
Gomez.
Who?
Spurs fan.
Is she?
Yeah.
Okay.
It's so funny because like Tim
Wait, so in
Duncan.
her-
Tim Duncan just like sits in the 300 level by himself, like drinking a Coke. Like I'm like, it's
I
so
know, it's
funny. He's
true,
so
right?
like he's so humble and just like subtle.
Selena's with Benny Blanco, right?
Yes.
And they have the podcast with Lil Dicky. You guys know this or no?
Okay.
My wife watches it all the time.
They are friends, so I believe you.
Do you watch the show, Dave?
I have watched it.
Okay, yeah. Great show.
So yeah, I didn't know that. She's one of them. Okay. Who's the?
Have you seen that show?
Dave?
Yeah.
I know I've never really watched it. Like,
It's really funny.
I heard it's really
It's just like Little Dicky's life. Like that's what it is. With Benny Blanco.
Yeah.
It's amazing.
Tommy Lee Jones, George Strait,
Tommy Lee Jones will not be there.
Brad Pitt.
Is George Strait still alive?
Lady Gaga.
Serious, actually. I don't know. Lady Gaga's not from San Antonio. What are you talking about?
This is what AI says are the celebrity fans
No
of
way.
the San
dude.
Antonio
She's from like
Spurs.
Manhattan. There's no way she's a Spurs fan.
Brad Pitt's from San Antonio? Or
just
is this
saying-
just like a
He's
general
from New
list of
Mexico. He was
fans?
born in New Mexico.
Reportedly a massive supporter who made headlines for paying $40,000 in an auction for an exclusive Spurs experience.
Isn't he born in Albuquerque, New Mexico, 1964? Just look it up.
All right, Rain Man.
All I know is Wemby's going to go off because he's playing at home. He can't play. He's just bad at away games. So that's where they need to win. And Castle is the MVP of this playoffs, I think, outside of Wemby. And Cat is their weakest link. Like I promise you, he's going to look like a child out there against Wemby. And he's always been foul prone. If he gets into foul trouble, they can't win these games.
Oh, this is a legacy series for him.
Yeah.
I mean, if he doesn't like dominate Wemby in this series, people will call him a joke for the rest of his days. Seriously. I mean, that's just what this is. This is what happened. So
yeah, you gotta find a way to stop Wemby, especially at home.
Good luck.
Dude, Wemby's crazy. He's just like swacking those 40-foot threes like it's nothing. I'm like, this is crazy.
I mean, I'm rooting for him. I'm not rooting against the Knicks, but I am rooting for him. I like him a lot. I love watching him. He's amazing to me.
He has that killer instinct that like all the analysts have been like, you're 7 foot tall, like you should be in 20 games every single time you're out there, like Shaq specifically. Like you can tell Wemby has that shark in the water.
It's coming. In 2 years, he will be the best player in the NBA.
Yeah.
He'll be averaging like 30 and like 15.
Yeah.
I mean, they're
He
building.
already is, Jamal.
Regular season, James? Regular season, that's what he averaged? Yeah, you don't have to look it up. I didn't think.
Show us the data.
First ever unanimous defensive player of the year, buddy. He's already the best.
Damn.
Oh, he's not the best player. He didn't get MVP. That's the best.
True.
MVP is the best. We need
What
unanimous.
does MVP stand for? It doesn't stand for best. There's no B in that.
Most people will argue that he wasn't the best.
MVP.
Valuable player.
He's not.
The
He's not there
MVP.
yet. He's not there
most
yet.
best player.
I'm gonna be
Jordan
Shaq right now.
MVP
Stop it.
every
He's
year,
not
though,
there yet.
remember?
He's not there yet. I need some Shaq numbers. He's not there yet. He's not the best player in the league yet.
You know who else is not the
Agree,
best player
disagree.
in the league? Pan W, down 15 points.
Womp womp.
Down 5%. I thought it was going to be a smoking hot calendar spread. Yesterday, it was literally just up at 3:30, and I was like, this is so funny. It's perfect. And now it's down 60
This
points.
is so funny. It's perfect.
Yeah, it was literally perfect. We had the 3:30 calendar, and it ripped up there after the close yesterday. And then they said, oh, Mike and Jabal have profitable trades. How about let's kill this?
I know we were over here like another one.
Yeah.
Yep. Go ahead and take it down.
Look at that. It was just chopping right here, 3:30. I was like, this is so great. This is going to be a $500 winner on a $1 debit.
And you spent it already.
We spent it already on San Antonio Spurs tickets. We got a NetJets coming too. And now we can't go. So, yeah, kind of crazy to see. Microsoft, too. Big sell-off in Microsoft from the highs, which is really interesting.
Interesting.
Considering
A very unbiased word for you to use.
Yeah. But yeah, I mean, it is still up from the beginning of the month, from May. But I mean, this has been a crazy 3-day sell-off after the big rally. But yeah, crazy.
I mean, this is a little bit of risk off. I guess this is about as risk off as it gets in these markets. I mean, it started. It's weird to say that it started with Bitcoin, but yesterday, Bitcoin being down kind of felt like people are starting to take some risk off. And yeah, to your point about Pan W, I mean, again, it's one of the first names that we've seen in a while in this space that did not just completely rip to the upside on earnings. And then you got this follow-on sell-off from yesterday with the software stocks. Got a little bit of risk off here.
Yeah.
It's not bad, honestly. I mean, it's annoying, for the positions we're not winning on, but it's really not bad.
Yeah, it's fine. Crude oil posting its third green day in a row, quietly rallying from the mid 80s back up to 96. Kind of insane here. We've been selling this premium in the 2-day cycle. I think I might just roll this to the 9-day. Actually, I'll just wait. No reason to. I'll wait. But it's crazy. You can pick up $2 every time you roll a week out. Staying in this near-term cycle, just picking up that premium here.
Mm-hmm.
And yeah, we'll see where it goes, but it's been a nice trade, at least just selling that premium in crude oil. And other than that, did I close something today? I think I might have. I don't recall. Everything's a blur. No, I did not do anything today. AI.
That's the only thing I did. I'm still going after it, but in a small way. Again, $243 buying these calls.
Oh my God, you're doing a full ladder.
Yeah, I did a ladder.
I love it.
I do ladders on the regular. I love doing ladders.
I mean, yeah, they're cheap.
Yeah, you know what I mean? Like, whatever. We'll see what happens. I don't really care. If it doesn't work out, no big deal.
Love it. But yeah, we've been waiting so patiently for this US dollar to rally.
Indeed.
It's going.
Boy, it is trying so hard to get us back to our little profits. Look at that, 4 days in a row. Please, just bring us to the blue bar.
Almost there.
And then we can see how much we collected in yield, which is probably closer to $400 now.
There you go.
Yeah.
Pretty good.
Is there a way you get to see that, like specifically?
You can.
Yeah, it's in your history, but to add them all together. You just got to download the spreadsheet and crunch the numbers manually, or just give them to Glenn. All your numbers to Glenn. He'll crunch them.
Email your numbers to Glenn. And
you're absolutely right. We've got a pretty critical day for Forex markets shaping up. It's kind of been a coin toss whether the U.S. session is interesting at all or if it's just digesting overnight moves. This is one where we are starting to see a continued dollar strengthening really across the board. But what stands out to me is we are approaching or getting past some pretty key levels. So looking at that headline, everyone's favorite Forex pair euro dollar now dipping below 116, although just barely in this spot market. But that's been the floor, tried a few times recently, and hasn't sustained any moves lower than that since, let's see. Sorry, my chart's so small. Since around this time of the month in April. So what is that, 2 months? 2-month low here, but we'll see if this gets bought up in that euro pair specifically. Across the globe, we have this dollar yen, which is now hitting 160 for the first time in not a long time, but for the first time since a lot has happened. This was around the price level where Japanese officials decided to take it down to the best of their ability. That worked for all of maybe 1 week before that got bought up. And this has been, not really a volatile tick back to 160 here. It's been a real grind higher for this US dollar. Japanese stocks, I believe, at an all-time high. They're still running the kind of fiscal stimulus playbook that is not doing any favors for their currency. We'll see if their appetite from the government officials is just as small for continued moves at this level. But we do know that they care a lot more about the velocity of this getting out of hand as opposed to any particular psychological price level for this exchange rate.
I'm glad you said that because, and again, not right or wrong, but I feel like there's a lot of people who talk about that psychological level being 160, and at some point that's the area where they might act. So and you're saying that's not necessarily the case.
It has been the case and very well could be the case again, but it's not. That alone does not exist in a vacuum. I mean, the years are blurring together, but I think in 2025 it got all the way up to 162 and change before they stepped in. So by no means is this an absolute level, but they have in verbal commentary numerous times talked specifically about quick moves, sharp moves to the upside, really where they start to take action. And you could see that when this happened at the end of May. It was back-to-back days of not the biggest moves of all time, but definitely some bigger moves than we've seen.
They don't look at the chart and go, are we at 160? We're at 160. And then
call it in.
Switch.
Take it down. But yeah, when we had a pretty strong move to the upside there, they stepped in and intervened. Here, we're sitting at, really every day in the past month has been an inside day compared to its longer term daily price changes. So I'm very curious to see what the appetite is there as we roll into the month of June. We've got bank meetings back on board. I believe the Bank of Japan is not until mid-June, but definitely something to keep an eye on, even if you're not speculating outright in that pair.
That's fun. I never realized that you could just move the little chart thing down at the bottom there, and that's how you slide it.
Mm-hmm. Oh yeah,
I didn't realize.
Our charts are pretty good.
Yeah.
Charts are solid.
Yeah, like that
a lot
little
of
bar
data
down at the bottom, you could just slide it. You knew this?
Oh, this, yeah.
Yeah, because
that little part,
Mike has.
But then you got then you click on the middle, and then you slide, and I didn't know you could do that.
Yeah, for certain pairs, we've got price data all the way back to 1990s. So this being one of them, a lot of data, pretty continuous feed. Yeah. Markets trading 24/5. But another one, just want to call out on Mike's radar in particular, this dollar Swiss franc.
Yes.
at a similarly interesting extreme, not by any sort of historic measure, not any more than a 1 month, 2 month price extreme. But looking at this chart, I mean, this has been a pair that's traded pretty sideways for the past 2 months and with an expanded range compared to that euro dollar, which has been pretty boring for the past month at least, sticking around that 116 level. So here, I mean, if you have conviction for a lot of the surrounding narratives for this US dollar, here's a pretty clean chart, at least, where if you're someone like Michael, you're looking to for a little bit more continuation, and then perhaps we get through what historically has been a clutter zone of resistance. Whereas if we get rejected right here, like we have 1, 2, 3, 4 times around this 79 Swiss franc level, then you could take a reversal stance on this, and you have about 100 pips of recent historical range to try and take perhaps even half of that, but sets up a more interesting risk-reward dynamic if you're just looking at historical price data. So an inflection day for the US dollar, what's happening in the past hour or so, we've got trade representatives talking, Besant talking. Only thing I see right now is a 15% tariff on EU goods. Is the deal, and a deal is a deal.
I hope it's okay if I ask you this question. I really don't remember like I know how we view it, but I don't remember like, is there like a calculation behind like the spread and like the swap bid and swap ask, and does that represent percentage yield? Like, what's the deal? Because like, for example, looking at USD JPY, like the spread is not $1.10. I mean, that's not the case. So what does that 0.1 mean? And what did like the swap bid and ask? Are those percentages, or like what's the deal on those?
Great call out. Let's stay on this screen right here, Mike. The spread, bid, and ask are all quoted in pips. So when you're just looking at that and you're looking what a pip is, a pip typically is the fourth decimal place, but this is a good example because for these yen pairs, it's the second. So if you're looking at the trade ticket, you'll see that the pip value in the buy and sell, we've got bigger numbers for what the actual, the rounded, I don't know the word for it, whole number, whole pip. So you're seeing that 04 is a whole pip, and the difference between that buy and sell is just 1.1 pip here. And so when you're creating your trade and your trade size, it'll tell you your dollar per pip. This yen pair is a little bit more confusing, but we've got an update coming soon. I mean,
it's like 0.03, well, like 0.027 versus 0.038. Yeah, this makes sense.
Yeah, and so if you know, pretty soon we'll have a release where this is all converted to US dollars for these non-dollar pairs. But if you're looking at a euro dollar or something and you have a trade size that's $1 per pip, then it's very easy to translate what that swap bid, swap ask is, because those are directly in dollars, larger, smaller, proportional. So that's how you walk through this part of the platform.
Thanks, buddy.
Good question.
Nice work.
Love it. Beautiful. I see you've got some slides for us here.
I do have some slides.
Gold versus US dollar. Yeah, please. Where does demand go next? If you want to join us on the YouTube channel, we're streaming live. Just pop over to Tasty Live, throw in your trade ideas, questions along the right-hand side chat. We'll get to them in about 8 minutes. Floor is yours, Glenn.
Thank you. Gold versus the US dollar. Where does demand go next is the question on my mind right now, and curious to get your thoughts on this because we'll walk through a little bit of the historical relationship between these two asset classes, a bit of a lens for what this particular backdrop is, and if we're at an inflection point or not. Curious to get your thoughts, but let's hop in to the first slide here. US dollar and gold, historically inversely correlated. No surprises to anyone, I think, but it's important to have this kind of graph in the back of your mind for what that rolling correlation actually is in practice, because fundamentally, if gold is priced in US dollars or any fiat currency, a stronger dollar will put some pressure on what that gold is worth. And that's why these markets are typically inverse, but to varying degrees, right? And so you can see over the long term, this is from 2015 on, only a couple of occasions has this 3-month correlation flipped to green. And we'll walk through that. Typically, that's a time of, safe haven demand, flights to quality out of risk assets and into more, historically safer yielding assets. But there's a lot of nuance to what spurs that type of move. And if it is a gold and US dollar, both garner demand in that situation, or do we get something like we got recently during this Iranian conflict where you start to mix in inflation, central banks, and the story isn't as clear because another key characteristic of both of these assets, one, US dollar can be interest bearing. Historically, most of the time, interest rates are above 0 for holding this US dollar. Gold, no such reward from an interest rate perspective. So going over to the next slide, let's get a little granular for FX traders. Where is this relationship strongest right now? This is a 1-month correlation. And the reason I zoom in a little bit is because I think we can agree that the situation that's garnered a lot of the macroeconomic moves lately is starting to mature. This market is not the same in terms of reactivity as it was in the beginning of March. So just looking at 1-month correlation, we are starting to see a resumption of this correlation, this inverse correlation. On the last slide, it was, we're not at extremes for what this inverse correlation can be, but definitely picking up, and it's getting stronger on a 1-month basis. But where do we look? Some Forex pairs are more correlated than others. So I'm looking at this Australian dollar, New Zealand dollar as popular, around the clock major pairs that can provide this kind of exposure, have historically. This dollar Swiss franc is a very interesting one as well. Switzerland and gold having an interesting relationship. And if you're looking into more emerging market currencies, which have their own risk profile and fundamental drivers, this dollar South African rand, because of some import-export in precious metals, having the highest exposure on this board. Anything surprising to you guys here?
No.
Not
really.
That's okay. That's a good thing. That you guys are tapped in, and this is absolutely as you'd expect it.
Yeah. But what stands out to you? Aussie dollar, New Zealand dollar?
Yeah, I mean, historically, we would see fundamentally, this Australian dollar perhaps be a stronger correlation than the New Zealand dollar, but New Zealand hasn't given as much, hasn't had as much domestic impact on this exchange rate as that US dollar side has for the past month. So that's how I would back into that. But pretty interesting that this Swiss franc is strong as well. But what I really want to get into is this next slide, because the big question is where do we go next? And let me know, do you guys agree that demand, maybe this is a silly question, but demand is a fundamental part of the future short term of both of these asset classes? How I'm thinking about it is, we're looking at a ton of interesting asset classes, and it's becoming clearer and clearer that demand might be limited. We're seeing shakeouts in crypto as a result, which might be risk off, but also funneling into the more hyped single name stocks. Do you think that there can only be one winner when it comes to these two assets?
Normally, I would say there can only be one winner, but we've seen some crazy stuff in these last 6 years, man. So it's hard to say that. I can't even say for sure that there won't be a time where they move together somehow. I feel like that happened a little bit at one point in time during the whole craziness of gold, because it just was able to benefit from narrative flexibility. So yeah,
Yeah, you're absolutely right, and that's exactly what I want to walk through on this slide, is just perhaps giving enough context to maybe garner some conviction in some directionality with these markets, because you have a scenario where we could go back to gold. Right now, we've been pricing in and pricing out the inflation effects from what elevated oil prices would do, how central banks would react to this. And so if this expectation goes away, central banks don't necessarily have to hike additionally to what they already planned to, then we could see this dollar soften and a potential for speculation to go back into gold markets. A converse scenario would be staying in this US dollar. If inflation is sticky, interest rates around the globe stay high or higher, then you start to see the marginal difference between a 0% gold interest rate and a 1 or 2% dollar rate may be less interesting than if that grows to remain near 4%. You could see some demand go back into the dollar. And the outside case, like you explained, is maybe one of those traditional flight to quality where you do see just risk off, irrespective of what the actual inflation concerns are, but just moving across the risk curve. Both of these assets could benefit, but that is definitely less likely in this scenario because the story is so inflation ingrained, and the expectation is that central banks will react as a result. But then the other super interesting backdrop of this is the price of gold alone in the past 2 years. So you start to think that this is definitely an evolving asset in and of its own right, that definitely has a speculation component too that might exist completely outside this story. So that's what we're looking at today. Wrap it up with some key takeaways on the next slide. What dollar pairs have been more correlated if you're trying to play some of these narratives in the spot FX market. But important to know that these correlations typically for longer term trading, because what all of those numbers tell you is the likelihood that on any given day, both assets are moving in similar or opposite directions. And so definitely for a longer term trading horizon, this Iran conflict has been a super informative exercise of when this inverse relationship can snap just because of the inflation dependence. And now I think we're getting into a completely different dynamic where there may only be one winner. And that depends on a myriad of things, but there's been a lot of volatility, and what that means, even for directional markets, directional speculation, is wider ranges to get in and out of potential positions. So definitely one to keep an eye on as we head into June and the summer months.
There can only be one. Are we still talking about gold and dollar, or are we talking about
Bob Rohrman
Knicks versus Spurs? I'm trying to.
There can only be one winner. And it's Mitchell Robinson.
He was thinking NBA Finals. I was thinking Bob Rohrman, the commercial. There can only be one. Bob Rohrman. Do you know what it is?
I don't know.
Of course you don't. You're too young.
How dare you?
I don't tell you. End of year interest rate targets. There is now a higher probability that we get a 25 basis point hike than staying at the current rate. So that could be interesting in terms of these currencies here, specifically the dollar franc that I'm aggressively long. But to your point, gold down 1% today, almost 1.25%. Aussie dollar and the New Zealand dollar are both leading the way to the downside in a positive correlation with gold selling off in the popular USD product. So it is interesting that you have this strong correlation, at least right now, that allows you to get similar movement, but also diversified product. And if one of those kind of breaks out into a pricing stream, you can play that.
Absolutely.
Especially with tastyfx, where you can get super granular with trade size, which is why I love it so much.
Double down.
And part of the reason we've been able to play, some upside in these tech names the way we have, and even if you're, is because we've been long the dollar. Like we've been waiting on this kind of thing. So
fair. Well, Glenn, I think it's lunchtime for you. I can see you're about to faint over there. Low blood sugar.
As am I.
Haven't had anything. Intermittent fasting is good for you.
So they tell me.
Yeah.
Beauty is pain. That's another one.
Yeah. But yes, thank you very much for your analysis. And
still Glenn's day the rest of the day, no matter what. Don't let him tell you anything different.
It's true.
Thank you, Jamal. You guys are nice in here. I need that confidence
it's out there.
for getting back out there.
I know. I know. This is a safe space.
Thank you. I always appreciate the time, guys.
Likewise.
Good to see you, Glenn.
Peace out.
Cheers.
Save some for us.
Yes, please. E-minis down 50, NASDAQ down 150. Bitcoin selling off more. Yesterday was a pretty big red day there. Down 1,500. ETH down 90 points. But yeah, crude continued to
I got something
rally
super
up.
interesting, but we got to housekeep real quick. We got to talk about tomorrow. We got a big day tomorrow.
Yes, we do. Tomorrow is a magical day. PDT going away. That rhymed, and I didn't even try to. That's crazy. But yeah, we're doing a midnight show tonight, believe it or not. So me, Nick, Chris from the tech team, we're going to just talk through changes tonight. And you can look at the YouTube channel. I think we have a preloaded show there. If not now, it will be this afternoon. But yeah, tonight we're going to be just chatting about the changes. We're going to pull the lever. It's going to be super fun.
Wait, what time does the show start?
Midnight.
Midnight. Okay, starts at midnight. Okay.
Yeah, it'll be 30 minutes just chatting it up. But really, there's nothing that you need to do on your end. If you have a Tasty account, you can just see the changes tomorrow. And if you were in PDT or a day trade call, those will just go away because the new framework doesn't have those within the structure of the new framework. So yeah, if you've been locked out in a margin account with PDT or day trade calls, something like that, you will have the freedom back to trade how you'd like. Cash accounts are basically unchanged because all these changes were based on margin accounts. So definitely check it out. Scan the QR code for more information. And yeah, we'll see you bright and early, midnight tonight. And then tomorrow we have a ton of content. We'll be chatting about new stuff you can do. And
we'll be at the SIBO.
We'll be at the SIBO.
And we're ringing the bell.
We are.
We're ringing the bell at the SIBO.
Yeah.
For PDT.
That'll be fun.
Yeah, Tasty Trade.
Hell yeah. Yeah, it's going to be a busy day, jam-packed day, but it's going to be a lot of fun. And hopefully this new rule change affects a lot of people watching, listening out there positively, as I think it will.
Yeah.
It's going to be great.
Awesome.
A lot more liquidity.
Yeah.
After this rule, I think, in a lot of near-term products, most specifically. But again, any restrictions that prevented people from trading will go away ultimately, at least from a pattern day trading standpoint, day trade call standpoint. So that just means more trade activity, more volume, more open interest, more narrow bid-ask spreads. It'll be good for the retail trader for sure.
And that's the thing. Don't be crazy about buying power. Don't mess yourself up on day one or even day 5 within the first couple of weeks, let alone we got another big IPO coming out in the 12th. So remember that. But honestly, I mean, when you look at this market right now and the things that are happening, we could be on the other side of some serious big-time movement. We talked about how low historical volatility has been. We talked about how low implied volatility has been. And things might kick up in a little bit. And that's when you want to be able to use day trades when we get swings, because we're probably going to get swings soon.
Yeah.
Or if not in the next couple of weeks, maybe next month or two, we'll see here. So, keep your buying power in check.
Yeah. That's really the most important thing. We talk about that all the time. keeping cash on the side, not being too over levered. And as long as you're doing those things, you will have the freedom to trade how you'd like. And speaking of IPOs, did you see the IPO, the valuation? It was
$135, right?
Well, the IPO like itself for SpaceX, they wanted like 1.75 billion, trillion, and they got like half of it.
Yeah. I did.
That's a slap in the face.
I saw something about that yesterday, but I thought it was just one bank. I didn't realize it was literally like.
Yeah,
that's crazy.
That is crazy. It feels like there's some beef.
Yeah, you
like, you want that? How about half?
I know.
It's kind of crazy. Did you get a stock price though? Was it $135?
That's what I saw today. It was like $135, and for that value, what is it, like 750 billion? Right? Is that what they got?
Yeah.
Right. Yeah, and then $135, I think, is the price target. So, we'll see how this thing trades. I might buy a leap in here. Like again, when the options open. I mean, that is a long ways away from. Again, it's not going to be that long after it starts trading if they put options, but there's going to be a lot of activity between now and then.
Yeah.
We'll see where this thing is. But
again, you can't buy puts. You're going to see the headline. We're sending people to Mars. We're sending Brad Pitt to Mars.
I know, right?
And that's going to just skyrocket.
That would be. I mean, I don't know. Who knows how it ends up trading? We obviously see different things happen with IPOs and they jump big, especially ones like these. But if for some reason that thing's trading like $130-something, that means leaps could end up being. I mean, like leaps, like 2028, Jan, probably could end up being in the $70 to $100 range. I got to shore up some cash in the long-term account. I'd like to do that. I'd buy that. I'd buy like $5 to $7 grand of a leap, 2 years out, whatever.
Yeah, Dude. I think this is it'll IPO at 135. It's gonna fly around. You're gonna see options listed shortly after. I would assume that you've got 80 to 100% IV, if not more, long term. And that's gonna just create a nice trading vehicle, especially if it stays in that $100 range, even like $100 to $200 range. It creates a lot of flexibility for traders of all account sizes.
Yeah, I would look at Tesla's. What's Tesla's volatility further out? I got a really interesting chart I'm gonna show you in a second too. It's crazy when I talk about it. You're gonna laugh. I didn't even notice this. But Tesla, and then I'd look at some of those other names as well. Like any what's Tesla, like 50 something?
Yeah.
And then what's like the biggest of those names right now? The biggest of the space names. Is it ASTS? Is it Rocket Lab?
Probably Rocket Labs.
Like what's market cap wise?
Rocket Labs, 83 billion.
83 billion? God, that's so small. That's so small compared to what this thing's gonna be. I'm just trying to figure out what a comparative vol is, but it's gonna be hard to do. I would guess you're right. Somewhere between 50 and 80 vol. That's a big range, but
yeah.
Check this out. So we're sitting here and Glenn's talking, and when Glenn's talking, we're paying attention to everything. I notice the trade goes up on the screen. Liz and Jenny, they trade SIBO. I know them and I know how they trade. They're trading SIBO. That stock must be down, right? Because they're selling puts. But why would that stock be down? Pull this shit up. Have you seen the stock price in here recently?
Oh, yeah.
I didn't know this.
It's crazy.
Them and CME, I didn't know these stocks were down like that.
Yeah.
Oh, my
Catching
God.
a bid today.
Oh, my God. Apparently, they're worried about perpetuals. CME stock, pull that one up.
Interesting.
Yeah. I did not know this. And I don't see anybody talking about this. No. I haven't seen this anywhere.
No.
I was like, whoa.
Yeah, these are
friends who I got to chat with. Those dudes have not talked about SIBO stock at all. They always talk about SIBO stock. They haven't talked about it at all.
Yeah,
I know why.
I mean, it's a big sell-off for sure. But is it to Liz and Jenny's point, is an opportunity to sell a put here, catch a little bid, because these options have gained a ton of value. If you look at the option chart, like this option was trading for $1 4 days ago. Now it's $1,200.
Yeah.
Just the at the money short put, but still a large priced product between SIBO and CME. So you need a large account.
I mean, you could do a spread.
Yeah.
Between the two, you could sell puts in one and sell upside in the other.
Yeah.
Choose how you lean, but I mean, there's a trade in here.
Ooh,
definitely a trade in here.
Maybe we could do what we did in Microsoft and do just like a Super Bowl with a put spread to finance a call spread.
True that. Oh, yeah.
In September?
Damn, I know. September's
July?
Out. September worth it?
September. Can we do September?
Where was this stock before? Over the 50-day is 317. That's only 30 plus bucks away.
Interesting.
E17.
Yeah, these are kind of tough.
I know it's hard to get it right. You almost have to go at the money, basically. Yeah. Like I got, that's $20 wide though. I don't know if I want to do that. I guess I do.
July, $2. Yeah, it's tough though because the premium's still really low.
Yeah.
Premium's low relative to the realized move for sure. Both of these have like 30% IV, 37% IV, so it's tough to sell premium unless you're, like Jamal said, right at the money, and then you'd have to buy something a little bit further out.
I mean, most of these perpetuals are already out, right? Like, are they out? And who's doing? I just assumed the exchanges were doing them.
Yeah, I don't know.
We're gonna look at this. We're not gonna do it right now on air. We're gonna look at this. There's definitely a trade in here.
Yeah, this one is interesting though. Like right at the money, 280, 270, 10-point wide put spread to finance a 20-point wide call spread at the money or at the expected move for $1. And then if you get a rally, you can make a lot more, of course, because you've got this 20-point wide call spread. Short put spread loses money. I think that's like the only way to set it up though. It feels like. Because like right now, the 250, 240, and then the 270, 290, same story. These are both $1.
Yeah.
At the money put spread, out of the money call spread, collecting $1 credit.
$5. You probably get filled $5. Back in the day when I worked at Big Six, we used to be like, okay, how many do you want? Okay, cool. And somebody else, one person execute it, and then he split the trade so that you don't mess each other up. Would you get filled $5? Would you get filled?
I'm gonna probably get filled at $1. If I were to guess, I'm gonna leave it at $1 for CME. So that's just 250, 240, 270, 290, and then SIBO.
You did you? Oh, I thought you were filled on something else. No, I didn't get filled at $5.
I'm just gonna leave both of these on for $1.
Yeah.
At the money, 10-point wide put spread to finance a out of the money 20-point wide
July
call spread.
Both?
July in both.
CME
and SIBO. I did both of them.
250, 240?
250, 240 in CME, 270, 290 call spread. And then SIBO did the 270, 280 put spread, 310, 330 call spread.
Like it.
For $1. Yeah. I'll just let him cook.
Yeah.
See if we get filled.
Like that. That's a trade.
Crazy.
Trade. I know, man. I didn't even know that these were down like that. Had no clue. Huh. Real-time trades, folks.
Yeah, truly. All right, popping over to the YouTube chat now. Let's see what the people have for us today. GTC is key. Yeah, so that's another thing. So like a lot of people, we have so many tools like bracket orders. We've got, so like bracket orders, if I just pull this up, you can click advanced here. Bracket orders allow you to set a order entry price, set a stop loss at a certain percentage of loss, set a profit target at a certain percentage of profit, and you route both of these together. And if one of them hits, so if your stop loss gets hit, it'll cancel the profit. If your profits hit, it'll cancel the stop loss. So you don't have these like resting orders that don't make sense anymore. But these are the types of tools you can use now post PDT, and you don't have to worry about like hitting a certain limit, because that was another thing, was like people might have been close to PDT. They step away from the platform. Now you can just have these resting orders that help you manage your portfolio because you don't have to worry about a day trade counter.
It's true.
Yeah. So things like this, I think, are going to be super popular. But yeah, check out bracket orders, check out GTC orders, because now you can just have them sitting there and it doesn't matter if you're filled intraday.
Yeah, and to add to that, like say you bought something, you get filled on, you have an order out there and you get filled and it keeps going, well, you can do whatever you want again. Like you're not worried about like initiating a new trade. And you know, it just opens up the world in so many ways.
For sure.
I can't get over that SIBO and CME.
I know, it's crazy. We'll have to look more into that. Some people talking about 0-day stuff. Some people talking about 5 to 7 day stuff. Yeah. Does Tasty have a section in the platform for option stats to analyze put call ratio, bid ask volume, delta ratios? You can see some stuff like in the overview here. You can see some other stuff like on your watch list tab, you can change a lot of these different columns. But in terms of like under the hood data, not as much. But it's not something that like drives my trading anyways. It's more about getting into a strategy that you can manipulate. Like that's my big thing is like, if you can manipulate strategy, you have way higher rate of success in the future because you can change where your risk is on entry. So, but yeah, you can look around and see if anything speaks to you. Let's see. No, my rule is no overnight options. Same thing. Now you can close. You don't have to hold overnight risk because you don't have the day trade counter. So that is good to go there. Let's see. What else we got? I saw a trade idea here. I lost it. Anyone doing an earnings trade for AVGO? There it is.
Oh, yeah.
AVGO. Broadcom.
You know,
this is one where I was like, this is guaranteed to go up because the rest of the market is just skyrocketing. Anyone that reports earnings, you just automatically get a 20% boost to your stock price. But that changed today.
It did.
So I don't know. I
mean, as just an exercise errand, I mean, you can look at what calendar call spreads cost.
Yeah.
1 week versus 1 week, 530 versus 530. Nah, it's expensive anyway.
5 day, 2 days, are you looking at?
I was looking at 9 day versus. I mean, I'm sure the 5 day versus 2 days is somewhat cheap, but yeah, 9 day versus 2 days, $3.72. So for those reasons, I am out.
Yeah, the 5 day, 2 days, decent. I've got both of these on, the 500 and the 510, long the 5 day, short the 2 day, and it's $2.45 total. So it's not too expensive, but
I'm just not that excited based on what I'm seeing the last 2 days, you know?
Yeah.
Like HPE, even that went, it did go, but it did pull back the rest of the day. I think that was kind of like the beginning.
Yeah.
I don't know, the last 2 days we're seeing a little bit of it's certainly not a pullback overall, but just some hesitance, I would say.
Yeah. I pushed this expiration to Friday, so it assumes you get all this value out of the shorts, and I crushed implied volatility by 40 percentage points. So I brought it down from 100 to 63%, which is kind of in line with these back months here. And it's still a $900 profit if you're right. I think I still am in the zone of like close my eyes and just place these cheap upside calendar spreads. Because yesterday, PanW almost gave us a nice winner, but like a $2 debit, really all you need is your long options 5 days out to maintain $2 of premium, and they're trading for $3,000 combined right now. So you'd have to hold this all the way to expiration to get like this sizable profit potential. But after the vol crush, if you bring this down 40 percentage points, you can see it does remove a lot of your profitability, but it's still sizable. Like even if you bring this down 50%, if you get a 50% crush in IV, you're still looking at a $500 winner if it lands anywhere between 500 and 510. The expected move is up to like 525, 530, but it would still be a profitable trade if you do get up there. But inside up move, I think is viable here. And again, small debit costs. You just need your long options to maintain this value. I think I'm going to do this. Instantly filled. Hate it. 250 for both of them total.
I kind of got these other long deltas in the space. I can just kind of see myself being annoyed if it doesn't play, and then those go down also. So I still have. Remember, I think I told you I legged out of. I had a strangle in Intel, and I legged out of the call side. So now I just have the put side. So you know I'm there. I also have NVIDIA calendars. Like I have August versus July calendars. If anything, I'm going to add to that. With that being down today, I'm going to add to the. I have the 240, 250. I actually closed the 230 the other day for a profit. Now that it's back down, I think I'm going to add to that. So I'm going to add that back. I got the risk on, I guess is really what I'm saying.
Yeah. Yeah, I didn't realize NVIDIA was down so much today.
I actually didn't either until we just pulled this up. Until we started talking about this.
Yeah, so I think like I like to go to just
Iron, you know, and the Oklo, you know, crabs. I mean, I'm in the space, bro. Like,
yeah. But yeah, this is nice. The nice thing about this current market is you can do these calendar spreads really cheap, and there's just so much premium in the near term cycles. So like Nvidia recent high was 235, we'll call it. If you go to July and you buy the 235 call for $5, and then you sell June against it for $1.70, like this is a cheap calendar spread, all things considered. And if you look at, if I were to hold this to, this is June 5th, but if I hold this to next Friday, June 12th, and let's just say you get a little bit of a vol crush here, 5 percentage points, like you can make $200 on this $4 debit. And it's a cheap way to participate in the sell-off today and have a really defined risk trade on. And you can still, if this 15-day goes to zero, you're still reducing basis by 30% on your long option, and you can still roll this short option into a 20-day cycle, turn into a diagonal spread. So let's see if I can get this instantly filled. Oh God, what's happening? 410.
AVGO, just come out and say something that you're doing something for that AI stock, for C3 AI. That would be awesome.
Yeah.
Get the stock up there.
ICE is another one in that.
Yeah, I looked at that one.
In that CME, SIBO.
You know what? Their stock, like ICE, SPGI, their stocks didn't look good beforehand. CME and SIBO were trading at highs. I'd rather play those.
Yeah. Dell. Okay, cool. 460 down to 414. Crazy. I've got a 500 strike calendar, July, August. Should I ever consider closing the short call when it drops? You could.
Is that thing trading for $2 or something? The 500?
Yeah, it's still really expensive.
Holy cow.
Yeah. So
No.
The problem is,
don't close that.
Yeah. The only way you close this call, from my perspective, is if let's say you sold it for $2,000, it's down to 1,600 today. Like, what is this net change today?
Hell am I?
Okay, so it was. Let's say you sold it for $2,500, it's down $800 today. If you buy back this call for $1,600 and Dell keeps dropping, you've just added $1,600 of risk to your trade. So the only way I would close this call, especially if your calendar spread was like a $500 calendar spread, something like that, the only way I close this call is if this call is trading for like $1 and you've captured $2,400 out of the 25 total, because then if you get, you're not adding too much risk to free up that upside profit potential if there's a reversal. If you pay $1,700 to close this call, you are changing the risk profile completely on your calendar spread that was cheap, and now all of a sudden it's a $2,000 calendar spread. So, that's the only thing I would do. You could consider like adjusting it, like buying back the 500, moving it up to the 520 for a $3 debit, and then now you have a diagonal spread. Like you could do something like that, but I think you still got to have a short premium component on here, especially when you look at the super high implied volatility in July relative to August. Like there's barely a difference in the expected move here, but you've got twice the amount of time from July to August. So yeah, that's what I would say.
I agree.
And with that, we're out of time. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler. Glenn is at Glenn Freibarger. Give Tasty FX a follow as well. Join us at midnight tonight. It's going to be wild. PDT going away tomorrow. We're pulling the lever. It's going to be marvelous. And yeah, just again, you don't have to do anything tomorrow morning when the markets are open. If you were in PDT or day trade call, it will just go away and all the changes will be under the new framework. So hopefully it is a benefit to you, but at the very least, you've got way more flexibility. Stay tuned. Plenty more content coming your way on the YouTube channel as well as tastylive.com. And we'll see you from the SIBO floor tomorrow. Peace.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today. Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
What is going on, everybody? Welcome back to Risk and Reward. Happy PDT rule removal eve to all those who celebrate out there. That's a tongue twister. Try saying that 5 times fast. And tomorrow, on the first day without the PDT rule, none other than our very own Mike Butler will be ringing the bell at the SIBO. I don't know if he mentioned that on his own show or not. Perhaps he's being a little too modest, but I'll put it out into the world. I'm joined as always with wonderful co-host Errol Coleman. Errol, how we feeling? What's happening?
It is PDT removal eve. PDT rule removal eve.
Yeah.
PDT removal eve. Congratulations. Happy Wednesday, everybody. No, I mean, I'm looking forward to it. I know it's going to be fun. I'm just curious to see if there will be any type of change in the overall sentiment. But overall, I think it's going to be exciting. Maybe the volumes will change. But honestly, after a few weeks, I wonder how much is going to feel like it's changed. I feel like it's going to feel like we're going to go back to normal a little bit there, but nonetheless, excited for it.
Yeah, it's funny, now being in a situation where the PDT rule doesn't really affect me too much anymore. It's almost annoying. I'm almost mad about it. Like, where was this when I was 18? It's when you graduate high school and then they immediately build like a new gym or something.
That's exactly what happened.
You move from a place and they build your favorite restaurant right next to where you used to live. It's it's one of those feelings a little bit. But obviously very happy and risk management just gonna be so prevalent for anybody with smaller accounts. I think that starting tomorrow there will be 1, 3, maybe 6 month period where lots of people blow lots of accounts before everybody kind of figures out the risk management of it all and gets it all honed in. But I suppose the counter argument to that is that there will also be lots of people who are able to do all the trading that they want and make lots of money. So, I can certainly go both ways. What's going on, Ranch? Good to see you. I don't have too much excitement happening today. Rivian is doing Rivian stuff. We're going to do this, and I think we can jump into the Tasty platform here. I think I might finally put my money where my mouth is and actually get some short Rivian in the interim here. We're currently trading at 1786 off highs of 1830 this morning. Mid 1830s. We touched, and as I say every time, when Rivian touches 18, it might be time to get short. We seem to be rejecting those levels pretty decisively. And with all the long delta that I have going on here already, I am tempted to, try to kind of, double doink a short into the middle here and just treat them all as independent trades of one another. So I wanted to have a look here and see, click the trade button, as I've done so many times, golly, and see what's happening with the options chain here. 15 days might be about right. I'm tempted to go even more aggressive than that, but I think 15 feels about perfect.
Did you say you still had on some of that Rivian position? I know you were long Rivian for a little bit.
Yes, still have on all my leaps, 107, 226, and 597 DT at 12, 25, 30. Debated getting off one of these off the highs this morning, but I still just like them. It would be this middle one, this 25 call at 226 DTE if I were going to get rid of one of them. This 12 remains in the money, so I'm not too concerned about it. I might even take assignment on that. I'm fond of Rivian as a company. But this 25 in the middle, that kind of seems to be the awkward limbo one. I don't know if we could sustainably hold over 25 before 226 days. I feel much better about the 30 that has 600 days left on it. But I'm going to continue holding all three of them at this time, just because, Rivian, I feel that I have a pretty good feel for this pattern at this point, and I'm about to hedge against it a little bit with a short in the middle here. I can get exactly 1-to-1 buying power to credit on the 18.5, 19, which is actually very enticing to me. Mm-hmm. What if we shift this up to 18? Do we just get an improved ratio? No, it's exactly the same. That's funny. 42, pretty much 1-to-1, no matter how we choose to slice this. So I will just take the highest strike that I'm able, and these are so cheap that I can get on quite a few of them and be able to scale out. Maybe like 10.
Yeah.
I don't think that's too crazy. My typical position size.
That's pretty affordable.
We'll fire on that. See if we can get a fill. I don't know if we're going to be able to. All right, I'll let myself get slipped $1. I'm not going to go more than that because there is 10 of these in the equation. But we'll move that $1 below the mid and see if we can't get a fill there. Working, just adding some short delta back in because Rivian, it loves this channel as we've discussed numerous times before, and I think we'll just see a return back down to these lower levels. In fact, you know what? This isn't putting my money where my mouth is enough. Let's be more aggressive. What if we go like 16, 17, something like that? Yeah, but I still got to post up 70 to get 70 credit. It's like, why would I do that? If I can't get disproportionate risk to reward, then there's just no reason to not take the highest strikes where that's something I'm allowed to do. Same there.
We're working it.
Higher? I can't. All right. Let's do 10 of these. This feels like kind of insanely free. Am I tripping? 70% pop with a 1-to-1. That's just EV. No, that's the way that I'm seeing this. So
that's pretty cheap. It's a cheapie.
Yeah, we can go a little below the mid there as well.
What do you got? 15 days on there? Is that what it says?
Yeah.
There we go.
15 days.
Couple weeks.
So that's insane. Actually, I'm shocked that I'm able to get that.
Yeah.
I'll make sure that gets posted to the follow feed as well. But you're telling me I can go $2. Well, I guess $1.50 above the current price with a vertical at 1-to-1 risk.
I'll take it.
On this thing that has shown such great resistance at the 18-19 level, that feels preposterous. So getting short Rivian against my long Rivian there, maybe not the most advisable long-term strategy in the world, but just trying to doink this dip here in the next 15 days, and then hopefully we'll see a return to higher highs. So that's going to be my strategic angle there. What's going on, everybody in chat? Jared, I moved to Iowa from Kansas City right when they built a Whataburger. Yeah, exactly. That's exactly
what happened in Colorado.
Let's get along MicroStrategy. It's time. Interesting. I'm willing to entertain that. Are you guys doing an earnings trade for Broadcom today? They report at the bell. I like this week's 3 DTE 580 425 strangle, currently at 480. So going for neutrality there on Broadcom. Jared, I'll circle back to the MicroStrategy thing because I have some takes on crypto at the moment. But yeah, so what were these strikes? 580 425. Yeah, so you're giving yourself $100 of upside, so some slight upside skew going on that one. I like that. I like that neutral angle. I feel like Broadcom is another one of these ones like we talked about with NVIDIA where it's so elevated and the contrarian thing actually is to go neutral. It feels like against something that's ripping like this, the contrarian thing is to get short, but I think that it's like nth level thinking, you know?
Yeah.
I think it's game theory, right? If a reasonable person thinks, okay, the chalky thing is to get long, so I'm going to get short, the like end of the two level thinking is let's get neutral. So I don't hate that at all. I think that there's certainly most of the good has to be priced in by this point at these elevated levels, but I'd be shocked to see it do too poorly either, especially if you have room all the way down to 425, which is like a big consolidation point. I'm fond of that. I'm fond of that trade. RZX saying gotta short that. Yeah, so RZX taking the other, I don't know, slightly less, slightly more contrarian angle.
Yeah,
getting short.
Just a little bit.
You doing anything on this for earnings today?
No, I'm not gonna be taking part of any earnings. I noticed it was really overextended, and it was one of those underlyings we could throw even in the watch list from the watches we were building with all the overextended names. I think AVGO fits the description, but no, I'm not gonna be taking any earnings trades. Probably just be sidelined.
Yeah.
Take some popcorn, see how it performs.
I feel the same. But everybody knows that AVGO got a special place in my heart. This should be a Mag 7 stock. Tesla shouldn't. We should be Broadcom instead. It's so big. It's such a big company. Why does it not get the same attention? I don't get it. This time it'll be different. Rivian to 100. I hope so, Grumpy Mike. I'd be fine getting burnt on those 10 that I just threw on if it goes to 100. That would be very welcome. I'd probably be out at 50, to be honest with you. I don't know if I'd be holding all the way through to 100. I don't think I heard much press from other brokerages about PDT ending. I think all the others are delayed. I can't find a press release from Hood. Not to give anybody else any credit, but my understanding is that Robinhood and Webull are the only other ones that are prepared for day one. Everybody else is going to have slightly longer than that as they figure things out. It's us, Robinhood, Webull.
That's tough.
To my knowledge. But if Robinhood hasn't put out a press release, perhaps they're not ready either. I can't exactly speak to that. I haven't seen these.
Robinhood was too busy building out whatever else.
Oh, RZX was talking about Rivian with saying gotta short that. I see. Okay, well then we're perfectly aligned, RZX. Apologies for the misinterpretation. What's going on, Sergio? Good to see you. Yeah, so I agree with the Broadcom strangle. I'm fond of that. And then yes, MicroStrategy came up. Crypto was crazy beaten down. Let's look at the broader crypto market here. Bitcoin back well below 70, testing 65 currently, just below 66. This is pretty much the lowest lows that we've seen among this drawdown. We've been as low as 63.5 before. Aside from this one wick down to 57, we don't talk about that. I think this has to be a buy spot for crypto here, down at these lows. I did really, 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 really bad with my personal scaling into crypto. I was getting long, all the way through this drawdown, so I'm in a bad spot there. But I do like the MicroStrategy play just to give yourself a little bit more leverage. I think that's the only time MicroStrategy really makes sense to use as a trading vehicle is when you think a move could be coming quickly and you'd like a little bit more leverage behind it. That's basically what MicroStrategy offers. So I'm willing to entertain that. Obviously, pretty much the same price action here as Bitcoin. But yeah, you can see, the MicroStrategy is at 200 when Bitcoin is at, what was this? 85. So the 65 to 85 move in Bitcoin, which is obviously about 33%. If you take that over to MicroStrategy, is a 50% move, a 55 or 60% move. So that's sort of the leverage that I'm talking about here. Yeah, I'm willing to fire on this. I already have, what do I even have here? Something stupid, I think. What's my current MicroStrategy situation? Let's evaluate that before we get too deep into the weeds here. Yeah, I have a 240, 250. Man, that's dead in the water. Let's get this off. Clean slate. See if we can't get a fill. Oh, sick. I'm too cooked. You can't clear? Oh, duh. There we go. Yeah, okay. So that's irrelevant. I don't want to be too tight. What do you think? What do you think is a reasonable time horizon for crypto to recover? Like just Bitcoin back to like 75. Like it doesn't have to be anything crazy.
Man, I'm thinking maybe a little further out. Maybe 46 days or minimum. Maybe even further out than that.
Yeah,
and this is a lot of bearish action we've seen on some of the cryptos in a while. And
I agree.
The fact that Bitcoin hasn't made lower lows yet. Yeah. And the fact that Bitcoin hasn't had any lower lows yet has me a little bit concerned with the MSTR long right now. So maybe giving ourselves a little bit of room, some extra time, that'd be nice. But
yeah, this is a big jump. Like I'm eyeing this 44. I just wish there was something between this 44 and this 79. That 35-day gap is immense. I think I'm gonna go for the 44, and we can go kind of considerably out of the money here. Definitely want to be defined risk. But I'd be willing to, like, what's 145, 150 look like? 164 buying power for 333 of credit. I don't mind that. What if we go down a little bit? 165 for 335. Obviously a wider spread on that one. Yeah, let's take a shot at this. I think I'm gonna have to go out a little bit to be able to get a fill. There we go. Got better than my limit. So yeah, okay. So now this thing is dead. I'm just not able to take it off. That's because it's too dead. But yeah, we're adding the 145, 150 short put vertical there on MicroStrategy. Just looking for a return to that 145 level, which should be proportionate to something like 72,000 on Bitcoin. 75 would certainly do it, and I think that's fairly reasonable in the next 44 days to me. If we don't get a confirmed break below these lows, if all of a sudden Bitcoin like shows a confirmed break below 60 and continues sliding, we'd be in big trouble, and I would look to get out. But this sell-off has just been too pronounced, and MicroStrategy does afford a lot of leverage for you. So I'm happy with that.
Yeah, 100%.
Charles Schwab the 8th, I see. It's a good info page. I did a Super Bowl on MicroStrategy. Super Bowl. August 21st, sold the 120 put. August 21st was the 79, right? That's as I recall. I mean, I suppose I know that's 79 days away, right? Yeah, 79. Sold the 120 put, bought the 110. Then I bought the 150 call, sold the 160. I see.
Okay.
Yeah, that is a Super Bowl for sure. Interesting. Yeah, I'm just gonna go a little bit tighter on the time horizon, but we're thinking the same way there. You're going the 150, 160 on that slightly longer expiration on the top end, and yeah, I'm rocking with the 140, 145 on the shorter dated, but same thesis. Hopefully, we hit mine right on the way to yours, Jared. In it together. But yeah, that's kind of the excitement that I've got, especially with those two new positions now added. The Rivian shorts, the MicroStrategy longs. Not a whole lot else really jumping out at me in the portfolio here. IBM sliding on the day, all of a sudden testing my strikes that are 226 days from expiration. I was a bit too generous with my time horizon on IBM. I was certainly not expecting this.
I mean, that's to see that in IBM, that's really impressive.
Yeah, yeah. This was one that I just like hilariously bottom ticked. I do this whole thing and I'm like, oh, well, let's take time out of the equation. Like it just feels inevitable sometime in the next year. IBM's got to return to the highs. Then it takes like 2 months.
if that.
Yeah,
if
and
that.
you're right there.
Like 7 days.
Yeah, but that's the action on my end. What you been slinging over there?
Yeah, we can jump to the Tasty platform over here. Really haven't been doing too much. What do
you think? Sorry to derail there, but I know your preferred product is broader markets and the Nasdaq and things.
Yeah.
Do you think we're going to see a pronounced increase in volatility tomorrow with everybody all of a sudden being able to day trade?
That's a really good question. To be honest,
and maybe volatility isn't even the right word, but just unpredictability.
Yeah.
In general.
Yeah. I mean, maybe. I think we'll probably see a lot of the 0DTE volumes. Definitely see an uptick in those products. A little bit more volatility. But will it affect the entire industry? I don't really know. Maybe a little bit more volatility at market open. Maybe a little bit more volatility at market close, since there's going to be a lot more traders trying to get in and out in the same day. So I could see around 9:30 Eastern and around 4 o'clock Eastern, I could see a little bit of an uptick in volatility, but it's kind of how I view it.
I think the stop hunters of the world are probably licking their lips.
Licking their chops right now.
Yeah, oh yeah, and like I think if you're a Jane Street or somebody with virtually unlimited capital like that, I think you definitely are there's blood in the water with,
Oh, yeah,
with all
100%.
these people just having the restrictions taken off.
Yeah, no, 100%. I mean, I'm looking forward to it. We'll see what happens. I know less than 24 hours away. Tomorrow morning, we'll check out 9:30 or 8:30 Central. See how if we see any changes of behavior, any changes in character from what we normally see. So
yeah,
it'll be exciting. We'll see what we get.
We will. But anyway, yeah. Sorry.
Yeah.
Back to you.
No, 100%. Yeah, no, we'll see. But we did a little bit in the micro NASDAQ today. A really solid trade idea that we were looking to execute on, but we had to manage it because of the volatility that we'd seen in the morning. And we'll jump to the TradingView platform. We'll go over those entries and exits here in a little bit. But Meta's finally coming back into our favor a little bit more. We sold an out-of-the-money put spread there, 15 days left to expiration. Super volatile underlying we've been trading over the last few days. You can see Meta was kind of basing around that 606, and then we popped to about 638, and then we sold right back down to 602 where we initially had the position on, and then now we're getting a little bit more of a pop to the upside, and the position is sitting happy in the green right now, at least.
Yeah, the moves in Meta are insane.
Yeah.
It's ridiculous. I mean, you're talking. I mean, it's like a 5% move we're talking about.
Yeah, no,
there.
it's
And
insane.
It just does this all the time. Up 3% today, and we're not even nearly engulfing the candle from 2 days ago when it sold off like 8%. I mean, yeah, Meta.
It's a wild one.
2 or 3% is like nothing for Meta. You gotta get over 5 before it really starts to feel like Meta is actually doing anything.
100%. It's nice that Meta's coming back around a little bit there. We'll look to manage this one. We might even manage it a little bit early because we are at 15 days left till expiration. So maybe we'll squeeze out $50 to $100 in this, and then we might take it off the table. But shout out Zuckerberg, popping this stock up for a little bit. We took a little bit of a position in Micron today. We had bought one of the puts. We just kind of scalped to the downside as NASDAQ was selling off. So that's why we felt comfortable in doing that. But we do have Micron in the portfolio or in the watch list that we were building that's super overextended stocks. So it's going to be fun to just continue to stock Micron to see what it can do. The fact that it's easily trading over $1,000 is absolutely wild. So we'll keep an eye on it. We were able to squeeze out $100 from it in just a few minutes today. So that one was nice. And then we also bought a put today on QQQ. This one's up about $150 right now. I think we're going to hold it a little bit longer to see if we get a little bit more downside. But 9 days left till expiration. We will most likely take this off within the next 24 to 48 hours. If the market wants to reclaim the levels that it was trading at or the highs, we'll go ahead and take it off at break even. But since it's sitting in the money, we'll give it a little bit of room to run. I was considering selling Nike. Have they been talked about yet? No, we haven't touched on Nike recently, at least. Have you taken a peek at Nike, Gus?
No, I haven't. I was long some Nike there for a second off the bottom. I don't know. It still feels dangerous to get short to me. Like it's shown that it really does have a pretty strong support going on at like this 42 to 42 and a half level that we're approaching right now. But honestly, there was a time, especially right after the gap down and it was trading at these lows where I kind of felt like a recovery was inevitable. Now I'm not so sure. I think neutrality is actually the most attractive angle to me for Nike right now. If you could do an iron condor or a strangle if you're a big bank, something like a 40-50, or if you want to go tighter, like a 41-47 could maybe work. I think that's the way that I would choose to play Nike at this time. I also saw Money Mike mention QMCO. Money Mike with another obscure moon stock here. I don't know if you mean to say that you're long this right now, Money Mike, but I know you have an affinity for finding these spots. But yeah, quite overextended. Maybe something to add to the Spurs and 6 watch list here.
Yeah. We're going to have to consider that.
And as you alluded to, these memory stocks are it's insane. Micron and SanDisk, like, do you think they saw this coming? Obviously, they knew to an extent. Like, you have your ear to the ground. Like, you can kind of see where the trends are headed. And I'm sure that they knew, like, somewhere here, all of a sudden, we're going to become a giant piece of this whole AI thing. But do you think that they could have possibly foreseen these types of gains? Like,
no, not
is the SanDisk CEO telling his wife at home or her husband? I have no idea who it is. That our stock's gonna be worth $2,000.
Yeah,
we need to buy all of this that we can. It's insane.
Yeah, no, not at all. Maybe not even in their wildest dreams. I'm forgetting his name. Jensen, the CEO of NVIDIA. He was even mentioning people had asked him that before. Did you see NVIDIA getting to this size? He said absolutely not. He happened to be building something in an industry that he knew was growing, but for him to become one of the most important pieces to the industry, he would have never thought in a million years. And I think it's one of those things where you kind of roll the dice, and then sometimes you end up a little bit bigger than you would have anticipated.
Yeah.
So I think that's what's really happened in this industry so far.
Always a little bit of luck involved when you're talking about
100%.
This type of growth.
Oh yeah, and I mean for most billionaires, even Mark Cuban and across the board, for the most part, they say a lot of luck was involved. Like they probably would have ended up as multimillionaires, but the way that the dice landed for them propelled them above their peers in the same industry as well. So I think it's a little bit of there's a little bit of chance involved when it comes down to
you can certainly increase your surface area for that.
Oh, absolutely.
The SanDisk CEO has a much better chance of becoming a billionaire than me because he's the CEO of a memory company that's in this industry.
Right.
But it's
I more so meant within the peers within the industry.
Yeah. As far as like the difference between like 100 being worth 100 million and being worth 2 billion, like there is some luck in that.
100%. 100%. But no, with that being said, we'll be patient with QQQ. We can go ahead and jump to the TradingView platform here.
Micron, the former TSM CEO or CFO, forget which, bought $1.5 million worth of it at the high when it went at 250. It sounded nuts, but should have listened to the money. Yeah, he's got a 4x going on that already. That's nice chunk of change.
Yeah, as the market opened up, we pulled back a little bit here. We were looking to get short, and we were so convicted in the short, so we started to size up with 3 contracts right off the bat. So we took a few stabs at it. I had a super tight stop loss. And something I should have, could have, would have done was just widen the stop loss on this one, at least to the swing high. Give yourself a little bit of room to run. And maybe use 1 or 2 contracts rather than 3 if you want to have a little bit of a wider risk. Because of that super tight stop loss, we ended up missing that 100-something point run to the downside in just about 3 minutes. So that was a little bit bittersweet, right? Starting off the day like that, having such a convicted idea, and even having the direction right, and then you still stop yourself out of that position. So just starting off the day, we were already down about $370 just off that trade. So you can already see getting into the day, it's like, all right, let me become a little bit more patient. Let me pick the spots a little bit better. But whenever we had retraced back to our value area high, we got a couple more opportunities to take some scalps off of that. So we're kind of in defensive mode at this point from the first trade in the morning. So we use these second and third opportunities throughout the day to scalp off that value area high, just to recoup some of the losses that we incurred from the first trade of the day. So starting off like that wasn't super ideal. It would have been nice to at least use a wider risk, maybe smaller size, to catch more of a downside move. But again, whenever we did retrace back to our value area high, that's when we bought the put on QQQ. So if the market can continue to sell off or just hold down here for a little bit, we'll let that marinate for a few minutes, but got a few hours of market open left. We'll see what happens. That's kind of how the cookie crumbled today. Hopefully Meta can stay upright for us. We'll continue to stock Micron and all these overextended stocks, but that's what we got on the day, and we'll circle back to tomorrow whenever we have the PDT rule out of the way.
Yeah.
We can trade Micron and QQQ and all these other products a little bit more often, with respect to our risk, of course.
Yeah. Who knows what type of fun tomorrow might bring with PDT being taken off the table. But yeah, that's gonna be about all the time that we have there. Jared, almost like we need trailing stops. Been a while since I mentioned that. I'm team trailing stops with you, Jared. I understand it.
And yeah, oh man. So today, Jared, I brought my stop loss from that swing high and I pulled it all the way down to the most recent high that I was sitting at, and then I had to stop me out. So I kind of got in my own way with my own manual trailing stop on the day. But with that being said, we'll see what we get over the next couple hours.
That we will. And that's going to be all from us today. Thanks so much, everybody, for watching. We dearly appreciate it and never take it for granted. Aaron and I'll be back here tomorrow with no more PDT rules. Same time, same place, 12 o'clock noon Central Standard Time. Be sure to stay tuned for Futures Power Hour coming up next. We'll see you guys next time.
The old PDT rules are going away, and tastylive is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the tastylive viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
In the money. It seems pretty easy to understand. If I'm in the money, I must be profitable, right? Not quite. In the money is in reference to the option's strike price relative to the current price of the stock. An in the money option is an option which has intrinsic value. For a call option, that represents an option with a strike lower than the current stock price. For a put option, that represents an option with a strike higher than the current stock price. Being in the money is a good thing for long options. It's not so good for short options. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Yeah, enough fun on the block all day, all night. Is an A and no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Wake up, sun grinning through my window. Text my crew like, what's the plan? Let's go. Shirts, wrinkled jokes, twisted, nothing too official. The outside flexing on my bike, out the bell with the whistle. Corner store, pick up chips, 2 shoulders. My board in the slides, trying to dump on the stroller. Kids running loose, auntie sipping lemonade. Every front porch got a beat, yeah, it's homemade. No drama, to see waves of laughter. If we got problems, could we solve them after? Grilling on the curb, grill marks on the shirt. Somebody brought the tools, man, let that loop.
We're back. It's still Wednesday, June 3rd, 2026. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's your co-host, Thomas Westwater. Thomas, it's an odd day out here in these markets. Oil's inching up again, which isn't a surprise given the headlines here, but lots of weakness in crypto, lots of weakness in growthy, long duration names. I can't help but ask myself, are traders just selling things off to try to find cash for SpaceX over the next week?
It's possible. I mean, I wouldn't put that past anything, but yeah, why not? I mean, this is going to be a really, really big IPO, biggest ever.
Biggest ever, more $2 trillion, 1.75 trillion maybe. We'll see where it comes in right now. Today's market action largely defined by a small pop in volatility. The VIX is about 50 cents higher here at the start of today's session. We have volatility futures up about 13 cents, however, so not exactly a huge source of concern. But gold and silver are facing a lot of pressure right now as yields creep their way up. The Russell's back to a particularly important level, and broadly speaking, all markets are back to their trend support. So, Thomas, we're going to dig right in here. Before the show, Josh asked me a question. What's the profile for stocks over the next few months with respect to the midterms here? Because at a certain point in time, we're going to, start to focus on that and bring that into the equation as a factor. Generally speaking, it does seem like markets don't pay attention much to the election calendar until you get through Labor Day or so, maybe earlier. The seasonality for this is a little bit mixed, Thomas. Orange line here on our chart is the year-to-date performance in the S&P 500, June 3rd. The blue line here is the average midterm year, 1950 to 2018. I could not get the 2022 data incorporated, unfortunately. But the general broad stroke here is that we do see that from April through roughly August, the market tends to come back in a little bit. I'm curious, though, given how the Iran war is raging on and there seems to be no resolution in the very short term, at least we don't have one yet. Are you expecting midterms in the US to become a factor, or has politics just become a constant noise in the market's day-to-day background that we can no longer carve out a specific window of time in advance of elections to think that it's going to weigh on the market more than it typically does?
I mean, I'm not making any trades based on that right now. If I do, it's like you said, I think midterms aren't really on the radar for most people just yet. It's going to inject a lot more into the news cycle as we get closer after Labor Day, and then maybe you see some movement around that. But I'm not really trading on midterms affecting anything yet. It's not into my calculus on how I'm operating.
I'm with you. In previous years, it may have been a legitimate weight to consider, but especially under Trump 2.0, politics has been so in our face every single day, from tariffs to the one big beautiful bill to name something. It feels like we're hearing from this president more than we did in his first term. And so as opposed to politics being this discrete thing that comes onto the radar and gets people thinking about it 3 to 6 months out, I would question whether or not we can actually believe in the seasonality here for that typical midterm summer. And maybe that's me as a bull speaking, discounting what would be a bearish window for the markets otherwise. But outside of the midterm election years, Thomas, we are in that June, July window where stocks typically go up. Again, June has seen gains 9 of the last 10 years. We've had July with 10 of the past 10 years. It's been a very, very good market. What's not been a good market is today's action thus far, with a modest 47-point loss for the S&P 500 now, Thomas. Taking a look at our charts here, we have 75.76 on the screen, and this brings us back to our 1 week average, which is about 75.85 here. So first blush, Thomas, should we buy the dip?
I think so. I mean, I'm still long RTY, looking at getting a little long ES here. It's a pullback, and it's a modest pullback. RTY is pulling back a little bit more, but we're still holding above these trend lines. If you've been bullish, I think it's you stay bullish here. Got oil holding up a little bit more lately, maybe pulling things back, but overall, I think this is just the natural ebb and flow of things. You get pullbacks here and there. If you're bullish, I mean, one day doesn't change much for me.
Thomas, we have this interesting trend level that we're coming into. We've seen numerous occasions since the March lows that we have this cadence in the market where, depending upon what time frame you're using, the moving average is going to shift around. But you could draw parallels into the 2150 envelope. On the daily chart, it's going to be close to your 5-day moving average. When you go to the 4-hour, 6-hour, 8-hour, it's going to vary and shift. But this yellow line here, Thomas, 1, 2, just spotlighting bounces into it. 3, 4, 5, 6. We had this brief pullback where we hugged it for a few days. I wouldn't really consider that a break there. And then we started riding it higher again. And that's exactly where we find ourselves once more in today's session. So if there is a place where you're riding this thing up and you look to buy a dip, then this would be the place to do it. You break the series of higher lows, so to speak, in this trend. If you get below the pivot low that we had on May 27th, that's 75.05 intraday, down below 75.05, then something has changed with respect to this trend. On this 8-hour time frame, for example, it would be the first time since April 7th that we would have spent any time below our 50-day moving average here. And, you go back to your daily all of a sudden, and what's creeping up into there about your 1 month. So a little bit more price improvement here, stability in the index. All of a sudden, your 1 month gets through that 75.05 level. You can see it being a very, very firm line in the sand, because we really have not put in a close outside of our 1 month moving average now in the S&P 500. You have to go back to that first week of April, Thomas. So to me, trading against it still as trend followers, we have to pick up the pieces in front of it.
Yeah, I mean, the trend is still intact. S&P 500 9-day EMA, it's tagging it, rises a little. So, you get these pullbacks. It's natural in a market that, at least since late March only goes up. A pullback can be a little unsettling, but it's a place where you want to deploy some capital if you're long.
How would that look through the end of this week? This has been something we've been doing on Tuesdays and Wednesdays recently. Yesterday, the market just looked a little exhausted, didn't put anything on, but now taking a look at where we find ourselves once more, if we do get a bounce back to the high 76.32 or so, what would a 76.25, 76.50 long call spread look like? Risking 1 to make 4, 27% probability of profit. First blush back to that 1 week moving average, Thomas. That's the trade that we have to take. That has been the trend. Those bounces have been working. If you've been getting those bounces and selling up into the market when you get into your level there, 50% profit, you've been able to continue to ride this thing higher. Not taking out the typical 45-day trade and certainly not looking to sell puts up at all-time highs. That's literally picking up pennies in front of a potential steamroller. But this ebb and flow of the market pulls back to a trend level, and then we buy it for a return just back to the previous high a few days later has worked. So if this trend is in place, this seems like an area where the market might want to bounce. But if we don't bounce from here today, we may need to go back to the drawing board. Maybe these are early days of the trend breaking down. NASDAQ is holding itself up today for what it's worth. 30,467 is your 1 week moving average. The low today is 30,496. So the semiconductors, the tech part of this market that's been really driving this to the upside, still very much intact. Semis are up by 0.8% today here, Thomas. I mean, what are we really worried about on this low volume, less than 1 million contracts traded in the S&P 500 type of session?
I'm not worried about. I mean, what do you worry about? It's the headlines are constantly going back and forth. Iran war becomes relevant, then there's some headline exhaustion, things like that. I think a lot of what's carried us forward is a strong earnings season, and today we have Broadcom. I mean, you could get a strong report there. It could lift the semis. Semis go up. Sentiment comes back into the market. Something like that can happen.
Yeah, talking about Broadcom here today, a $40, $41 implied move in either direction. It's 8% or so here. Just taking a look at the scratch math, Thomas, and it's had a decent day too. Breakaway gap yesterday off the lows. Today it opened up higher. Tried to get through and cover the weekly gap off the lows, actually above yesterday's closing price. So a nice little bit of price improvement there. But the tenets of this market staying strong. Telecoms closed at a new all-time high yesterday. They're pulling back in a little bit today. Are we going to really get worked up about that? How about technology broadly speaking? New all-time closing high yesterday. We're pulling back today. We're going to close above our 1 week moving average still. So yes, it's frothy still. There are signs of the froth out there. Until the technicals break down and the trend breaks, you just have to kind of trust the process. Not in like a Philadelphia 76ers kind of way, for what it's worth. More of like a what's been working since the March low kind of way. Different kind of process here, Thomas.
Yeah, I mean, since March, it's been really strong trending market. If you've bought on pullbacks, if you've even bought along the way, you're doing good. I mean, and do you say something changes just because you have a pullback? No.
No, and when you look around the horn today, it does feel like a little bit more of a defensive shift in the market. Broadly speaking, it's an even mix in terms of sectors up, sectors down. If actually more sectors up than down, but only marginally speaking. RSP, for example, only off 0.25% today, while you have your market cap weighted S&P 500 off about double that. Same thing for QQEW here, down by, actually, QQEW is taking it today. That is a change from earlier. I stand corrected. So NASDAQ equal weighted is underperforming the market cap equal weighted, market cap weighted. And we could point to those semis perhaps as being that divergent factor, but it's the energy stuff. That's what I'm getting to here, Thomas. Look at these energy ETFs. How do these charts look to you? I'm seeing things that kind of look like bottom left to top right triangle consolidations that often precede continuation to the upside. A little ominous when we think about energy's role in the portfolio. It's not something that typically does well while the growthy stuff in your portfolio succeeds as well.
Yeah, I mean, I still think, everything's dictated by crude oil, obviously. I've said it before, I think in range 80 to 100, we're more getting close to testing that upside range. But the negotiations continue to look like they're not really making progress. We get a headline, it kind of teases progress. Then there's defensive strikes. Then there's a tit for tat thing. And it just looks like that wouldn't be happening if they were making significant progress. The oil market wouldn't be nudging higher. I really like producers, VLO refiners that are, really taking advantage of high crack spreads, high refinery throughput, things like that is really going to benefit them. So Valero, VLO, that's a really good one to watch. But overall, the way I'm trading crude is just range bound, and I'm only in one position. So, but looking more and more at selling those call spreads. But energy, it's going to stay strong for quite a while.
It feels like that floor is in place, Thomas. I'm keeping an eye on industrials here. We had a very good PMI manufacturing report earlier this week, in part gilded the path by what's happening with AI data center build out. Employment from ADP today, for what it's worth, was across the board in basically every single sector of the economy except for information services and mining. There have been whispers that the upcoming non-farm payrolls report could see a better than expected number because of how aggressive the data center build out has been going on. Industrials would be a place to look, and today they're actually up. So a few names here that have been leadership, a part of the leadership group in this broad market rally over the past 3, 6, 12 months, they're holding up in today's session. I don't see anything. I know the SpaceX IPO has continued to be looked at as a big liquidity event that's going to drag down the broader market. But Thomas, do you know how much of this is expected to be a $1.75 billion company. Do you know how many of the shares are expected to be floated to the public for the IPO?
Probably a small amount.
4%, 5% maybe. Yeah. So 4 or 5% of a $1.7 trillion market cap. What are we thinking here? 75 billion, 85 billion, 90 billion dollars? What does that do for the S&P 500 indexing? Nothing. 0.1%? I don't know. Maybe we're not having to absorb the whole 1.75 trillion. It's not all going public, and there's lockup window. And yes, it's an aggressive unwind, and the structure and the changes and the governance, there's a lot to be concerned about, and think this is maybe a little bit of a cash grab here. But in terms of disturbing the trend, if that's really what's motivating people, I would think that folks are maybe getting some cash on hand to participate in the IPO rather than anything else. But expecting a gigantic dislocation, perhaps I'll be wrong here. I just don't see it happening.
Yeah, it's going to be interesting nonetheless when it goes public, see how the market reacts to it. And this is a big hype one, right? It's probably one of the biggest that has happened. And people are going to be scrambling to get those shares, but you never know. It could. There's been a lot of hype over big IPOs in the past that have flopped. I don't think SpaceX long term will, but it's going to be interesting to see our Tesla investors going to start dumping more to get into SpaceX or other companies like Rocket Lab and Virgin Galactic and things. Are those going to Are investors going to move from that to SpaceX? So there's going to be things to watch. But as far as its impact on the broader market, I think some people might be overstating it.
Morningstar today put out a piece suggesting that SpaceX's value is about half of what it's currently being listed at on the roadshow. It's closer to $800 billion, $900 billion than the 1.75. Either way, though, Thomas, we take a look at volatility here real quick before we shift our focus and go over into the other parts of the futures market here. Volatility futures up 14 cents on today's session. I don't know if that's something that we're really too crazy about. We're just modulating down here. We fell down to these levels back at the end of May, and we haven't really seen much of a shift whatsoever. We can take a look at the VIX, and it's up at 1616, so a 40 cents bump overall. The shape of the vol curve right now, it's still very much in an aggressive, we can call it an aggressive contango here. Thomas, as of an hour ago, according to the CBOS tool, front month, June 18th expiry, VIX equivalent is 1489. You go out to the March 27 expiry, it's 2325. So, and that's steep. It's pretty steep, actually. 9 points, maybe complacent. But we are in that time of year where this tends to happen. So unless something occurs to get us off our preordained path, which is low vol, low volume to positive technical drift during the summer, bears need a better case than just a SpaceX IPO next Friday as the reason why this market's going down.
Yeah, you need something more. And, a really low VIX like this does signal complacency. You get just drift higher, things like that. Eventually, you'll get another vol spike. Whatever makes that happen, kind of unknown right now. But if you're looking at the VIX and you're pretty much assuming, especially with that structure, the contango, there's not demand for protection, that you're just going to keep drifting higher.
Keep drifting higher. The Russell yesterday was a trade that Jamal and I were looking back because we have this nice little bounce here up at former highs. I know that you're leaning long. This would be a good place as ever for the Russell to put up some sizable defense. 2882 perhaps becomes a line in the sand. You get below there, then you're starting to set a series of new lower lows, and that could be problematic. Will it be problematic? Of course, probably hinges on oil in the very short term here, Thomas. I think the explanation itself for oil is pretty understandable for anyone who's been paying attention to the market for the past 3 months. When oil goes up, it tends to push up yields. When yields go up, it tends to take the edge off of demand for long duration assets, growthy names. And so on a day today where we now have oil up to 96.25, it's not a nothing week. We closed last week at 87.36. So we're up 10% this week. And maybe some things are starting to feel the heat. You mentioned being directionally neutral here in oil. How are you approaching this? Are you doing an iron condor, or similar to me, when it gets too high, you start to look to sell calls. When it dips too low, below 90, you start selling puts again?
Yeah, so I'm a little long right now because I have the short put spread, but that's at 80. I'm in the Q6 contract, so I'll look at selling a call spread as we get higher here. I'll probably put it on actually today, and then it's effectively becomes an iron condor. So playing that range 80 to 100 right now, I might want to give myself a little more room on the upside because when you look at the chart, yeah, it's range bound, but we're up 10% on the week. But the longer this goes on, the more we're depending on inventories right now, so drawing those down while the strait is closed, and that can only last for so long. I'm not one of those people that say oil is going to go to 200. I don't think that's the case we get at. But certainly, if this drags on, especially more into July, then I think I get more bullish as we go on. I don't think we've crossed any kind of arbitrary point where sentiment shifts into a very bullish structure right now, but I'm definitely going to be playing it. So as I take off this next put spread at 80, if we're trading at 100, maybe I put that up to 85 or maybe even closer to 90 as we get into July if it's looking like negotiations aren't going to happen.
Yeah, I mean, one of the to express the concern this way. So we've been approaching crude in a few different ways, Thomas. Just going over to the main contract here, the regular guy, around 43 days to expiration, selling the short put spreads when we ever have the chance around the 1 standard deviation move. One of these is part of a short iron condor trade. I'm not feeling too hot about that here because if we get through 105, well, that would cause a problem here. Although this is in the CLQ6 contract, so there's a little bit more breathing room up ahead, and that's why I'm avoiding the short-term one here. Getting up through 101, 103 would mean breaking out to new highs. But to protect against that, what did we do recently? As outside of you get above 100, you sell the call spreads above 120. If you dip below 90, you sell the call spread, the put spreads below 75 or 70. We went over into the micro in MCL, and we did a spread here, long the MCL Q6, short the MCL Z6 here. And on a day like today, for example, the MCL Q6 is up 2.66%. The MCL Z6 is up 1.77%. So it's another day where that's working out. But the rationale here is that if these concerns about supply are going to be realized again in the very short term, as we saw when fear was spiking at the start of the war, you had this massive backwardation open up at the front of the curve. And so it's the nearer dated contracts, the front month contract, the next month contract that are going to move on the supply concerns faster when they flare up than the back month contract does. Now, that's not to say the back month contract's going to fall. I'm short puts out in the Z6 contract because I don't think we're going back to the pre-war levels by the end of this year, given what we know. And when the markets was offering 3-to-1, 4-to-1 risk to reward, I felt like those were odds I had to take. So, Thomas, I'm comfortable having a slight net long delta edge in the short term right now. I would chomp at the bit at the opportunity for another, chance to sell some call spreads. But the dynamic here right now, if I'm going to be an equity market bull, the thing that could really make equity markets nervous, kind of like when Victor Wembanyama's in the paint and Chet Holmgren doesn't want to shoot the ball for 3 full quarters in Game 7. It would be an oil price rise back to 100. And that could be the albatross around Semi's neck, around software's neck. And all of a sudden, you need something to offset the retrenchment in the equity longs. I don't see anything in the news flow to suggest that we should change our approach.
Yeah, and I mean, we had the EIA report out today. Everyone was expecting a big draw because that's just what's going to happen. It's going to happen for at least a few more weeks, right? So 8 million draw on crude oil. Gasoline actually built. That's due to the Memorial Day effect. Gas station stockpile before the holiday, and then the orders fall off after because they were stocked up. But refineries are running really at near max capacity utilization, over 95%. So, we're going to keep seeing these draws happen, and the market is eventually going to shift away. And I think it's already started to happen where you shift away from headlines. We've seen, the Axios headlines and stuff have started to stop, having such a market impact. They can put out a headline that's positive, negotiations are going good. A month ago, yeah, that would bring the market down a lot. Now there's some headline exhaustion happening, and we're going to shift more and more to what's happening in the physical reality of the supply and demand function of the market as we move forward. But as far as you positioning slightly bullish, I think I agree with that. Right now, if I had to pick a direction, I would say we go higher.
And look, for the past month and a half, Thomas, oil has been really range bound in the CLN6 contract, about 86 to 106, about a $20 range. We're kind of edging back up to the top side of this range here. We've had the announcements come from the administration whenever we start to poke through 100. So if you've been getting long off the lows and you find yourself trading 103, 104, 105, wouldn't hurt to take some profit. If we get up there, Thomas, we continue to play ping pong until we're proven otherwise. We, of course, have those concerns about the inventory levels and the tank bottoms being reached and the amount of jet fuel around, the amount of refined fuel products that are sitting in reserves right now as we have these gigantic drawdowns. And that could lead to this short-term squeeze here where the paper market has to catch up to the physical market. It's one of the reasons why we're looking at the backwardation trade. and the Q6 versus the Z6 here, Thomas. So pressing on right now. Natural gas is a little bit of a different story. It hasn't quite turned the corner yet. So many false starts, it feels like here. How are you approaching this now? Because it does feel like we're working through a bottom. It does feel like that we're trying to carve out a significant low over the past few weeks.
I think we're working out a bottom too. You know, I'm still pretty long nat gas. I'm long the N6 and the Q6 contract, both through put spreads, so I still have those on. The N6 contract, I should actually take that off now. That's near max profit. But the Q6, yeah, I'll keep that on. I might, you know, we're at 323 in Q6. My short is at 2.9. I'll probably roll that up to 3, and then not loading, but yeah, I'll roll that up. I think I want to stay long nat gas right now, and the weather is pretty supportive right now. The East Coast looking at warmer temperatures throughout the next 2 weeks, out until June 17th or whatever it is. So you know, the cooling degree days, they're going to increase. The demand is increasing as the hot weather becomes a reality. We're near a bottom, so I think this is a good place to trade it to the long side. And you know, the IVR rank is low, but the actual IV in the product is still pretty high. We've had more before sometimes, or a lot of the times natty gas is trading 70% around there. That would be a lot better to you know, sell those put spreads, but you're still getting good bang for your buck, and there's tradable levels here. You know, I think the 3 is good now in the Q6 contract to trade, so that's where I'm operating.
I'd like to see a little bit more here before I add on any more. It's a 12.4 IVR, so in terms of getting bang for your buck in natural gas, it's one of the more advantageous times if you're playing something that's out of the money. If I want to sell some puts down here, Thomas, to get long, I'm going to want to see a pullback closer towards 3 right now, because it does feel like we've been trapped in a range between about 3, maybe 295, 297, up to about 335. It's a 40-cent range. And we're sitting closer to the middle of it than to the highs or the lows. So if we get towards the highs, be willing to take a flyer on a very short-term basis, 1, 2, 3, 4, 5 days. In this case, NG, we'd have to play it through the contract here, 22 days to expiration. Maybe you could go to UNG, Thomas, to do this through the gas fund, as it were. But if we start to press to the top side, I'd want some short-term long exposure unless we break out, and then we can enjoy the convexity of that trade. Otherwise, I'd want for it to pull back to try to sell some puts closer to support, rather than having to endure potentially a 40-cent pullback in natural gas while I'm sure puts on the other side of 3 here. So timing and I think placement on the chart does matter a little bit, but I'm broadly with you. I am looking for long deltas in natural gas. I just maybe being a little bit particular about how I express myself here.
Yeah, and the chart's pretty nice. I mean, you got that rounded bottom there. We're in summer. You could get a big heat wave, even more so, more heat than we have. That would, of course, be good for prices. So yeah, I actually just, my Q6 roll filled, so I'm now short at 3, and I got an order in to close my N6 position. Or oh, I went to the U6 contract, actually. Okay. Did not mean to do that, but I'm in the U6 now at 3. So I'll have to get another trade on in the Q6.
You could see how we're just chipping away in the U6 contract here, right against that former January low. We just don't want to turn the corner here. The good news, though, Thomas, this to me looks like a little bit of a broadening wedge. We're going into all sorts of creative technical terms here right now. But when you have a broadening wedge, it typically means that you're looking at a turn. Okay. So a turn down here. Maybe the Elliott wave technicians in the chat want to speak up. Not that I know many of them these days anymore. I haven't heard anyone use that kind of analysis in a number of years. Thomas, Spawns trade heavy here today. That's an interesting way to think of it, because we do have oil pushing up, and they just all couldn't turn the corner. The downtrend from the highs that we had immediately after the war, coupled with the May swing high here, it gives you this line, right? Cutting through the 1 month, through the 50-day. if you notice here, Mr. Westwater, and I know you do because you are a very keen observer, we could point to the fact that this little envelope between the 1 month and the 50, it's been a place where the market's been finding resistance recently. We can do it here. We can do it there. We could do it once more right here. Unless oil stops going up, treasury yields are not going to be able to break to the upside, or rather, I should say bonds and notes shouldn't be able to break to the upside. Yields won't be able to go lower because of that inflation expectations component. And so when you look at notes and bonds here, you're finding that similar trapped. We can't make much more progress. Do you find anything alluring about the long end of the curve here? I see a 26.6 IBR in ZN. I see a 18.6 in ZB. What do you do right now in bonds? Not that you're much of a bond guy, which I suppose is to your credit because they have been not doing much of anything.
Yeah, I haven't been trading bonds. I'm kind of glad I haven't because up until recently, we're back to this almost this correlation we had early in the war, the first few weeks where oil goes up, yields go up, gold goes down. These correlations we get. I don't want to trade these yet. Maybe I do an iron condor here, but even then, I don't really like the way the levels are defined for that. Ultimately, I think yields, if I'm thinking that oil is going to go up a little more, I think that yields are going to go up a little bit more, right? So I could take the short ZB position or ZN, but then if I'm wrong on oil, I'm getting whacked twice, right? Or whacked 3 times if I'm wrong. Because if I'm wrong on oil, I'm wrong on yields, I'm wrong on gold, right?
Right? Feels the same thing. Go ahead.
Yeah, I mean that I don't really have much more to say on bonds. I'm just not going to trade them. I do get into the trades once in a while, but it's just not my preferred product to go at.
I'm just looking at the correlations right now with oil and everything else. The 1 month average between oil and bonds is now, let me just pull up notes here first. TLT negative 0.66. Not fantastic. Gold relationship with oil, not good either. Let's change this input. Yeah, the rolling 1 week correlation between gold and oil right now is negative 0.91. Kind of just put an emphasis on this. Between oil and notes is negative 0.9. Between that all these correlations are negative, Thomas, near perfect negative over the past week. Oil is still the tail wagging the dog. So if you're going to be long bonds, you are effectively saying that you are short oil. That's the trade.
Yeah.
I'd rather just play oil.
Right.
Then think about oil being a component, a factor that goes into the stew that makes up the long end of the yield curve. If it's inflation, growth, risk premia, geopolitical, just trade oil if you want to trade oil.
Yeah, I mean, you're getting better volatility there. You're getting slightly more volume there, so easier to get out of trade. So, I think that makes sense if you're trading. If you're going to trade oil, because that's what's, the first move is oil, then bonds react because of inflation concerns, and so on.
And, you trade MCL. ZN, the overnight buying power requirement is about almost $2,100. And MCL right now, it's about $2,883. So it's maybe a little bit more of an expensive product if you're just trading it straight. But you're not worried about it being an indirect proxy for the idea that you're trying to express. Thomas, let's just keep moving here. Metals sink again.
Got out of my gold short.
Maybe a little too early, unless you're profit taking down here. Well, would you get back in? Because what's the story here for gold longs right now? 44.66 here. This would be on par for what, the second lowest close that we've had since the war started.
Yeah, if I'm putting on a trade, it's short, right? And I'm going to go back to what I just repeated. If you think oil's going up, you yields are going up, gold is going down. So I mean, it's just almost the same trade right now. But gold is a product I trade in more regularly. I think I said a couple weeks ago we're definitely going below 4,500. We're below there. I could see us testing these March lows soon. We're not far from there, so definitely get down there. But I think, what is the appeal of owning gold right now? What is going to drive an upward trajectory? I don't think it's just there's not much there to like getting long gold.
I'm going to keep saying this every time we talk about it, Thomas. What incremental dollar from sovereigns or central banks will flow into gold at this juncture when the immediate priority, once the war ends, is going to be refilling strategic petroleum reserves? Right now, you still have the imperative of needing to stockpile cash in order to pay for higher energy inputs because the war still is not over and no ships are moving through the Strait of Hormuz. In fact, I shared this yesterday. Maybe this is just going to underscore the problem that we're facing here and the inflation that's coming. And one of the reasons why we could be looking at problems for gold and silver for the foreseeable future. I can't just stall long enough until this pulls up, but it does get pulled up right now. Thomas, these are the world monthly exports of complex fertilizers, nitrogen by trading region. Do you notice something that's happening here in the month of May? This is over. The month of May is over. Do you see how much less fertilizer has been shipped around the world than any month that we've had going back over the past 2 years? The cost of food is about to get a lot more expensive. The inputs that go into making food and energy alone are becoming more scarce. And so if you're going to have to pay a higher bill in the future, you're still selling your safe havens. You're still selling your treasuries, right? You buy safe havens when you're worried about the storm. You sell them once the storm hits. That's the cushion. You use that cushion to raise capital. I can't convince myself of a gold or silver long right now. Narrative reasons, forget the narrative. Quantitatively, where's the volatility going? It's still going down. Gold and silver like expanding vol, not contracting vol. And then the technical drift is garbage. 1 week is below the 1 month, which is below the 50. There is no long here right now that you can convince me of.
Yeah, no, but I can convince myself of getting long copper right here.
Tell me again. Sing to me, my friend, because this is where I am long.
I mean, so copper, obviously not a precious, more an industrial, but if you believe in the AI trade and this investment is going to continue, high prices are not going to be something that pushes back this investment. Sometimes, if you're building, a build out and copper prices are really high, you've funding requirements, and we'll say, we'll wait till copper prices come down a little bit, the project can be paused. AI investment isn't waiting for that. They're just going to eat these higher copper costs no matter what, because the projected returns of turning on a data center are so high, and investors are so, they want they want it to start producing right away. So, high copper prices, you get too high, you say there's going to be some demand destruction or something like that, or subdued demand. This isn't going to happen in, the AI build out. It's not going to wait for just because copper prices are a little bit high. We're in a trending market. We get a nice pullback here, and this is a nice pullback, nearly 3%. We've seen these big pullbacks before, and they get bought again. They get bought at previous resistance that churns support. So, we can maybe say that happens again. But overall, it's a trade I'm looking at getting in right now. Probably going to do in the U6 contract. And I think I'm going to go around 6.3, maybe down to 6.2, 6.2. Yeah, it's a big product, so I'm going to keep this tight. 6.2, 6.15. It's a 2-to-1 67% POP, you're using 605 buying power, so you're using less buying power than your max loss. And that's the 6.2 is at the 30 delta right now in the U6. So I'm going to put that on, see if it fills. Usually copper takes a little bit, but going to start operating there. I've been out of copper for like 2 weeks. Last time I got out too early again, and yeah, order is in.
You're having the good problem though. Like your problem is, yeah, I was making money and I got out too early and I would have made more money.
Right.
That's better than being wrong.
Yeah.
Right.
Yeah.
But that's a good thing,
I'll
right?
do it.
That is like when you have that kind of ebb and flow in your trading where it's like, yeah, I'm in a rut. Okay, what's going on? Nothing. I'm just not making as much money as I could be.
Yeah.
That's a good place to be. That's a very good place to be. I feel like that's where I've recently returned, where it's like, okay, I'm not losing money on everything after what was a really just March, April was just not. May was good. May was very good. So we're back now, Thomas. I'm with you. I see a triangle here. I see a breakout from, we've talked about this time immemorial, it feels like, for the past few weeks. You have a very clear supportive trend band that's been coming together. Dips into it have been bought. You and I have done that. You have a little bit of a pullback back near the former highs, but bottom left, top right triangle, typical continuation. This next leg is about, we'll call it 6.2 to 6.7, 50 cents. 50 cents on top of 6.7 is going to be to about 7.2. So if I'm looking out of the money because copper volatility, it is relatively speaking low-ish. It's a 40 IVR. We've certainly seen higher vol at points this year when we had IVRs running up into the hundreds at points, Thomas. So yes, this does look like big picture. I mean, please tell me this is bearish. This just looks like a straight ascending triangle getting ready to break out again. Got to have long deltas.
Yeah, it's a nice chart. I like the chart. I like the story there. And it's a trade that's been working, so I'll do it until it stops working.
We'll do it until it stops working. And that's the approach for a trend trader. Hey, Thomas, did you take a look at FX today? It feels like we're here. We're not even going to go to the futures market first. We're going to just hop on over to our friend dollar yen spot, which is giving us a 160 handle right now. It's 160 and 04. We're in yen intervention territory. There's no other way to put it.
Yeah.
This is yen intervention territory. Any further higher from here, we are very likely to get some shot across the bow. I am very firmly in belief that we are not done with the BOJ and the Ministry of Finance intervening. If we are to break 160, if we start seeing 160.75, 161, I am getting the hell out of Dodge with any yen longs that I have. Because if this thing starts to break, it's going to break horrifically, in my opinion. And the cost of intervening to get it back under 160 will become increasingly burdensome for these policy officials. And dare I say that if they make the mistake of allowing it to break through this 160, 161 level, you're going to start to hear people chant around the fire at night, Bank of England, break the Bank of England. Because on September 16th, 1992, that's exactly what happened. Just a quick little history lesson here, Thomas. There was something called ERM1, the exchange rate mechanism number 1 for the euro. A number of countries were trying to ascend into the euro from the late 1970s into the early 1990s. And ERM1 outlined a trading band around the German Deutschmark. And so countries that were seeking to join the euro had to keep their currency exchange rate within that small band around the German Deutschmark. As a result of fiscal mismanagement and policy mistakes coming out of the Thatcher years, culminating in an early 1990s recession, the Bank of England burned through the reserves trying to keep the pound within that band. And ultimately, on September 16th, 1992, they had to jettison their participation in exchange rate mechanism 1. One of the funny knock-on effects of that was that European policymakers were so committed to the idea of the euro project was that they widened out the band to prevent countries like Italy and France from flying afoul of it. Now, as a result of them widening out the band, countries like Greece were able to hide a lot of their government debt. They entered into a number of swaps that Goldman Sachs put them onto, and they ultimately ascended into the euro. But that story wasn't finished because we had the Greek part of the crisis arise in the late 2010, early 2010s, coming out of the Eurozone debt crisis there, Thomas, right? We had the pigs. So the pigs were a knock-on effect of ERM2, which a result of ERM1, the Bank of England breaking. A central bank runs through all of its currency reserves. We're now at the point where we could be seeing that happen again here. So if this does break, yen could go from 160 to 170 like that if the market senses blood in the water. I don't think that the BOJ and MOF are going to tolerate that again right now. So I'm leaning long yens. I could be totally wrong here, but if this thing breaks, man, it's going to be historic. We're probably not going to see, we haven't seen something like that in the currency market since what? January 15th, 2015, when the S&B removed the floor in Euro Swiss. This is it. I'm on yen intervention watch. I can't believe I'm going to be watching the yen tonight while the Knicks are playing, but that's how serious I am about being on yen intervention watch.
Yeah, that's about the time it'll come, right? And so are you long spot or are you getting long 6J?
6J.
Yeah. Yeah, I'm looking at something there.
Here. 6J. I am going to be putting coins into this machine. I'm just sitting long the 64 call. $25 loss. What's the worst that happens? And then continue to play that. And if we get another rally, Thomas, just given where oil is, if we get a move back up to 64, 65, or even just like 63, I will start to look longer term and lay out the trades. What if the Bank of Japan starts to crack and they can't ultimately keep this market afloat? 170 in dollar yen terms is about 0058 in 6J. And so thinking about the end of this year, the longer the war goes on, the more expensive it is for them to maintain dollar yen at 160. They burn through those reserves. They've already given up on yield curve control. They've been signaling to the market that they're in retreat for a number of years now. Thomas, a 58, 0058 long put here, 156 days out could cost me $200. Max profit, I could cap it off, but I could be looking at like a 100 to 1 type of bet down here that I'd be more than willing to play with and just hold on to as a let's break the Bank of Japan type of speculative roll of the dice, given what we know about energy and how the Japanese political system works or doesn't work when the yen weakens.
Yeah, I threw on a call there, so I'm not sure I'll be watching it, but,
You will be dutifully watching the Knicks game. I understand. Get it completely. That's what I'll be doing tonight. What do you make of the dollar today, broadly speaking, though? Oil up, dollar starting to break out here. Dixie is trying to leave its range that it's been stuck in since early April.
I mean, I'm still long the Aussie dollar. I'm long the pound. Not loving the movement here. But I don't know. I'm not really reading the dollar too well. I think these positions they're not really. They've pretty much gone nowhere over the past couple weeks, and it feels like wasted capital at this point. I might take them off and just focus my efforts elsewhere.
I'm thinking that this British pound here today. That's an interesting. We've had this line in the sand drawn for some time here, Mr. Westwater. I don't know, 134.75, 135. It feels pretty firm, all things considered. Not for nothing. A day when we have Brent crude, that to me seems to be the big one here. Brent crude has its bounce back and gets back through its 1 month average, and the pound starts to keel over. The UK is just such a mess right now, politically, economically. There's not much to like what's going on. As it were in the short term. But you have a euro. The market thinks a rate hike is coming. It's priced in. ECB officials have been screaming that hikes are coming. How's the euro doing? On the lows. So if you can't get hikes from the ECB to save the currency, the market is articulating a much deeper level of concern about other things here. Right now, Thomas, thinking about that relationship, what if we do see this new expression of fear? The dollar starts going up, oil starts going up. Where could the euro fall to? About 114.5. The U contract is where we'd want to look. Just thinking about this, and what if we return to the lows? 115 here would be a move back to the lows in the currency. There's a 115 long put look like. 115, 114 long put spread here, risking 1 to make 4, 20% probability of profit. It's an idea to play with right now. The volatility is rather elevated in this space, so maybe it is the selling of a call spread in the 6B. That would be a better way to express this point of view, because we can then collect the premium that we so desire to collect through a typical tasty methodology, Thomas. But let's not ignore currency right now. I'm not, if we're playing for yen intervention, what does that entail mechanically? Selling dollars, right? So the dollar could go down versus the pound, the euro, the Canadian dollar, a whole host of major currencies as the BOJ affects this trade. I'd be much more interested in getting long the dollar versus the euro, the pound, and maybe selling a call spread here in 6B in the event that we get intervention that reduces the appeal of the dollar, however temporary that window of time is. And then we can really take a look at some long dollar trades here, because a yen intervention, unless oil breaks and yields collapse, it is probably going to be short-lived, just like the last one, given the macro circumstances.
Right. Yeah. They don't last too long, right? Because we saw last time the yen intervenes, and then it's like a day or two after it's back to selling it.
BOJ is going to have to hike. It's probably the only way out of this, Thomas. We just have a few minutes left here. What's going on in the world of grains? Taking a look at ZW here right now. That is a break of our trend this year. What's going on? I thought we had something good going on here.
I mean, the things I'm seeing is Russia, Ukraine are looking at a really good wheat harvest, so that's going to kind of flood this market. So, at the same time, the U.S. crop isn't looking good, but funds have been, if you look at the COT data, funds have been just getting out of here, and shorts are still being added. Open interest is going up as shorts are added. So, I mean, the market speculators are, more and more trying to sell this. Is it going to come to a point where it's just oversold and needs a bounce? It's gone a lot farther down than I thought it would. So, right now it's just, it's at the whims of all this funds getting short, liquidating. And we're near this April low down here around 580. We're only $7 away from there, but that's only perhaps one more day of selling and we get there. So we'll have to see if it respects that level. If it keeps going down, then there's probably more pain in it.
There is probably more pain in it right now. Thomas, in terms of positioning in the market, we have not seen 6J at these levels in terms of net positioning since June 2024. So talk about a stretched market. What happened in June 24? We got the BOJ hike and then the carry trade implosion. The NASDAQ fell over 15% from its July 24 high to August 24 low. Now, I'm not concerned about a carry trade implosion right now. That doesn't seem to be the kind of relationship that's played out in markets in recent weeks and months, especially as the long end of the JGB yield curve has increased. But in terms of positioning, a lot of people are short the yen. So if you get an intervention and it does seem to stick and oil prices break lower, covering could help drive this thing to the upside. If we don't get it done before close on Friday, and this is really the key point, there are not daily or weekly options in 6J. I will go over to the 29 DTE and line up trades there to take advantage of this just in case, because at 160, this is where they've got to do it. And if they don't do it, then 160 is going to be a thing of the past real soon. And we're not going to return to it with relative ease. I feel very strongly about that as someone who's been operating in currency markets for almost 20 years, given my life experience.
Well, yeah, I bought a call on 6J on pretty much what you said here. So I'll be checking in the morning 6J first thing.
What's next on the calendar? We're rooting for a central bank to do something because the market's broken. Yay. Thursday, June 4th. Quieter day. Initial jobless claims, some Fed speeches. Friday, non-farm payrolls. That's the big one. ADP today came out strong. Only sectors that lost jobs were information services and mining. Maybe we're going to get a beat on Friday, and that would be good for the stock market. We don't need those cuts. Thomas, the economy's fine. Focus on inflation, Fed. We got this. All right, we'll be back later today. We have, what, last call? Yeah, it's Wednesday. Last call, 3:30 Eastern. So I'll see everyone there, and then overtime with Ilya at 4. But until then, Dr. Jim Schultz is coming up next. Take a break and then return for From Theory to Practice. You're watching Tasty Live.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Grow a strong community.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it. We get it.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Man, welcome to the Wednesday edition of what it is that we are trying to do. I'm so glad that you guys are here because it is only because of you all that we can do what we do. So thank you guys so very much. If you are watching over on the Tasty Live Network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion, and you can communicate with our brethren who are also watching the show. Man, you can commiserate with your fellow Bulls for the first time in 3.5 years, and you can celebrate with your fellow Bears for the first time in well over a decade, but it's going to be a good time had by most. And of course, if you have a question for me, I will drop it in the chat box. I'll try to get to as many as I can right around the halfway mark of the show. Questions, comments, stories, and jokes, they're all welcome. I want to hear them. The algo wants to hear them. Drop them in the live chat, and yeah, go ahead and do that now. So Matt, bring us into the market. Man, what's going on out there? It's allowed to be read? Man, we've got a functioning platform. We've got a red market, guys. I don't even know what to believe anymore. Like, I don't even know what's real anymore. Even the S&P is down 37. You got the risk-free instrument, also known as the NASDAQ futures, down 41. You got the boomers down 440. Man, they shut her down on a Wednesday afternoon. That's about right. A little 5-day weekend for the boomer population. That's the expected move. Got the Russell 3000 down 36, down to 2,900. So it's still got a little ways to go to claim its status as the Russell 3000, but it should be there by the end of the week. Got bonds down 13, got notes down 7, got oil up 234, got UB40 down a little bit, got the shifties getting smacked around a little bit, got gold down 51. My Hunt brothers, yeah, I mean, they've seen better days. You know, they've done some better things. And again, sometimes you got to rely on the cheese and pepperoni. Like sometimes you just got to rely on those gas station pizzas flying out the back door. And today it looks like one of those days. Silver down $2.05. Got the British pound is up. I'm sorry, the British pound is down. Got the euro is down. Got volatility unched on a day like today. Sharply unched, that is. And then spot volatility, the old VIX, which again, if you followed the show for any length of time, you know I have a very special place in my heart for the VIX. I know it's archaic. I know it is a caveman's way of looking at market volatility, but it was one of the very first research projects I had to do as a PhD student, and I thought I struck gold. I thought I found something that nobody else had found. I know I've shared this story 19 times before on the show, but we're going to do it again right here, right now. My very first ever research project as a PhD student. I'll never forget it. It was like, it was my first year. I hadn't even met Autumn yet. I didn't meet Autumn until the second year of my PhD program. So first year PhD program, man, I'm locked in. Like, I'm ready. I'm like, all right, I want to do this thing, PhD, blah, blah, blah. Super excited. Got down to the University of Memphis in July of 2005. So I couldn't breathe. I was like, well, I might as well just study. Since I can't breathe, it's 175 degrees outside. Like, let's get after it. Man, I was like, in classes for maybe a month or two. And then one of my professors, I don't think it was Dr. Wood, or maybe it was Dr. Wood. He was my dissertation chair, but I'm not sure if he's the one who gave me this project. Anyway, I just remember, obviously all roads lead to what in a PhD program? Your dissertation, right? Doesn't matter what the field is. It could be finance, it could be accounting, it could be sociology, whatever it is, like all roads lead to the dissertation. And so they wanted to start getting us ready. They wanted to start prepping us for, this really heavy research project that we were going to have to do at the very end. And so I'll never forget, maybe it was Dr. Wood, so we'll just use him. Dr. Wood came to me and said, all right, Jim, I want you to go try to find something in finance that no one has ever found before. Go try to find something in finance that no one has ever found before and put it into a regressionary format and show me the results. And so, man, I labored and labored. I must have spent at least 2, maybe 3 hours on this. I finally discovered the VIX, VIX, and SPY. And I was doing correlation matrices, I was doing regressions, whatever. And I was like, wow, these have an unbelievably negative coefficient. And I always kind of knew that, like, intuitively, having studied finance like undergrad and even MBA, but to actually see it in the model, it was like so stark because you're so used to seeing like positive correlation, right? You're so used to looking at like, Walmart and McDonald's, or, I don't even know if it was Tesla a company in 2005. I don't even know, but like Google and, Panera, whatever. You're always used to seeing some kind of shade of positive. Well, I saw that it was like so negative. I was like, man, I don't even know if I should tell Dr. Wood about this. Like, I kind of think I should just trade this information all by myself. Let me take my $400 graduate student stipend and let's see if we can't double this thing. Let's see if we can't triple this thing. And so I almost kept it to myself, but then I marched into Dr. Wood's office. I'm like, hey, man, check out what I just found. He was like, yeah, everybody knows that. Everybody knows what? He's like, yeah, everybody in finance knows that market prices and market volatility have an inverse relationship. I'm like, really? Wow. So anyway, that was my very first research project as a PhD student that got quickly thrown into the trash. So that's why I like to look at the VIX, even though it is a rather archaic way of looking at marketplace volatility, or marketplace volatility. That's what I was going for there. But anyway, let's go ahead. So, man, I spent so much time with you guys yesterday. That was amazing, right? That was amazing. But I think we could both use a break now. I think we could both use a little bit of space, right? Just for the long-term health of our relationship. And so I don't know that we'll spend as much time today. Obviously, yesterday, the platform was taking a siesta. Now it's back up and running. Like, I've had my ghost. The platform's had its ghost. Like, I even snuck in a little LMNT, got a little LMNT for the platform. And so now we are good to go. Let's go ahead and pick up with where we left off yesterday and see if we can't finish, kind of talking through a few things happening in the portfolio. I know we talked about MES yesterday. We lamented our MES position. We all cried together in the corner and sang kumbaya. And now here today, you've got the market down $37, and it's helping the cause a little bit. Is it helping the cause a lot? It is not. Is this the thing that we need to bring us back to a scratch? Not even close. But it is a start. It is a beginning. So MES, we talked about that yesterday. I'm not going to do anything. MNQ, though, I wanted to do this yesterday, but now I'm actually going to be in a better spot to do it because the market is lower than it was yesterday when we were on the show. I think so. Or maybe it was around here. Maybe it's actually higher than it was yesterday on the show. Where was the NASDAQ yesterday at 2:30? Man, look at that chart. Hang on a second. Can we just appreciate the magnitude of this? Look at this. Look at this. Look at that line. I'm not even doing it justice. Look at that line I just drew on the screen. If you're listening to me, if you're accessing the audio only version of the show today, then man, just use your imagination. I just drew a line on the screen. I tried to connect, the lows of the trend line moving higher, and I couldn't even do it, and I'm darn near at a vertical line. Like, we have darn near painted a right angle on the screen, and I'm like, man, what are we looking at? Is this fart coin? Like, what are we doing here? Is this a crap coin? No, man, we are looking at the NASDAQ index. We are looking at arguably the most major or second most major equity index in the world. In the world. And look at this thing. Since the beginning of April, just a quiet little 7,500 points, right? Just a quiet, painless little 7,000 plus point ripper to just take your soul and suck it right out of your body, man. Like, if you've been on the wrong side of this, ooh, baby, that is not good. I didn't even do it right. I didn't even draw the line right. Hold on a second. Let me grab my magenta. Happy Magenta Wednesday to you guys. I did go with the magenta polo today. Let me grab the, man, I can't even, without like bending backwards, I can't even get it right. Look at that. Look at that. That is crazy, man. Again, the only natural continuation from here, because you might be wondering, like, where is the market going to go? Is it going to be up there? Is it going to be up there? Right? Are we going to get a bloop down there? No, we're not getting any of those. Just based on the current trajectory, I'm just using the information I have in front of me. It's going to do this. We are actually not only going to get higher prices, but we're going to get a couple weeks back. So we're going to go back to about the third, maybe second week of May, and NASDAQ 31.3, NASDAQ 31.4. I mean, that seems reasonable to me. And so, yeah, that is obviously the path that we are on. Man, that's crazy, crazy stuff. But anyway, where was the NASDAQ on the show yesterday? Let me just grab like a 30-minute. Let me grab like a 30-minute deal. Where was the NASDAQ at 2:30 yesterday? So it was right about here. Yeah, it was actually, oh, wait, I'm looking at you. I got to look at M. Hold on. I got to do this right. I mean, if we're going to do it, we got to do it right, you know? I mean, it's, okay, so it's about the same, actually, as where it was yesterday. Approximately the same, give or take a couple of points. Either way. So we're basically in the same spot we would have been yesterday, because what I want to do is I want to take this NASDAQ position, and let's try to be a little bit strategic. Like, not too strategic, but I don't want to get carried away with this. Like, I want to stay short the indexes. I want to have mostly static shorts, but just in case we're wrong, just in case there's more pain on the horizon, yes, we're going to get a couple weeks back, but still another 700 points to the NASDAQ to the upside is going to be very, very painful. So I thought, let's go in here. Let's go into the trade page. I want to go ahead and let's go out to, because now we're in the U cycle, right? We've already rolled to the U cycle. The front month is obviously still M, but that's only going to be the case for, the next, week or two. Oh, by the way, before I forget, guys, do not miss Mike and Nick's show tonight at midnight. Do not miss Mike and Nick's show tonight at midnight. They're doing the Pattern Day Trader Death Show. The Pattern Day Trader, put it in the ground, cover it with dirt, like it's over, man. It's happening tonight at midnight. I think it's happening right at midnight. And so that's going to be exciting. I'm going to be tuned in. And by tuned in, I mean I'm probably going to be asleep, but I'll have it up. I'll have it up and running to give my boys that watch time. And so, but you guys need to stay awake. And again, get your goats, get your sour pink lemonade, get your sour green apple. I mean, you could go peach, but it's going to shock you to the downside. But yeah, I would definitely watch that guy tonight. So MNQ. Let's go in here. I'm going to go to, we're already in the U cycle, so that's fine. We'll go to the 44-day cycle. The 44-day expiration cycle. So here's what I want to do. So NQ, I'm not doing the big dog. Hold on a second. Hold on. We got to do the little dog. That little Maltese. Somebody let a German Shepherd out. I'm like, no, that's not my dog. Where's that Maltese? That's my dog. And so MNQ. MNQ. So if I go, I don't want to do 14. Let's do, 44-day cycle. So this is the option that we have on right now, right? So you can see right here, this is the option that we have on. It's a 73 delta. So it's not even that far in the money, which is kind of crazy, right? Like, it feels a lot worse than this, and maybe it actually is worse than this. Maybe Delta's not telling the whole story. But I actually just recorded just earlier today, so you'll know it when you see the magenta shirt. But I just recorded episode 8 of the Where Do I Start series. I typically record those on Wednesdays, and episode 8 is all about Delta, and I thought it turned out pretty well. Like, I was really happy with, the end product, and hopefully the production team can take it from, C+ to B-. I mean, they can only do so much with what they've got. Like, I understand that, but maybe it'll be a B, maybe a B+. And so you guys will have to tune in this weekend, because speaking of watch time, your boy is desperate for it. So be on the lookout for that guy coming on down the chutes on the weekend. But the delta here of only 73, I kind of thought it would be more than that. But that's okay. So we're pretty short the NASDAQ, obviously. So what I'm going to do, though, similar to when you have like a static, like kind of like what we've been doing with Starbucks, right? I mean, look, I think, isn't Starbucks ripping today? Hold on a second. Is it Starbucks? Starbucks is up like, 85 cents. It was ripping earlier. I thought it was up a couple bucks earlier. But when you have like an investment style covered call or something longer term, and you want to sell premium against it, a lot of times what you might do is sell a lower delta, like a 15 or 20 delta. Not usually like crazy stuff like 6 delta, like 4 delta. That doesn't really make any sense. I understand it's like, free money, it's a paycheck trade, it's income, it's all these things, but it's a terrible, terrible idea. But still, you may not want to go too high either. You may not want to do like a 40 delta, 45 delta to really kind of, cap your upside and handcuff yourself if the market does indeed go higher. Like, I get all that too. So generally, somewhere between 15 to 35 is going to make the most sense for most people most of the time. Well, when you're in a situation where you really want to leave yourself room to run on the upside or the downside, choosing the lower delta on the premium that you sell makes a ton of sense, because you get the premium working for you. So you have that other avenue of profitability or loss mitigation, whichever side of the fence you might be on. And you have that already in the mix, but then you leave all the upside or downside, depending on which side of the market that you're playing. Of course, here we're on the downside. So that if you do get the move that you want, you're not going to go in the money on that option too quickly and too early, which again, is not necessarily a bad thing, but you also want to be somewhat thoughtful with where you place your strike. So when I go to the 44-day cycle here, and I'm looking at this 29.4 call, I definitely want to choose a put that's underneath 29.40. I'm not going to choose a put like, here, I'll even grab a different color. I'm not choosing any puts up here. That doesn't make any sense, because then I'm going to go in the money on my put before I even give the call a chance to move back out of the money. That's like the boat is sinking fast type of strategy. That's like there are leaks everywhere. I got 3 washcloths in my hand. Let me just try to plug anything, before we all go down with the ship. We're not anywhere near that position right now. So this is more of a, let's be thoughtful. Let's go to the starboard bow and, the other one bow, whatever it's called. And let's make sure that this thing is up and running, operating at maximum capacity. Very unlike the analogy that I just threw out there. But if I go to... If I go to looking at the deltas below the 29.4, like if we did like a 15 delta in the 44-day cycle, and actually, a 15 delta is like a 28,250. So that would be about 240 points on the NASDAQ. That's not too bad. And then like a 20 delta would be like a 28.8. And so that would give me almost another 100 points. And so how do you choose? Well, again, it kind of depends on how much directional bias you want to take off, how much you want to, how much premium you want to have working for you. And so those things enter the mix for sure. But another thing to keep in mind is, and this is where this is different from a standard covered call or covered put. Remember, my short portion of the strategy right now, right now it's only a short call. That's the only leg of the strategy. The delta on that is dynamic. The delta on everything is dynamic, but it's especially important here because if I do get the move lower, right? We've seen it. It's happened to us a number of times in just the last few weeks. In fact, I think it actually happened. It's actually happening to us right now with that MES short call. Go back and check the tapes. I didn't even want to sell that call. Like, I didn't even really want to do it, but I was like, let's do it. Let's kind of control our, our bias and this and that and the other thing. And I'm not saying like, it's not my fault or trying to shirk responsibility or that, but I'm just saying like, it wasn't even really the trade I wanted to make on the front. It was kind of an adjustment that I made afterwards. Similar thing here. I'm going to go in, I'm going to sell this put against my short call if the NASDAQ does fall out of bed, whether it be a random Thursday a la tomorrow, whether it be a made-up NFP a la Friday, whether it be the most important IPO of our lifetimes a la SpaceX next week, whatever it is, if NASDAQ goes down, I could find myself in a situation where the short call is not the problem now. It's actually the short put, right? And, to some degree, that's trading. Like, to some degree, that's just the way that it goes. And so there's only so many things you can do to kind of curtail that. And unfortunately, we don't know what's going to happen next. And so we have to just be mindful of our directional risk, the whole time. Because I am static short and pretty static short, the S&P 500, being a bit more dynamically short makes some sense to me here with MNQ. And so I am going to sell a put, but I'm going to choose the 15 delta because I want to make sure I have plenty of room between my two strikes in the event that the NASDAQ does actually go down. I know, I got it. This time is different. It's never going back down again. I know it's down 49 points today, but again, enough computer restarts from you all, and this thing will be right back to unch. So I'm going to go ahead. I'm going to sell a 15 delta put. We're going to sell the 28,250, and we're going to treat this like a covered put. It kind of looks like an inverted strangle in some ways. Or actually just looks like a regular strangle, not even inverted in a lot of ways. But the way it's actually going to behave is going to be closer to a covered put because of how in the money that short call actually is. And so let's go ahead and do this. Let me see. Can I get near the mid price? The mid price is 248. I'm going to go 246. Like, I'll give Vinny Batista a couple extra points on the old MNQ. Let's see if he gets me filled. Nope, not at all. So let's try to... I'll do 243.5, and we'll see what happens. Man, no takers at 243.5. Wow. Oh, we got a taker at 243.5. All right, there you go. Okay, so we are in the NASDAQ. There you go. And all right, that's that. Okay, so next up on the docket, Micron. How'd you guys let me do this? How did you guys let me get away with this? Right? This is what you guys are here for. Right? You guys need to stop me. Like, obviously, lighting regular stacks of cash on fire, we're going to do that. I'm going to do that. That's just part of the deal. That is, of course, what you're signing up for. But, man, it was so obvious to play Micron to the upside. How did you guys let me get away with this? And so Micron now at maximum loss. Whew, baby. 2 days left. It's not looking good. Again, we've got a random Thursday. We've got the PDT death. We've got NFP on Friday. Maybe we get lucky. But our goal here, our mission to stack BEUs appears to be in jeopardy. It appears to be called into question. We may have to just abort the mission completely and just try to salvage whatever we can. So right now, we're at maximum loss on the trade. Not going to do anything. There's nothing to be salvaged, actually. There are no BEUs here, sadly, which if you are brand new to the show, a BEU is a bonefish equivalent unit worth one BEU is worth $25 US. Because again, we're trading, we're making money, we're losing money, whatever, but a lot of times it's not real. Like, a lot of times it's not tangible. But when you take profit or you take a winning trade and you convert it to a BEU, now it's real. Now it's like, man, I could have that rainbow trout like tonight, right? I mean, I could have that bread and that olive oil like tonight. Like, I could be there and I could have a little Diet Coke from the tap tonight. And so that makes a lot of sense. But MU, not looking too good. So we sit tight, we do nothing, and again, we just cry in the corner. Speaking of crying in the corner, man, look at Netflix. Look at our in the money short put. So, it's always funny. It's always funny with like short puts just in general, right? Because the short put is a great strategy. It's an amazing strategy. And a lot of times, you don't really need to do anything special with it. Like, the wheel works pretty well when it's round, so just keep it round. Right? Like, dance with who brung you, stick with the plain vanilla recipe. Like, Betty Crocker did it for a reason. Betty Crocker's been around for 3 centuries for a reason, right? She's the Betty Crocker recipe. It's the tried and true. And when you're talking about short puts, like selling a 20 delta, 30 delta, 40 delta, anywhere in that range makes a ton of sense. And, it's gimmies and gotchas with credits and probabilities and, risk tolerance and all those kinds of things. But anywhere in that range makes a lot of sense. Okay. When you start trying to get cute, and you start trying to get fancy, it's like taking that Betty Crocker recipe, and I'm going to throw a little cayenne in there. And it can work, like, if you're really, really, really small with it, but you get a little heavy-handed, and all of a sudden, the next thing you know, everybody's just choking out. Like, everybody's at the table, like, what are in these cookies? Like, I thought I signed up for a Betty Crocker recipe, and I'm getting, my tongue's on fire. I'm getting that my palate's blown out. Like, that doesn't make any sense. And so it's exactly like that. In very much a not really kind of way. So with a short put, if you sell, man, these sound like Friday analogies, and it's only Wednesday. Oh man, there's only 2 more days, guys. Don't worry. It's only 2 more days, and then it'll be the weekend. It'll all be over. When you have a short put, if you sell 20 delta, 30 delta, 40 delta, like again, that's the tried and true. These are great strategies. When you try to get cute and fancy, selling an in the money put, which is what we did with what we did here with Netflix. If it works, you're a genius, right? If it works, it's like, well, why am I not doing this with all my strategies? But that's kind of the case with everything. Like that's kind of the case with everything that we do. It's like, man, when it works, why didn't I trade bigger? Why didn't I trade more? Why didn't I do it faster? Right? You have those thoughts and feelings. I have those thoughts and feelings. We all have those thoughts and feelings. And then when it doesn't work, like, why did I do that? Why didn't I be more cautious? Why wasn't I more conservative? And all those things. And so this is kind of the internal emotional game that we're all playing all the time, like forever and always, the end. That's just what trading really is. But again, when you start thinking about, what we are trying to ultimately accomplish as premium sellers and out of the money premium sellers and high probability premium sellers, yes, the in the money put is quite unique in the sense that your probabilities can still be greater than 50%. They oftentimes are always greater than 50%, even by selling an in the money short put, because you're picking up all that extrinsic value. But again, giving yourself some of that buffer, it's the tried and true for a reason. Case in point, what's happening to Netflix right here? We sold this 90 put when Netflix was like, 88 or 87 or 89. Imagine if we had sold the 80 put instead of the 90 put. It wouldn't even be in the money yet. Like we'd be basically at the money and in a much, much different situation. So anyway, just a couple of quick comments on Netflix. And then Starbucks is finally doing okay. We'll sit tight and do nothing. And then Snapchat, Snapchat's doing what Snapchat does, right? Down 9 cents. So that's about right for Snapchat. But that is it. I'm not going to do anything now because I'm excited about this pattern day trader stuff, man. Tomorrow we may scalp like NVIDIA, like on the show. Like we may just scalp a little something. Like, we need BEUs. You need BEUs. And Micron ain't giving it to us. Like Micron ain't going to get us there. And so maybe we got to do a little NVIDIA. Buy it for what, 211 and sell it out for 211.75. Like, man, that's like, that's 3 BEUs potentially. And so that would be a really, really solid trade. But anyway, I digress. Let's go to you guys, man. Where are you guys at? I see you guys, man. You guys are doing some work in this chat. Man, look at you guys. You guys are pushing it hard in the chat. Nice job out of all you guys. Oh, excuse me. Very nice job. Let me see if I can surprise and delight somebody. Can I surprise and delight somebody? Oh, here we go. Bullheaded one. Here we go. Doc, Jenny's reaction today to the reminder of why she was in MU was priceless. Giving you full credit, of course. Hey, stick with me and I will take you straight to the top. And by straight to the top, we are going to asymptotically approach the bottom first, many times before we might get you back to a scratch. And so, Jenny, you are welcome. And I appreciate you remembering me for the Micron trade. Yeah, that was on, that was Jimmy Trades, which was just last week, I think, right? We just did that on Thursday. That was super fun. Really, really enjoyed that. And so thank you there, Bullheaded One. I appreciate you, my friend. Let's see. Let me see. Can I surprise and delight somebody else? I think I can. Maybe I can. Let's see. Oh, well, Ranch says, anybody trading Amazon today? The short put spread in July is nice, just kind of low IVR right now. Let's take a look at it. I don't know. Amazon? Appreciate you there, Ranch. Yeah, 28 IVR. That's not that bad. We're not talking about single digits. We're not even talking about beans in the teens. Like 28, that's not too bad. Typically around 30 is where we kind of get interested. And so, yeah, you go to July. Put spreads a lot of times can be a tough trade because, you're kind of working against the volatility skew. Typically, right now, there's call side volatility skew in like names that shouldn't have call side volatility skew. Even the NASDAQ, I think, had like call side volatility skew. Even the S&P 500 had like call side volatility skew, which is a bit unusual. But if I look at Amazon, if I sell a put spread that's right on top of, I don't love that, man. I'm right on top of the stock price. 245, 240. The stock price is 248. The probability of profit is 57%, so that's not too bad. The P50 is 69.70. I'm risking 3 to make 2. It's, and we are bullish, and so that would obviously be a bit of an offset, a bit of a hedge against short MNQ, short MES. I'm actually going to do it because I could use a little bit of bullish delta coming in from somewhere, and we don't have any earnings to deal with Amazon in this cycle. They're probably at the very end of July. And so, I mean, there's a little bit of volatility in there in Amazon. You got Amazon down $7-8 today. So this is a nice contrarian play as well in terms of the short-term price movement. I don't want to go any further away from where the stock is now. I mean, the 240, 235, only selling for $1.68. That's not enough in my opinion. I typically like to collect closer to 40% the width of the strikes when it comes to my defined risk vertical spreads, because I know that I'm not going to be able to adjust this too many times down the road. Like I know there's just not too many things I'm going to be able to do when it comes to moving around and rolling and adjusting because of its defined risk nature. And so I think we're going to do the 245, 240 for about $2. And so we'll give it a go there. All right, we got filled. There you go. All right, so thank you there, Ranch. I appreciate you, my friend. Let's see here. Where are we at? Let me go ahead and let's see. Where are we at? Oh, I see a couple people asking about the P&L year today. Yes, you guys asked me yesterday. Again, this is our little secret. Right, this is our little secret. But yeah, we're down, I don't know, we're down what, $1,500? Oh, $1,800? Yikes. Yeah, so I thought it was a couple thousand yesterday. It was a couple thousand yesterday. You can see we're getting a little bit back today. And so, take that for what it's worth. Right? I mean, take that for what it's worth. I'm not really that good at this. That's obviously true. That's been the case for a very long time. But last year, we kind of lucked into a pretty nice year. And so, yeah, last year, we were like way ahead of the S&P 500. This year, we're significantly behind the S&P 500. But again, it's only June 3rd. Again, this thing has barely gotten started. I mean, the delts are barely loose, right? Like, we're not even done with our warm-up sets. We're not even done with our mobility drills yet. And so, again, lots of time to go. We'll see what happens. There's lots more cash to be set ablaze. Just stay tuned. It's only happening here on the Tasty Network. And so that's where we stand for the year. And there you go. So let's go ahead. Let's go back to the beginning. I did Brian Rakuten. I saw some other people asking about that, and I said I would do it. And so there you go. Let's go to the beginning. Where are you guys at? Org Danu's in the house. What's going on there, Org Danu? I appreciate you, my friend. Hello, Dr. Jim. Avgo earnings tonight. Any thoughts? Ooh. Yeah, maybe. Avgo. That's Broadcom, right? Broadcom. Up $6 today. $400 stock. I mean, 2 days to go in the cycle, in the front week, that is. I mean, this is it, guys. It's calling our name. And we have not done one of these. I feel like it's been a while. Like, I feel like it's been a minute since we've done an expected move butterfly, has it not? Like, I really kind of feel like it's been maybe a week or so since we've done one of these guys. And again, Wednesday going into Friday, Thursday going into Friday. These are some of my preferred windows for expected move butterflies. And so I don't know, man, maybe, obviously bullish. I mean, if you can't beat them, you join them. So I'm thinking, I mean, what if I did like a 495, 525, 530, 565, I guess it would be. That's probably going to be way too expensive. Wow, it's only $531 for a $35 wide butterfly? Man, that's not too bad. It's not too good either. It's kind of it's kind of right there in the middle, man. Because if this doesn't work, I mean, that's going to be $5 just poof, gone. Like you can see the pile of ashes and the remains, but it is no more. Let's see if we do a $30 wide. Let me do 500, 530, 560. Ooh, that's only $359. Yeah, here it is, guys. Here is the trade. So we are pinning the expected move to the upside, hence the name expected move butterfly. Typically like to go as wide as I can while making it make sense from a position sizing standpoint, because the wider you go, the easier it's going to be to manage, the more opportunity you have to make money on the strategy. Obviously, we could do a super narrow butterfly, like a $5 wide guy, and pay 20 cents for it. But I can assure you that 20 cents is gone. That 20 cents has no chance of turning into more than 0 cents. And so I don't typically like doing narrow butterflies because it's just really, really hard to thread that needle. And so, so 500, 530, 560. Man, I like it for $3. It looks like $393 now. It's still not too bad. So we got filled at $393. So there's your Avgo upside butterfly. And there you go, man. So Orgdenu, thank you, my friend. I appreciate you for that trade. Daniel Perkins in the house. What's going on there, Daniel Perkins? My man. Autumn paying at Bonefish this week as we lose some BEU shorting Micron. Who could have seen that coming? That's what I'm saying. And that's what you guys are for. You included, Daniel Perkins. Like, I think you might also be short Micron, so maybe you're on the same side of the boat as me, which it is leaking, and it is leaking fast. So I would find a way out quickly. But, yes, it appears It appears that Autumn may have to pay for Bonefish. Oh, this is so funny. You guys are going to love this. And by love this, I mean, you're probably going to be like, all right, I really didn't need to know that. When Autumn, when Autumn and I go to dinner, so this is like quite literally one of my favorite things to do on our dates. So we've been married for, man, it'll be 17 years in October. So we've been married 17 years in October. So what I love to do when we go out for dinner is when the waitress or waiter comes up, the server comes up and takes our drink orders or whatever. My wife hates it when I do this. Like she'll get the drink orders, whatever, and then as he or she is walking away, I'll just say, "Oh yeah, by the way, separate checks." And like she'll just be kind of taken aback, but she's like, "Okay, that's fine. And then I don't mean that seriously, of course, but she doesn't know that, or he doesn't know that. My wife doesn't quite find it as endearing as I do, but it's so much fun. It's just so much fun because it's kind of like a reverse surprise and delight. Like it's kind of very much the antonym to a surprise and delight, but I do that all the time. And so it does appear, Daniel Perkins, that we might be actually doing the separate checks at Bonefish here pretty soon. But Sam L's in the house. What's going on, Doc? The algorithm and the AI tried to silence you, but on the contrary, my brother, I know, man, they tried to get me yesterday, with the Tasty Trade Siesta and this, that, the other thing, but we did it, man. We powered through, and you guys helped me. And so I appreciate you guys, man. I appreciate you guys so much. So Point B is in the house. Dr. Jim, welcome to Theory to Practice, where we turn market pain into premium gain. The market's bleeding, and we're here to sell into it. I don't know, man. We're trying to do something. I mean, obviously, the market being down today is helping. We could use a whole lot more where that came from. But, again, we've got Avgo to the upside, and maybe that can be the one thing that can save us, save the whole season. And so, Sam, with the platform down, you've somehow become even more powerful. I don't know about that. No charts, no trades, just pure commentary, bloops, and elite roasting skills. Yeah, it was fun yesterday. I did kind of like it. It kind of just felt like, it almost kind of felt like when school got canceled when you were a kid. Like, you get the, whether it be a snow day, a rain day, just some random thing, like school gets canceled as a kid. It's like, what am I going to do for the rest of the day? Like, I could literally do anything. Right. And so when the platform went down yesterday, I was like, all right, what are we going to do? We could literally do anything. And I was like, well, man, let's just hang out. Let's hang out in the chat. So it was kind of fun. Like, we didn't have any tools. We had no reference points. It was just me and you just talking about trading, man. Just me and you just talking about finance and trying to find our way to some BEUs. And unfortunately, we didn't find any, but we're trying again today. And so Wolf is here, the best 3/4 of an hour on the network. Let's go. Yes, it is the Dr. Jim Power 3/4 of an hour. And so I appreciate you guys so much. Thank you there, Wolf. I'm going to send you that cash that we talked about for you putting this comment in the stream at this very time. So thank you, my friend. Danish Dynamite got long the pullback in MNQ with another ladder put ratio. What is your plan with your long call? I think you mean my short call. Hold and hope or sell a put against it. We sold the put against it. But I really love your plans with the laddered ratios. I like that a lot, my friend. It's really, really smart and strategic to do that. Point B, Clean Tigers is here. What's up there, Clean Tigers? Appreciate you. Point B, Dr. Jim, you've been busy in these markets. How many trades did you put on today, and which one had you feeling like a genius? Well, I mean, you guys saw we did the Avgo trade. We did the Amazon trade. We did the MNQ trade. Now, were there some other trades happening and some stealth accounts? Maybe, maybe not. But right here, right now, we've got Avgo, we've got Amazon, we've got MNQ. And so that is what we are doing, and now I'm going to stick with that story. And so Sam L is in the house. Time to light up a stack of cash. Forget Avgo and CrowdStrike earnings trades. Let's play AI earnings instead. What could possibly go wrong with a ticker that is literally called AI? Yes, you've got AI. And again, just to make sure everybody's clear, BEU is still available. So BEU, it is out there. It is for the taking. It is the lowest hanging fruit that is dangling off the tree. And so I want to see one of you guys get to work on that. I want to see some prospectuses, some prospecti on my desk in the morning for BEU. We don't need to necessarily sell it to anybody. It can just be our little deal. Like, it can just be a little private venture. And so BEU. But yeah, AI, yeah, I'm not touching that, man. $10 stock? Nah, I'm not touching that. I appreciate you, Samuel. You know that I do. But yeah, even I can't do that. Brian Dowdy, hello, Dr. J. Just talking about the realized P&L, bros. Yes, as the platform was down yesterday for us. Yes, I showed you where I'm getting hammered. And again, it's very important to me. When you guys ask me, I will show you. Again, I don't know that I can do it all the time, but if you guys ask me every once in a while, I've always shown you. Jared Kramer, Clean Tigers. Sergio's in the house. What's up there, Sergio? Sebastian is here. What is up there, Sebastian? I appreciate you. Samuel, dear Algo, with the platform not working for the doc, we're finally discovering your hidden talent, professional roasting. Man, I appreciate you. I feel like I'm the roasting receiver though, because you guys came to play yesterday for sure. So Manny TP, what is up there? Manny TP is in the house. Man, Manny TP is here. I was scanning the comments. iPod Touch is in the house. Of course, iPod Touch is in the house. The market's almost down 0.5%. Of course, iPod Touch is here taking some victory laps. The market's down like 40 basis points. And so good job there, iPod Touch. But Manny TP is here. Oh, hey, Dr. J. I'm in a messy micron position. I've been managing for a while. I'm long one June 790 call. I'm short one September 770 call, so a short call spread, and one September 770 put. So let me think. That's straddle. That's a straddle with upside protection, right? Net credit of 2650. How would you manage and when? So you're short a 770 call and a 770 put. Isn't this a big lizard or a spiked lizard? I haven't done one of these in a very, very long time, but you've got Micron. Yeah, you're actually, I mean, if I'm reading this correctly, right? You have a long 790 call that's in the money now, obviously. And then you have a short straddle at the 770. I mean, there's nothing to manage here unless I'm reading this wrong. Like, you've made money on this trade. If your net credit is 2650, your risk is capped to the upside by the presence of the 790 call. And so the fact that Micron is at 1070 is kind of irrelevant to you from the standpoint of like just hemorrhaging cash and like, you know, losing a lot of money. Like, that's not really an issue for you. Unless I'm reading this wrong, which could be the case. So Manny TP, it looks like you're in a good situation. You could probably take it off for some kind of profit. If I'm wrong about that, follow up with an email. I know we've emailed a lot in the past. If I'm misrepresenting your position, we're pretty close to the end of the show. So if you put it at the end now, I won't see it. But just follow up with an email and I'd be happy to help you. But this looks like a pretty good situation for you. Jared Kramer is here. The good doc is with us on our small account liberation day eve. That is correct. Yes. I mean, you've got smaller accounts and it's like, man, you're trying to do things, you're scalping options, you're scalping stock, whatever you're doing. That's been hard to do, man. That's been really, really hard to do. You know, even with larger accounts, like medium accounts, like 25, 30, 50,000, you got to keep in mind is if I've understood the PDT rule correctly, which I maybe have not, and that's very possible, it's 25,000, but you've got to keep 25,000 in cash. Like once you dip under the 25,000 cash level, like there's all kinds of problems that come along with that. So, I mean, having 25,000 in cash on the sidelines is one thing, but having 25,000 in buying power that you want to use for other things, if you want to make adjustments or hedge off risk or whatever, you just see opportunity, you're still kind of hamstrung unless you've got, I mean, if you've got 100, 200,000, you're probably rarely dipping under 25,000 cash because of just, you know, strict buying power. But even at like 30, 40, 50, 60, 70 even, you know, staying above 25,000 all the time, you know, it may not be something that you're able to do, but that's going to go away apparently. Again, tonight at midnight, you guys need to be tuning in for that. Let's see. Point B, Dr. J, when you're trading 0DT at SPX, how do you think about gamma risk accelerating into expiration? And at what point does theta working in your favor get overwhelmed by that gamma exposure? This is a great question. And I don't think about this. I don't worry about this because I don't sell premium, like especially not naked premium in a 0DTE framework. Like for me, I personally see more opportunity in the 0DTE on the long side, where you want to take a directional shot. Now, I know the Tasty Research team has done a ton of research around, you know, selling iron condors and selling iron flies and selling spreads, selling naked, all that stuff. And that's amazing, right? That's terrific. Personally, for me, I want there to be more time when I sell premium. I want there to be more room for more wiggle room for me to be wrong, more time to go by, just more juice, more buffer, all those things. They're all gone in a 0DTE world. Like you've only got a couple of hours at that point. And so you're just not getting quite the bang for the buck. Because still, I mean, you know, you take a 3 or 4 or 5% daily move, which they don't happen that often, but they can certainly happen. They have happened and they will happen again. It's like, man, when those things happen, or even a 1% or 1.5% move, I want to have more of a buffer against that move. And selling something in a 0DT world is just not going to give me that. And so I don't think about that because I don't typically do that. So Jared Kramer, Brian Rakuten is here. JB Atlanta is here. Or not Atlanta, but JB ATL is here. Or maybe that is Atlanta. Yeah, that is Atlanta. I thought it was ALT, but I'm like, that's not Atlanta. That's the alt key on my laptop. And so it is JB Atlanta. I appreciate you. Teach me, Jim. I'm here, my man. I appreciate you so much. Thanks for tuning in. Hopefully you're getting some value from the show. Ranch is here. Same out. Doc, turns out the platform is only part of the show. The commentary, the bloops, and the savage one-liners might be the real alpha. You are the best, Doc, man. I appreciate you guys so very much. Man, look at Chuck Bono is here. Man, Amaro Amigo is here. BBB Fine is here. I got to run. I see Ron Bashar. Hayden is here. Man, I see Hayden. You got a question about expecting meal butterflies. Come back tomorrow. I do see, Bonefish is waiting to see if they can open another place with my investment. My man. So here's what you need to do. Call them, ask them. If they say no, start working on that prospectus for BEU. It's wide open. It's got your name on it, Hayden. So get to work. But I got to go. I got to run because I got to get you guys over to Tim Wright. But I appreciate you guys, man. If I can ever help you guys in any way, shoot me an email. I am jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investopedia says we're the best for options trading, period. Investors Business Daily raves about us. With stockbrokers.com, we're #1 for options trading and best in class for futures too. The Motley Fool really likes us, and so does Broker Chooser. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years.
Hello, everybody. Tim Knight here, and T-minus 7 days till SpaceX. Speaking of, I did a video about SpaceX, which we have just released. We actually released it last night, but we did a little more editing on it. So if you saw it, then it went away. It's back. So please check it out. Tasty Trade channel on YouTube. I also tweeted it out and put it on Slope. It's all over the place. So it is basically a conversation kind of a one-sided conversation, but it's a monologue with charts about IPOs, hotly anticipated IPOs, and maybe what we can expect from SpaceX. So do give that a watch. It is a gloriously red day for a change. Feels like it's been years at this point. It's fractional, like the incur's down 0.24%, but it feels like a crash compared to what we usually have to contend with. And stars are starting to kind of line up. And it's good. There's very little green on the screen. And, the one thing I wonder to myself about SpaceX being an inflection point is everybody's saying that. I guess that's the contrarian in me. Everybody's talking about, well, SpaceX's IPO will mark the top. Well, if everybody's saying it, it's probably not true. There's no doubt it'll be interesting to watch. There's no doubt there'll be complete mayhem on an intraday basis next Friday. But in terms of what it means for the market as a whole, jury will be very much out on that. Kind of wait for the big three, Anthropic and OpenAI as well, whose own IPOs I'm sure will be informed by however SpaceX behaves itself. Anywho, let's jump into the charts. I've got plenty to share with you. We're going to start off with our friend Bitcoin, which, true to form, just keeps falling. I'd covered my short yesterday, as I mentioned, and I declared that probably was a mistake. It was. I would just point out these broken trend lines. The last time this happened here, and this has just been picture perfect, we broke the trend line and fell, but we just kept falling a lot more than that, and that's probably going to happen here. My readers know this very well. I'm a really, really, really good chartist, and I stink as a trader. So that's my way to balance the obnoxiousness of saying what a great chartist I am, because on the actual execution side, not so much. Usually get out too early, and that's definitely happened with Bitcoin, because I've been watching this thing stumble along for eons now, and it's got a lot more to go. And the crypto people are a little less quiet than they normally are, although the excuses they trot out tend to come in the flavor of either, well, it was a penny back in 2009, or Bitcoin goes through a bear market every 4 years. That's their thing these days. Every 4 years there's a bear market. It's like, well, I can see the chart, and that's not true. There's no clear cycle to this. On the contrary, it looks like it's basically topped out and will move lower for years to come. We may never see $128,000 again, ever. People may wonder, like, what were they thinking? Anyway, it's still falling. If you're still short Bitcoin, good for you. Hope I was helpful in that. And it's just working its way towards true value. We can see that with IBIT as well, of course. And this was kind of the analog that happened last time. This was the distribution top, and then when it finally cracked, boom, down it goes. This is a bigger top here, and we're working our way lower like so. And of course, any related items in the crypto world have been affected as well. The amusingly named bullish, BLSH is the symbol, has been crumbling. This has fallen from the 70s down to the 20s. And most recently, we've got this little top here, which has yielded a nice quartet of red bars. And it's not just Bitcoin, of course. NFTs are dead. The altcoin scene, tens of thousands of coins, is worthless. The handful of giants like Ripple and Ethereum, kind of the next tier below Bitcoin, those have been horrible but not destroyed. Like if you look at Ethereum, down today alone almost 5%. I've forgotten the predictions they were making for this, and of course we all remember so well people like Kathy D. Wood talking about $1 million Bitcoin, $5 million Bitcoin. I think someone actually said $21 million Bitcoin, which I think they conflated with the theoretical limit of how many Bitcoins there can be. And Tom Lee from Fundstrat had some very highfalutin targets as well. Ain't nothing there. It's just, Mrs. Goose Poo. It just keeps falling. And Tom's, not Sosnoff, but Lee, his BMNR, Bitmine Immersion, has been behaving like so. So it's moved from the 80s to the teens. Lifetime low on that, almost a 90% drop. So the whole crypto space, I certainly hope equities look like this one day. Be nice if they caught a whiff of reality. But I love crypto. It's organic. It's natural. It behaves itself. It is chart compliant, if you will. And it's going down. It's got all kinds of good things going for it. So yay. Over in equity land, which doesn't quite have the grasp of truth and reality that crypto seems to have found, the diamonds are down a little, about 0.4%. Lifetime high yesterday. Looks like a rare lack of a lifetime high today. EFA, which is equities outside North America, those have turned away from this closed price gap. We're essentially trading now where we were trading back in late February. In other words, just before the war started. So this was before the war started, and this is where we are now. So this big old letter V for nothing. I mean, it's just net, no change. One thing that has been a drag on the emerging markets today is China. I made mention yesterday about how China had a big old bounce yesterday. Well, that's gone. You can see here, we had this summit, and it fell, and crawl back, big explosive move higher, and then puco, down it goes. So that's all eradicated. And of course, China peaked almost 20 years ago with their equities, almost 20 years ago. Can you imagine? And they've been just trying, by way of trillions of dollars of debt, to claw their way back higher, and it has not worked. Okay, so let's jump back to the US of A. Here is NVIDIA, down over 3%. Let's focus in on this. We've talked about this band of support. We had been trapped inside here for about 10 months. Escaped, got kicked back down, and then really escaped. This was the lifetime high. And we sank, found support at that pattern, and started to lift off again. And as of yesterday, it'd be very plausible to talk about new lifetime highs. Well, that ain't happening, because we fell yesterday after all that, and then fell more today. We're kind of getting within the sniffing area of this shape again. Let's keep an eye on if that holds or not. If we re-enter that support area, which would make it not support anymore, that's worth noting. Semiconductors are richly valued, to say the least. Some of them with PEs in the hundreds, some with PEs that don't exist because there's no E. But as we look at the likes of SMH, lifetime high today on an intraday basis, and probably a lifetime high close. But NVIDIA is the king. And if that slumps back into that range, that's probably not going to mean good things. We're still getting interesting earnings here and there. There's kind of an object lesson for me yesterday, because I had no position in Palo Alto Networks. In fact, even though I live in Palo Alto, I don't think they're anywhere near here. They've co-opted our name. But they had earnings yesterday, and they went zooming higher, just roaring higher. And I wouldn't have cared were it not for the fact that I am short CrowdSpace, or is it CrowdStrike? Yes, CRWD. Shows how much I know. So CRWD, CrowdStrike, and it rose in sympathy with that. And I was awfully tempted to just stop the pain and cover it and get out. But interestingly, I just crossed my arms and didn't do anything. And PANW, Palo Alto Networks, went from a huge move higher to actually sinking today. It lost all that overnight goodness, and it started to wither away. So we're down almost 6% today. And in turn, CrowdStrike, CRWD, is also down. So bottom line is, I did not cover, did not take the loss. I'm taking a bit of a risk because they do report after today's close. So we'll see how smart I feel after that. But the point is that monkeying around with overnight trading, after hours trading, doesn't always go that well. So luckily I avoided it. I should have put this near the top, but I just want to also make mention in terms of country friends, Brazil, EWZ, look at this. It has really been sinking. I suppose because oil has lost some of its gargantuan pricing in recent weeks, but Brazil is a real outlier in terms of the country funds, in sharp contrast to, say, EWY, South Korea. I'd mentioned it's a good day, and part of that goodness is bonds. Nothing dramatic. Bonds don't tend to move too wildly, but it's inching the right direction. The ZB is down 0.42%, and in turn, TLT, against which I've got November puts, is down almost exactly, for good reason, down the same percentage amount exactly. So this is tiptoeing away from that big range of overhead supply. So that's good. I'd like it to keep doing that. A few odds and ends here. I shorted Dell. In fact, I think they made like the title of my video a couple of days ago. But yeah, I was lunatic enough to short Dell on this day at a good price after having endured the pain of, well, basically, okay, I didn't deal with this, all right, wasn't no position. Shorted it here, got out immediately here at a loss. I was kind of ticked off, so I re-shorted it at a better price later that day. Wound up profitable the next day, and I'm still holding on to it. So Dell is sinking some more, about 3.25%, and I will happily hold on to that short until we can seal that price gap up. So that's worked out so far. I have no position in IBM, but I will note as an aside that the fervor from the past couple of days is gone. That's been eradicated. So this big pop and this big pop has been Control Z'd on that. So that's IBM. I am short Microsoft, which is sinking nicely. I shorted it on this day based upon its proximity to this price gap. And my stop was set above the price gap. Mercifully, it did not get to it. And so this has been nice, been sinking away in Microsoft, which is an exceptionally weak stock, considering its compatriots are like crazily high valued. It's lost like 20% of its value from its peak. Quiet dookie. Shop, also short this, down about 3.33%. So far, so good. HIMS is down a little. Short this is also, it's, yeah, so looking pretty good longer term. And also a couple of other shorts I got going on. Now in OW, this is ServiceNow, and I got into this one back on here on Monday based upon its post. I don't know if it was earnings or not, but it was a very strong day, so I shorted it here. So nice couple of days tumble there. And also SMCI Supermicro, I got into this one yesterday, and this was down a bit more than 7%. One last one, not short on this, I've put options on Carvana. This is my shortest term one, September's, so it's got about 102 days left, but working out so far so good on this one. Sinking again, about 3% on Carvana. I really like this chart from a long-term perspective. Ooh, I'm out of time. Well, that's typical. Anyway, Broadcom reports after the close, and as I said, CRWD does. So those will be worth watching. And yeah, I welcome the red day. It'd be nice to have a few more of them. So watch that SpaceX video. I think you'll like it, and I'll see you here tomorrow. Bye-bye.
First thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
The old PDT rules are going away, and tastylive is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the tastylive viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from tastytrade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. tastytrade. Download today.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investors Business Daily raves about us. Stockbrokers.com says we're best in class for futures trading, and Broker Chooser thinks we're pretty great too. So what else can we say other than trade like a trader? Tasty Trade.
When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Earn up to $3,000 in commission rebates.
Ring the alarm, boys! Turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Mr. Vecchio, we are back for the last call, and I think this is probably our first decent-sized down day since middle of May. You got E-mini S&P 500 futures down about 50 handles near the lows of the session here. They got as low as 75.62, so about 10 handles lower from here. You got the NASDAQ basically unchanged here. It's down 70. It has been the strongest of the group all day today. You got the Dow down 555 and the Russell down 42. The Russell really the biggest mover of the group to the downside, about 1.5%. You do have a big move in bonds. Bonds down 15 ticks here, down to 112.02. You have volatility futures basically unchanged. They were bid a little bit this morning, but you really didn't have any sort of follow through throughout the session. Volatility continued to get smashed here, down about a nickel here. You have oil at the highs or near the highs of the day. We got up to 97, so another $1 higher. But near the higher end of where they've been trading. Gold and silver have both been getting killed. Gold's down $43, silver down $1.93, and Bitcoin looks horrific, down to 65,000 and change. What do you make of today? Is this just the short-term, like little paper cut, scare the children a little bit, or a sign of things to come?
I mean, you got to give it to the bears. The S&P 500 was 1,278 points off the low in March, and now we are only 1,223 points
We're
off
crashing.
the low from March. It is over, Nick. Hug your kids, hug your wife. Say goodbye.
It's the sell in May just took a little while to materialize, couple extra days.
They really had it right this whole time.
I know it seems like I hate to bring this word back, a nothing burger of a day. You do have a couple names that have had some huge swings today. I mean, the semiconductor names are a beast of their own. I mean, I was looking at ARM this morning. ARM has had 40-point intraday range, 417 to 373 and change. I mean, just an incredible move. Some of the major big name tech stocks, talking about NVIDIA down $7 and change. That's a big move. Microsoft giving up its recent rally here. It's back to 425-ish. Google is 40 or 50 handles off of highs. Not that that's any sort of crash, but it is certainly off the highs. Tesla hasn't looked great today. You got Apple a little bit weaker as well after a nice rally yesterday. Meta bouncing, 20 some odd dollars today, but it too, has not participated in the upside. It's really been that kind of semiconductor space that's really been the leader of the group here. Does that mean anything to you? The NVIDIAs of the world just getting chopped down.
Semis still look good, Nick. Micron now at $1,081 still has a forward PE ratio of just 10.7.
Yeah, so it should go up higher, should go more.
Why not? If we're breaking out of the semiconductor boom bust cycle and now there's permanent underlying demand here because of the AI CapEx boom and build out. Look, if AGI is what it is, there can only be one. Someone's going to win the race. It's existential. The U.S. just lost the Iran war. The U.S. lost the Iran war. Let's be clear about that. The biggest strategic mistake that we've seen militarily in our lifetime, Nick, perhaps since Vietnam, but perhaps more than that. And you're telling me that the empire is going to survive? The empire is going to survive if we lose AGI to China? No, this is existential now. This is existential now. And yes, that's bubble talk and that's ridiculous here. But you know what? Until the market stops giving you the trade as a momentum person, you got to keep buying dips. I bought dips last week. I bought another dip today in the S&P 500. I'm going to get punched in the face one of these days because the market feels frothy. But until then, summer trading, low volatility, low volume. Just embrace it while we've got it.
Another good point. I mean, we had about 1 million contracts traded in the E-minis on what has been probably the most volatile downside move we've seen, in quite some time. A shocking number of lack of participation in the futures themselves. I also totally agree with what you're saying here. And this has been, this is nothing new. It's been a momentum-driven market. Things that go up more the next day. And that has been kind of the move, especially the stuff that is moving in a big way. It has been continuous. And the call buying, the skew, all that stuff plays into it. And the way to trade it, I think to your point, is like one day you're going to get whacked. And so, you have to keep size in check. And I don't think this was the whacking. You always got to keep size in check. But, you got to be careful with what sort of positions you're putting on. We've been shying away and have not really sold any sort of upside short calls. All sort of downside delta that I'm putting on is via like diagonal spreads, calendar spreads to try and play into some of the juiced up volatility, which is on both sides. You have the skew to the upside, but volatility is through the roof across the board here. But that's the sort of trade that we've been having. And, if you put on the call diagonal spread and the stock goes down, you can leg out of the short calls. If you do the put side and the stock goes up, you can leg out of the short puts. It allows you a little bit of flexibility to trade around what has just been a whippy market. But I agree with you. It doesn't. I feel like when the move is over, you're gonna know. Like, I don't think anybody's gonna be surprised when we have the stair step lower. It's not gonna be one day. It's not one
Stair
day.
step?
Oh, you think it's gonna be a big
I'm worried
move?
about the elevator. Oh, I'm expecting an elevator right now, Nick. I mean, just think about the crowded positioning of some of these semiconductor names. If you get a break here, a lot of people are going to be caught wrong-footed. But that doesn't mean the fundamental story has changed, right? You could get a bad timing because of a gap open higher or lower, and the narrative hasn't evolved whatsoever, but you just end up getting a bad entry. So that's why, at least for me, taking this in a risk-defined fashion, selling puts or selling put spreads up here at all-time highs, where's the edge in that? That is the literal picking up pennies in front of a steamroller. Yeah. VIX is sitting at 16, 15 handle on the VIX. That's just crazy to me. So you get these little dips in that 1 week, 1 month average, like little envelope, looking for a move a few days later back to highs, because if the trend's in place, it's going to keep giving you that, but not committing more than like 2-3 days out into the future at all.
So it's funny that you say that, because that's kind of been my thought of how people are approaching this market, not only from just a momentum standpoint, but things have gotten so big. I mean, you look at Micron, you called out Micron, to buy a couple shares of Micron is a lot of money. And to have it go up $20 on the day and you make $20, I don't think people get excited about that. And I think people have been using, you've talked about like perpetual futures have been in focus recently. Call buying just in general. It seems like people, instead of buying one share of SPY, they're buying a call in Marvell that expires, at the end of this week. Like that's what people, I don't think people want the $10 gain in SPY or the $5 gain in one share of SPY. They want the $1,000. And it's worked. It's worked for weeks and months now. So who knows if it continues, but it does seem to be a little frothy. Have you been looking at anything else? I mean, does this move in oil just doesn't matter anymore? Are you ready to see? I've heard people, the new talk that I've heard is that oil is so like last economic cycle. Like the new cycle is going to be like renewable energies and like, we're going to have upgrading the grid and all the things that go into like electricity. Like who cares about the oil stuff? Like we got our own, everybody else is kind of screwed, but oil is just so last. We're going to have flying cars that are battery operated, solar powered in the sky.
Yeah. Solar power in the sky. That's fun. Although they're doing that right now. There's a Japanese company that's converting solar energy to like microwaves and then beaming them back to Earth. That's actually kind of dope. We should do more of that kind of science.
That
That's
sounds
awesome.
interesting.
Yeah. Nick, oil to me is so misunderstood right now still. Here's an interesting stat. Mike McGlone from Bloomberg Intelligence, the senior commodity strategist, was on with me yesterday for Trading Trends. It's up on our YouTube page now.
Mm-hmm.
He pointed out that when the CL contract in its current iteration first traded, it traded at exactly $93 a barrel, which was interesting for the timing of yesterday's show because yesterday oil was trading at $93 a barrel.
Yeah.
Oil hasn't become any less important in the very short term. And we're getting to the levels where you're starting to see inventories drop to a place where tank lows start to get hit. You actually can't zero out tanks because there's like a layer of oil that sits at the bottom of tanks that can never be pumped.
Mm-hmm.
It's basically dead weight. The nozzle, the faucets, literally that sit in the tanks are above the floor. So you're going to have some oil that can never be pumped out of these tanks, so to speak.
Mm-hmm.
And once you get to that level, you start to see supply concerns build up in the very short term. So as an equity bull, the way that I've been hedging against my short-term bullishness is by protecting myself in the event that we do see a supply shock short-term come back in, which would be reflected in the oil futures curve vis-a-vis another aggressive backwardation here. We're nearing the end of the line for the CLN6 contract, so I'm looking into the Q6 and Z6 spread here, long the Q6, short the Z6, which has been working out pretty well for the past few days as it's bet on. It's working out well again today. But the idea there is that if some of these short-term oil supply concerns really do materialize again, and the war doesn't get resolved and the ships don't start moving, well, then you get that backwardation kick back in and stocks then probably suffer. Yields go up, oil's back through 100. Everyone loses their mind again temporarily. And who knows how high it goes, but that's how I'm protecting myself here. When we get below 90, I'm selling puts, 75, 70, put spreads in that area. We go above 100, selling call spreads above 120. But right now in between, playing this calendar spread kind of thing, long Q, short Z.
Going back to your thought about the elevator, how big of an elevator does it have to be for people to not buy the dip?
In a single session or over the course of a week?
Let's say a week.
More than 5% over the course of a week, probably 3% in a single session gets people to not buy the dip.
You think so?
Mm-hmm.
I don't even think that even scratches the surface. I think if you asked 5 of my buddies, 10 of my buddies, if the market went down 3%, what would you do? They would tell you they'd buy it. Like every one of them.
I'm sure. But in a single session, if the market dropped 3% one day, that wouldn't scare you a little bit?
I don't think so. I don't think so.
Well, it depends. It's totally contextual, right?
Yeah.
It depends on what happens.
Yes. Fair.
But speaking of contextual, we have some good context here. Nick, do you know what happens at midnight tonight?
Yeah, today it's a huge day. It's a liberation for us Johnny traders. The end of PDT ends here today. Going into tomorrow, June 4th, will be the first day free. The pattern day trading rule is being eliminated, and Mikey Butler and I, along with Chris Ingberson, who's our CTO here on the Tasty Trade team, on the Tasty Trade side, is going to be joining us at midnight Central Time today. You might even get a drunk Chris Vecchio, depending on what goes on with the Knicks Spurs tonight.
1 o'clock in the morning. What do you think I'm doing at 1 a.m., Nick?
When does the basketball game end for you guys? It'll be like right around then, right? Doesn't
It's probably going to be around midnight. It's like 8:30 start. It's a finals game.
Yeah.
Midnight.
Yeah.
Probably,
So,
yeah.
you can come hang out with us.
Yeah, I'll be in the chat.
We're going to be broadcasting live. We'll have the chat open on the YouTube channel. It's midnight Central. We're ringing it in. It's going to be great. It's going to be a lot of fun. If you got questions, anything you want to talk about, we got 30 minutes that we're going to just hang out and chit chat, talk about PDT, talk about trading. Come hang out with us. It's going to be fun.
Come hang out with us.
Even the S&P 500 futures down 43. The NASDAQ down 20 here. Thank God that we didn't get the 10-day green close. That would have been the record. That was the other talk of the town, right? So this
would have been horrible.
You think that would have been bad?
Horrible.
I think that would have been bad.
Why?
The tweets afterwards. Because the tweets would come.
You get the people. Oh, when the S&P 500 gains 10 days in a row and has up 10% over those 10 days. This is what happens.
Go check your 401ks.
Okay. I mean, Nick, when we had that stretch in April, for what it's worth, we covered 9.8% in 10 sessions, and then we ultimately got into a window where we had more than 10% in 10 sessions.
Yeah.
The forward returns for the stock market at that point were like, what happens in the rest of those years? Oh, 14.4% higher the next 6 months. Every year in which we've had a winning streak of at least 7 days occur once. What's happened? Well, 19 out of 20 of those years, we've seen gains average 18.8% for the rest of the year.
Mm-hmm.
So winning streaks are not bad things. I know people think of the market like a coin flip, kind of like a random walk from time to time. And like, oh, if it's up 3 days in a row, then it can't go up a fourth. Statistically, that's impossible. But
it's a gambler's fallacy.
Yeah, winning streaks are good things.
We do have a couple earnings after the close. Two big names, I will say. You've got AVGO, Broadcom, reporting earnings after the close today. They report at 15 after here, the close. Stock has had a huge move. It's near the highs of the session here. It was about, in the pre-market, I think it got up to like 495. I'm playing that very, very small to the upside with a butterfly. You also have CrowdStrike, which has had a huge move to the upside, selling off a little bit today. You had PanW earnings last night, kind of weighing on the space here, but CrowdStrike, another one that has earnings. I'm playing that one to the downside. So those are the two biggest names of the group here that have earnings after the close. If you want to get those trades in, you got a couple of minutes here. Is Broadcom, I mean, you just got the Google news. They're selling stock at the top, $80 billion, financing a whole bunch of stuff in the AI space, from chips to build outs to all that stuff. Got to go straight to AVGO, right?
You go straight to Broadcom. I mean, it's on the Google side of the equation. It's not part of like the NVIDIA, Oracle, Microsoft, OpenAI part of the flywheel. Do you find it concerning? I know we're talking about Broadcom here, but do you find it concerning Google's down move after their equity raise this week?
I told my dad this. I was like, if you thought that you had way more upside in the stock, you wouldn't be issuing the stock. You wouldn't be diluting shareholders. You'd be financing debt. And so that is something. It doesn't seem like a great thing. On the flip side of that, you could spin it as, hey, if Google says they need $80 billion and they need it so bad that they're going to, put a 2% dilution, which is nothing on the shares. I mean, a $4.5 trillion company, so it's nothing. But they need it so bad, they need it right now to to build stuff out, then maybe, it's still early in this trade. I think you can make that argument in either direction. But it seems odd to me that they would do that instead of just because Google can walk to anywhere and get, $10, $20 billion financing. You don't think so?
Doesn't it concern you that, so this is well, can they? I mean, that's the question right now. Have credit markets dried up? I mean, here's a company
for Google. Google doesn't have credit.
That's my point. Why wouldn't you take out debt? Why wouldn't you issue debt to do this? Why would you dilute your stockholders in such a manner unless the credit markets are drying up? Google's a free cash flow monster.
Yeah.
Of course they'll be able to service their debt. Who doesn't want to let them issue debt? Raises an eyebrow. That's all I'm saying. It's interesting when companies of that size choose not to tap credit markets and do equity raises instead. That's all.
Yeah. I mean, I think obviously if you've been watching from the sidelines, you've gotten about a 10% down move in Google from highs. So, maybe that's your spin here. I actually got long a little bit of delta there, again, with upside diagonal spreads where, the risk to the downside is limited, and not that I think there's that much, huge downside risk in Google. I think it's one of the winners of the group, but it certainly made some interesting opportunities here. My question becomes, how do all of the other semiconductor stocks not go do this right now? How is this not every Marvell just doubled in 48 hours? How do you not come out and sell shares? Micron, same thing. How do you not do that?
You not do that? I mean, it's really expensive right now. You just said before, what's the appeal in selling the calls up here? Maybe the call skew is so great that in Micron you can go out to like $1,400 strikes.
No, I mean the companies. How do the companies not go out and say we're going to do $10 billion shelf right now? Why not?
Why does a company like Micron, which is retaining like 80% of its earnings, need to do that?
I don't know, because the money's there.
These are real businesses, Nick. This isn't a GameStop or an AMC.
Yeah, but okay, you want to build another plant. Demand is so off the charts. We're gonna put what's 10 billion, 1% on Micron. They say we're gonna just offer 10 billion shares, and then we're gonna finance the whole thing with that. How do you not do that?
From a management perspective, that may be the best thing to do, right? If they think that their shares are overvalued and that this is unsustainable long term, they could absolutely do that to kind of put a lid on things and slow the pace of growth. Because the worst thing that happens is then that this becomes the baseline for them moving forward. And in a year or two, management's turning around going, yeah, we disappointed everyone. Sorry. And then they all lose their job. So managing expectations is part of the job. Nick, you raise a good point. We can't discount that. The question is, why would a company now, bouncing this back off of you, if you have the Anthropic, SpaceX, all these IPOs coming up, do you feel like that if you're going to have to tap equity markets for more money, do you want to get that done sooner than later before all of that capital dries up to chase the AI trades elsewhere?
I mean, Micron has traded 34 million shares today. It's at $1,000. So it's traded $3.4 billion today in notional. Why wouldn't they come and say, you know what, we're trying to beat everybody to the punch. We got to build another 3 factories. We're going to do $20 billion. Like, I don't know. If Google's the first, I don't think they're the last. I think you'll see this more often. And
let's play that game. If Micron needs to build new factories, then the trade is to own semi-cap companies, right? The companies that build the semiconductor equipment, like the ASMLs of the world.
Sure.
That's the trade. That's the trade then.
Maybe.
So if
the John Deere's to build the data centers, the cats.
Mm-hmm.
Yeah.
That's really the play then. Go down the bottleneck. The
Yeah.
bottleneck becomes less memory and it becomes more of the companies that have to build the factories and service that build out. Which is fun.
Throwing, shooting spitballs. Just thinking out loud with these things.
Well, it keeps evolving, right? If NVIDIA was the trade, GPUs were the trade for a while. And then if you got out of GPUs and went into something else, you were fortuitous with your timing. Yeah. Then NVIDIA's chopped around sideways for how many months? Well, Micron, SanDisk, Marvell, Dell, Intel, HP, IBM. I mean, just choose a name.
Yeah.
They've all outperformed NVIDIA.
E-mini's down 48 here, much of nothing. The move in volatility has been just incredible. You've had zero volatility. You can't get volatility to go up. I think we would need a 3% down move to actually get volatility to move. I don't think at this point that anything else will move the needle here. What are you thinking on volatility here? And when you look at realized volatility of individual equities, and we talked about ARM, ARM's implied volatility should be 200% based on today's move. I mean, it's over 100%. These are $200 billion, $300, $400 billion companies with 100 to 200% implied volatility. You think something's missing here?
Look, there's the VIX EQ, which is like the equal weighted VIX, which CME puts out. If you look at the spread SIBO puts out, the spread between VIX EQ and the VIX right now is at the widest level that it's been ever, right? So if you're trading the market right now, you're not getting the movement in the indexes. If you're trading and you're looking for volatility, you're compensated by trading idiosyncratic risk right now, single stock names. On one hand, that may mean that you're going to see smaller moves in the indexes. Things will be contained on a relative basis. And so perhaps the realized vol for the indexes underpaces the implied vol. But on the flip side, if you're trading any of these semiconductor names on an individual basis, you are seeing the market where realized vol is outpacing implied, which is difficult to wrap your head around. But that's the dispersion environment we're in at present time. It's very much like where we were in February to an extent, where broadly speaking, the markets chop around, but under the surface, a lot of turmoil.
Yeah. E-mini's down 50 here. Oil catching a little bit of a bid into the close, 96.20 here. Volatility basically unchanged. Bonds back to 112. NASDAQ down 70. A very muted day going into the close here. Anything else on your radar into the end of the week? Do any of the employment numbers? We already got PMI, right? That already came.
We had the ISM services come out the past few days. Mm-hmm.
Do they matter again or no?
Good. Well, manufacturing was good. It underscores the fact that you get this giant data center build out happening right now. If we look to, today ISM services was 54.5 versus 53.8 expected. So you're seeing acceleration there. ADP employment was good. Okay. The only two sectors in the economy that lost jobs in that last month, according to ADP, were mining and information services. Otherwise, everything else is growing. So if tomorrow, if we have job report on Friday, the market doesn't want the Fed to be stuck between cuts and hikes. Mm-hmm. The best thing for this market right now is another good jobs report, which it probably looks like it's leaning higher, which is the pain trade for most people. The tariffs, the war, the economy's going to tank. And yet it's holding up. So no need for cuts. Good for stocks. I'm looking forward to a good jobs report this Friday. I believe in America still, Nicholas.
Always, Chris, always, no matter what.
Always. No matter what.
As we go into the close here, you got E-minis down 54. You got the NASDAQ down 83. The Dow down 600. The Russell down 40. You got oil up $2.46. Volatility futures basically on a nothing day in my book. PDT going away. Come join us tonight, midnight Central Time. Mike and I will be joined by not this Chris, another Chris from the Tasty Trade team. We're going to be bringing in the end of PDT with some fun here at midnight. So come join us then. Mr. Vecchio, maybe we'll see you later.
Maybe. And apparently my takes on Iran and Vietnam are hot. Come to overtime for more hot takes. Next.
We'll see you tonight.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day one. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
first thing about Tasty Trade is how easy it is.
It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. Only at Tasty Trade.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Pay for backtesting? Nah. Trade that capital instead. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial the DTE, stack the legs, see what survives. Check out Tasty Trade.
My people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. A's at the table, crowd tilted sideways. Grandpa talking trash, man, he wild for his age. Kids on the hydrant, street gets wavy. Auntie hit the double dutch, yo, she still crazy. Ice cream truck, roll up, yeah, we all chasing. Pockets on lead, but the vibe's still blazing. Cops roll slow just to see what's good. They know the drill, it's a party in the hood. We laugh, we boast, we live, we boast. It's all fam out here, raise a glass, make a toast. Sidewalk royalty, king of my block. Every place got a story, every joke is a spot. Fun on the block all day, all night. I feel with my people, yeah, we feeling alright. Fun on the block all day, all night. Good vibes only, yeah, that's real life. Fun on the block all day, all night. Hands in the air, no stress, no fight. Fun on the block all day, all night. We just living it up, yo, that's real life. Yo, we just living it up, yo, that's real life. Yeah, we just living it up, yo, that's real life. We just living it up, yo, that's real life.
I'm shedding my ego, watching my tongue. If it ain't kinda necessary, then I will be done. I am human, and I am flawed. My skin is thin, and sometimes I bear my claws. Forgiving me, forgiving you.
Oil up, stocks down. It's Wednesday, June 3rd, 2026. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco. We're here for the next 24 minutes as we wind down the trading day, the last trading day in the PDT era, which I think we should remind everyone. We will flip the switch tonight at 12 Central Time, Ilya. Mike Butler,
I'm excited.
Nick Batista, Chris Ingerson. They're all going to be on air here. So be sure to tune back in. But before we get there, of course, there's still some trading yet to be done in today's session. We are waiting, of course, on those Broadcom earnings here, Ilya. So we'll keep an eye out for those as they do out.
No, by the way, Broadcom has disappointed the last 4 quarters relative to forecasts. So for whatever reason, the markets aren't good at benchmarking Broadcom.
The Broadcom, yes. And so we take a look at the semiconductors broadly speaking today, another day. Matt, we can go to those charts. Semis do lead on the way up. They're up by 0.9%, but it's one of the only few places that you can find positivity in this little corner of the market, because today is broadly speaking a down day. The Russell's off by 1.5%. You have your S&P 500 off by 0.73%. You have your NASDAQ off by 0.2%.
This has really escalated.
Oh, I know. And I said this on last call here because, when someone sends me a tweet like, oh, the bears were right because the market's down today. Ilya, the market was up 1,278 points from the the S&P low in March to yesterday's high, and we're 40 or 50 points off yesterday's high. Like, let's slow our roll for a
Yeah, let's not. I mean, as a bear's bear, let me just say, take it easy.
You'd be the first one to get excited. Volatility is up a little bit. VIX is up 32 cents today. It's still 1609. Volatility futures themselves are actually flat on the session. They don't go anywhere. Ilya, it was a lot of light volume. We're waiting for these Broadcom earnings right now. Maybe they're coming out momentarily, so we'll keep that up on the screen here as we wait for the jostling to continue. But what's your takeaway from this market today, given decent average volume, 1.25 million contracts traded in the ES?
For me, honestly, if you look at the intraday for the S&P 500, what you see is a really interesting sort of tape here. The downside really starts to assert itself for U.S. stocks in particular after the ISM data. Now, the moves worried about oil, they happen earlier in the day, but stocks in the U.S. do their normal thing. They do not care until after the ISM data. Now, the market takes a second to digest the ISM data, but you see just about an hour after, as the market kind of patters around near the tops, what you then find is the market goes, oh, wait a second. This is the thing that we didn't want to happen. But this is inflation spilling into the service sector. What that ISM data essentially shows us is that the economy is overheating under the strain of the many forces buffeting it. So though it is not growing very quickly, it's about within the range for the past 3 years or so, going back to the, let's call it middle of 2023, maybe a little earlier. We kind of established a post-COVID range. So the economy is growing about there. But employment is shrinking. And that growth has come at an escalating inflation premium for a few years now. And of course, with the most recent developments, tariffs and the Iran war, that has only accelerated. And so we're looking at a situation where at the surface, it looks like the economy is basically trotting along. But under the surface, the trot is requiring so much inflationary effort that the consumer is getting squeezed out as all of that starts to spill into services. And you start to see, oh, wait, if there's not a manufacturing inventory rush ahead of even higher costs, be they from tariffs or energy or the war, what is there? And what's really interesting on top of that is this is not just a U.S. story. With the finalizing of S&P global PMI figures, the global worldwide JP Morgan PMI came out now that all the data's out. And boy, is it an ominous story. All around the world, manufacturing is rushing to build data centers, but the consumer is in retrenchment. And it's largely because the cost structure is surging out of control. We're basically back to COVID era inflation without lockdowns, without hope for catch up growth.
Hey, we just had CrowdStrike earnings come out. EPS came in at 110 versus 107 street estimate. Revenues were 1.39 billion versus 1.36 billion expected. Both numbers beat, and this is the 29th straight quarter without a miss here, Ilya. So what are we seeing then? Guidance is coming in. That's it. Some misses here on free cash flow. 4-1 stock split announced. I mean, they beat on most of their guidance here.
Yeah, I mean, revenue up 26% year on year, EPS up 51%. Now, EPS is down on the quarter.
Sure.
But, okay, fine. Marginally, 2% down. Revenue's up 6%. Not the biggest sort of efficiency signal. Revenue up, EPS down. That's not great. They're not making as much off the money, but doesn't look like anything catastrophic.
On to 679 from 750 here. Broadcom reports at roughly 4:15 Eastern. So we'll call it, what, in a minute and a half from now, 2 minutes from now here, Ilya, right around the corner. Probably more important than CrowdStrike at this juncture.
Oh,
oil
sure.
Oil today, just briefly, and perhaps it's not worth getting into right now, but back to $96 here with some of the headlines coming out in the market. Is this anything more than a range trade right now? Because it feels like we've been playing ping pong between 86 and we'll call it 105, or maybe 85 to 105 in CLN6 since late April.
It seems like we're nominally setting higher highs off the range bottom, right? So if you look at the actual architecture of the move up from that range bottom around 86, what do you see? I mean, this is pretty much a textbook sort of situation. I mean, higher highs, higher lows, a clean upside slope. I mean, this looks like it's going higher. Now, maybe it's not going much higher than 100, where its next kind of major sticking point is. And maybe as you're setting it up here, the head and shoulders implications of this take us roughly, let's call it, to the top of the range.
Top of the range. Not much more.
Fine with me.
So even the structure, even the bullish structure on a very micro level, it's not exactly screaming for this market to break out.
No, but
it does show that
it makes the money though being long.
Yeah, no, but it shows the path of least resistance may be higher. Amelia, it's another day where we're watching, just looking at the spread between CLQ6 and Z6 here. We have that calendar spread on where we're long the Q6 and short the Z6, just kind of as an equity hedge of sorts in case there's another backwardation blowout and supply scare in the short term. It's another day, 2.7% higher on the Q6, only 1.6% higher on the Z6 here. So you're starting to see, just within the futures curve itself, these little wrinkles of the market beginning to get a little worried about short-term supply right now. Speaking about worries here, though, we do have Broadcom earnings because it is 4:15 Eastern time here. We were trading at 475 ahead of those earnings coming out. Ilya, feel free to read them off because I still haven't seen them splash across my screen, but it doesn't. Oh, and here we are.
Yep, here we go.
244 versus 240 expected on the EPS. 2.187 billion versus 22.12 billion. So both are beats. EPS up 54% year over year. Revs up 48% year over year. EPS up 19% quarter over quarter.
Very narrow.
Revenues up 15% quarter over quarter right now. I haven't seen any of the commentary otherwise. I'm going to look for some of that guidance right now.
If I had to, knowing nothing, right, just looking at these numbers and the price reaction, my mind goes to, what do you mean it was only a 2% beat? What do you think this is? Where do you think we are in the cycle? You think you can give me 2% and I'm going to be excited?
I suppose not. I suppose not.
That's kind of what this reads like. Like these are not bad numbers. Just at the surface, they made more. They made more money. They earned more efficiently off the money that they made, of which there was more. This is not a bad result as such on surface level, but clearly the market's going, yeah, but what have you done for me lately?
This is funny here. This line. Third quarter fiscal year 2026 revenue guidance of approximately $29.4 billion, an increase of 84% from the prior year.
Yeah.
Yeah, so they were good numbers. They were good numbers all around. They guide higher.
I mean, revenue up 48% year on year, EPS up 54% year on year.
I guess maybe that's just not good enough, which would be a sign of the
well,
times
and that's the
sentiment. Thing. That would be a sign of sentiment in a frothy market.
That would be a sign of sentiment. Yes.
We're not going to get too over our skis here yet. We'll see how that plays out right now. Semiconductors themselves down to 633 after hours or so. We'll call it 634.50, closed up at 637. Ilya, I know this crazy ride is going to come to an end soon. Jamie Dimon today said that he's seen this before, and then he explicitly called out Micron. When does it end?
Honestly, I think you have to trade the price action as it presents itself. I think you saw a little bit of a chink in the armor for the Nasdaq today. You didn't see it for the S&P or the Russell. But if you look at a 4-hour chart of the Nasdaq, 4 is the lowest I'll go for an actionable signal. You can zoom in here and you can see we're narrowly carving lower lows. And if you zoom in just right on the candles here, you can see you're starting to carve through prior resistance turned support. Now it's very narrow still, but it's more than you're getting from the S&P or the Russell. And when you get that kind of a thing, and then you look and say, going out 44 days, going out 58 days in and just selling a call vertical is better than 1-to-1 risk reward. What does that mean? Well, it means that I lock in a max loss that's smaller than the premium I receive up front. Is that free money? Even in the worst case scenario? No, obviously not, because crazy things happen. But is it a favorable setup? Is the market telling you it's willing to give you very advantageous terms to take a flyer on the short side and see if this thing might follow through? Yes. Very advantageous terms.
If you're in the business of calling tops, my friend.
As I say, the market is telling you, I will give you more premium up front than your max loss on the trade. So your worst case scenario is the thing expires worthless and you walk away with some premium received. Again, markets do weird things. This is indicative math that gives you max loss and all these things, right? Especially in a crazy kind of market meltdown, all kinds of things can happen. I mean, crude oil's gone negative before. Stranger things have happened. But the terms are favorable, it would seem, to at least be bear curious through the selling of calls as the expression. Risk defined.
Obviously, I find no area of agreement with you there. As you can imagine.
It would be, I would need to call the medics if you did.
Yes. But I mean, listen, I'm not in the right state of mind today. The Knicks are playing tonight, and I've had a Celsius, and I've had several cups of coffee, and I'm feeling pretty on tilt right now, not because of anything.
I've been listening to old Action Bronson mixtapes on your behalf.
I appreciate that. I really do appreciate that. All the good vibes. Here's San Antonio. San Antonio has so many good things going on for them. Like, when does New York ever have anything good going on for it?
I can't root for Texas. There's too much rivalry with us and that whole thing, that whole trinity of teams on the west side of the conference. So, no.
President Trump says Iran is close to signing a deal, but negotiations could extend
what do you know?
2 to 3 weeks here. Oil prices are obviously moving after hours. In fact, they are moving after hours. They're down about 20 cents. We are perpetually 2 weeks away from a deal. 2 weeks to stop the spread, in fact, of the Iran war.
Nice. Very nice.
10th week.
2 weeks.
Trump says Iran close.
That's good.
Iran close to signing my paper in theory is his most recent quote. So do with that what you will.
Now, can we get some sense of what kind of paper this is? Because it seems to be worth about as much as not the stationary kind, considering how many times we've heard this before.
Gold today takes a beating. Silver takes a beating. Ilya, I'm still, last year was a pretty clear fundamental narrative. The war kicks in, and all of a sudden, who's the buyer, the marginal buyer of gold right now? Are you still leaning short here? And if so, how are you approaching this?
Yes. I'm still short here. In fact, I've become larger in the position because it seems to be working. The story here, really, since let's call it second half of April topping in the anti-war bounce, that anti-war bounce, that long wick right around 4,400 is where gold ultimately closed. That bounce in late March, early April happens in every single market. It happens in bonds. It happens in stocks. It happens in gold. There's a parallel pullback in the dollar. It happens everywhere at the same time. And that's the first ceasefire. So, understandable. Stocks run off. Bonds don't. Gold doesn't. The dollar doesn't. And this has been my song and dance basically since then, that every market that isn't hopped up on semiconductors is looking at this and going, we got ourselves an inflation and a rates issue here. And all of those markets have since come back to at or near the levels they were at the peak of the war move. And certainly gold, likewise. We're much closer to 4,400 than anything else. And it's been leaking lower since mid-April, and I've been short and just adding on Delta One futures exposure because I'm trading it basically as a currency and just layering on in 1 ounce futures. I like those because they give you the kind of flexibility that an M6 future would, where you can peel things off, peel things on. It's liquid almost 24 hours a day. So that's been my vehicle. I think for now, the path of least resistance is clear. The question will be when there is a turn, and with inflation doing what it's doing and rates doing what they're doing, it's probably not soon.
Probably not soon. 10-year yield is crossing 4.5% again today. It's starting to just get into that area where the market feels a little comfortable, right? We've seen here in recent sessions, as from the 20th onwards, basically in stocks, we can go back to the S&P 500 here, Ilya, but from the 20th onwards, effectively, that's the low here in stocks before they start their next trek up. And today is the day where we have the 10s cross back above 4.5%, and ES comes back down. Oil is still very much in the driver's seat. It's starting to get back into that territory where it's not something people ignore. And the rolling 1 week correlations, if you're looking at oil versus bonds, or oil versus notes, or oil versus gold, or oil versus silver, I mean, it's a near perfect negative correlation right now.
Yeah.
Oil is still very much in the driver's seat. So Broadcom here, one more check here before we go. 455 right now after hours, waiting for that press conference. It did hit a low of 437.80, and we opened this up around 479 and change. So it's still weakness Weak news here, Ilya. Hey, Ilya, I do have a final closing remark here because apparently something I said on last call bothered some people, which is fine. Everyone's entitled to their own different opinion. The scope and scale of, I'm going to reinforce and double down on my opinion here. The Iran war is a bigger strategic failure than Vietnam. The pushback that was sent in the comments is that so many people died in Vietnam, all of them a life lost that is tragic. Think about the futures they could have helped build in this country and the worlds they could have created had those lives been lost. But if that's the scale of failure, if that's the metric that you're going to use for failure, then by that metric, World War II was a bigger failure than Vietnam because 400,000 American servicemen and women lost their lives defending this country from the spread of fascism globally. Lives lost is not a good metric to determine whether or not a country wins or loses a war. You have to consider alliances, objectives, the ability to leverage your opponent. This war in Iran's been ending for weeks. The United States has lost control over the Strait of Hormuz. That is not inconsiderate. There's going to be a longer tail from losing the Strait of Hormuz than losing Vietnam to the Reds back in the 1970s. And I don't think that's indisputable. Fewer people died in Iraq than died in World War II. Is anyone here saying that the Iraq War and the Afghanistan War were bigger successes than World War II? No, no one is.
I sure hope not.
The Iran War, for those out there interested in learning about this, go look back at the Suez Crisis with the UK. No one considers, historians who read into this and who study this across the political spectrum, by the way, this is not a left versus right thing. This is a commonly understood unified opinion. The Suez Crisis is marked as the end of the British Empire. It's not World War I where they lost 800,000 people. It's the Suez Crisis where they lost 22 people because they lost their ability to move the world and convince their allies to do what was necessary to keep maritime commerce secure. And instead, the empire was transferred to the US. So as someone who is very pro-empire and does not want to live through an imperial decline on scale with what happened to the Brits, who have never recovered since the Suez Crisis, or the Spanish or the Dutch, I'm hoping that we can find a way out of this. And hopefully no more American servicemen or women lose their lives along the way. Ilya, overtime is out of time for today. We'll be back tomorrow. Same time, same place, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak, I've been Chris Vecchio. Good luck trading. Tune in tonight. PDT rule is over. 1 a.m. Eastern, 12 Central time. After the Knicks win game 1, Nick, Mike, and Chris will be here to flip the switch. But before that, Macro Money's coming up next.
See you there, everybody.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
I've got some huge news for traders everywhere. On June 4th, the pattern day trader rule will be replaced by new intraday margin rules. Tasty Trade has been advocating for an updated PDT rule for years, and we're ready to go on day 1. You'll have more flexibility to manage risk when and how you want. Join Tasty Trade today.
First thing about Tasty Trade is how easy it is. It's a very quick, light platform. It's all on one page.
And with 1 or 2 clicks, you can be anywhere on the platform.
Being able to see graphically where your profit and loss zones are.
Whether it's a pool, a puddle, or a sea, you can navigate your way out of it with the Tasty platform. So I love that. You guys have the most unbelievable customer service in the business.
Email support, call support, get through right away.
They actively listen to the customers to make changes to the platform to make it better.
In fact, I've never seen anything like it in any corporation in the United States.
Investopedia says we're the best for options trading. Stockbrokers.com says we're #1. And Broker Chooser raves about us too. So what else can we say other than boom? Trade like a trader. Tasty Trade.
The old PDT rules are going away, and Tasty Live is kicking off Trader Independence Day with a live midnight show. We'll break down the important new regulations you need to understand. We'll talk about the top tips for beginners, risks you need to be aware of. We'll also be taking questions live from the Tasty Live viewers on our YouTube channel. Tune in to join us as we celebrate Trader Independence Day tasty style.
Pay for backtesting? No. Pick from hundreds of symbols, any strategy you want, and all the data to trade smarter. Tweak the delta, dial in the DTE, and stack the legs. See what survives. Check out Tasty Trade today.
All I can do is what would love do? What would love do? Love would love you. What would love do? Love would love you, love you. What would love do? Love would love you. What would love me? Love would love me. Love would love you, love you. Put down my halo, put down my wings, realizing I can't fix everyone or everything. You are human and you have your own path, and if you need me, I'll just wait here until you ask. Forgiving me, forgiving you, we're all learning to live in truth. All I can do is what will love do?
Is the U.S. economy already overheating? That's the question that we're going to be asking ourselves today after some very interesting economic data hits the tape and the markets become a bit spooked. Now, the upshot here seems to be the jump in crude oil prices, and the market's getting once again a bit concerned about what that might mean for underlying inflation and for rates. But this is not anything that the markets haven't shrugged off before. And so that they are deciding to react today seems to be less so a function of whether crude oil ticked this way or that, although that certainly is helpful as a catalyst, but a piece of economic data that suggests that it's not just that the issue is on the minds of economists and economy watchers, but rather that the markets are finally starting to pay attention, even in the equities space, whereas they've been paying attention elsewhere for some weeks, about the gathering risk that suggests that the Iran war is already spilling over into broader inflation, and moreover, that it is coming layered on top of an inflationary shock that was already there and that may well be coming together into a situation where the economy has a downturn, not because demand drops out, but because it overheats. And so here's what we see from the stock market today, the first meaningful down move in a while here after this 9-day in one after the other slow grind to the top side. Now, we can see here we haven't crossed any Rubicons on the downside here. If you're kind of baseline definition of a down move is a series of higher highs and higher lows that is broken. So the fundamental kind of construct of a trend higher highs and higher lows violated. This would be your line in the sand. And if you were to break back down here, then you would necessarily have set a lower low in this continuum here. And so you will have had the sense that here was the trend higher, here was an attempted first top, here, as often happens, by the way, a secondary top with fading momentum and fading volume. And if you close down here, then you'd have a good sense, okay, well, now we're setting up for a larger reversal. You don't have that here yet. Nevertheless, the markets do take a potent beating here. This is certainly, visible with the naked eye as something that stands apart from recent price action. And indeed, if we were to put it in context here, this is the largest single day drawdown for the S&P 500 since May the 15th, the prior big red bar, which was itself the largest drawdown since March the 27th, the start of the war. So this is the biggest sell-off since here, which was the biggest sell-off since back here. And so with that in mind, we look at a situation here that, or back here rather, we look at a situation that, again, seems to follow a familiar script. If you look at other markets, the novel part is that equities choose to care. So here we are with yields. They push higher. As we've been talking about, the bond market gets rejected at this former range support become resistance and takes a leg back in the direction of higher rates. Gold continues to leak lower. We seem to be making an attempt to break out of this most recent pocket of congestion into another extension down. But we can see since gold's rebound after the first ceasefire in the war petered out about halfway up into a retracement of the wartime initial thrust, we see that we've been gradually setting lower lows and lower highs, leaking downward back into somewhere around this support here near 4,400. And this most recent move today suggests at the very least we're going to come down and test this again, because whatever congestion was happening down here seems to have been punctured. It's an even more convincing story for the US dollar, where we seem to have broken out of the congestion range that's contained us since mid-April. We haven't quite cleared the highs here yet on DXY, but the conviction behind the move, where we sort of pointedly struggled to close above this level over and over and over again for weeks, now the break here seems to paint a much more convincing story and set the stage for a dollar upswing to continue. And of course, all this comes against the backdrop of the third day in a row that crude oil goes higher. But crude oil hasn't really gone down very much really since the start of the war. It's basically been stuck in a range with a floor basically around the $80 to $85 range on WTI, give or take. And so while we were here before the war, somewhere around, let's call it 60 a barrel, 60, 65, we're clearly about $20 higher at its best and locked in. And of course, the reason that we don't see unclenching of the war dynamics in bonds, which bounce about a third of the way and then extend lower, in gold, which bounces about halfway, then extends back, in the dollar, which pulls back about halfway and then extends in the direction of the highs. The reason that we see all those moves is ostensibly because crude oil has been locked at a higher level, and so the inflation implications of that haven't gone anywhere. It's really in the stock market where that same rebound, late March, early April, has extended into this much larger thing. And because that has happened, what's interesting is the novelty of actually seeing stocks apparently responsive to what's going on. Now, why now and what's this all about suddenly? Why is it that the markets appear to care in a place where they didn't appear to care before? And that's really where the economic data comes into the picture. So we got our ISM service sector PMI data today. It came in a little bit better than expected, just a touch faster service sector growth than economists were penciling in. But the makeup is a very interesting story, as was the makeup of the manufacturing numbers earlier in the week. We get some genuine momentum. This is the third strongest month here since the beginning of the year. So we can see here was a meaningful jump right here. This is the strongest in 3 months and the second strongest for the year as far as service sector growth. We see it comes with some genuine improvement. New orders are up a bit, but employment continues to be in contraction mode. Note it's below 50, which is the boom-bust level on these numbers. Below 50, it's contraction. Above 50, it's expansion. The further you go above 50, the faster that expansion. The further you go below 50, the faster the contraction. So what you find here is employment is actually in contraction mode, but the pricing structure is giving us the strongest inflation since near the COVID peaks. This is somewhere around the middle of 2022. So not quite the peak that we saw before the Fed really started to lean in on inflation, but certainly in the vicinity of the COVID highs rather than even the middle ground or lows. And that, of course, mirrors to a large extent what happens in manufacturing when we see those numbers earlier in the week. Of course, in manufacturing, the inflation story is even more aggressive. We're even closer to those COVID highs here. And of course, the growth that we have achieved for all of this inflation is tellingly weaker than where growth was the last time we achieved this kind of inflation. That ought to be eye-catching too. More on that in just a second. But the upshot remains relatively similar. What we have is growth without increasing employment and inflation that is surging. Now, putting all of this together is a very interesting exercise because it really paints the picture of what's actually occurring in the U.S. economy as we get this divergence between what stocks see and all the other major markets. Going back to basically, let's call it the beginning of 2023. So the better part of 3 years. We've carved out a sort of post-COVID normal for what U.S. economic performance looks like. The service sector, of course, is by far larger than manufacturing, both in terms of its share of employment and its contribution to overall output growth. And so you can see this composite model that we've created here, taking together services and manufacturing, it clings closer to the service sector because back of the napkin spread here is about 7-3. So 70% of the total is services, 30% of the total is manufacturing. And obviously, we're looking here not at the whole economy as such, because we're ignoring agriculture. So this is very broad strokes type of modeling for this composite, but it does give us a good sense of what's going on. And we get slightly better on that overall model than do services suggest. Notice the high in services here and from back in 2024 is about the same, but the composite is higher. And that's because manufacturing pops out of contraction territory finally at the start of this year. And we get a little bit of a lift here. So both of these things end up in expansionary territory, whereas you can see going back to early 2023, it's largely services carrying the economy as manufacturing shrinks. And ostensibly, that's after what happened in COVID here, where you can see there was a deep rally out of COVID lows for manufacturing, and then things kind of settled. And there was a sort of overhang capacity shedding period right here. But the upshot seems to be that the US economy, although the mix has changed somewhat, has been growing at a relatively steady rate basically for the past 3 years. And you can see that it's been supported by relatively steady new orders, again, driven mostly by services over that same period. So the economy might be doing this or that under the surface, but the general pace of growth seems to be a relatively even-keeled cadence now for 3 years. And this or that screaming headline hasn't really changed that baseline. But take one look under the surface, and you start to see that even as the economy produces steady growth, it is producing that growth with less labor, because you can see manufacturing employment has been in contraction mode steadily over the period, and now the service sector has joined it. In fact, you can see the trend in employment going all the way back to 2021 is down. But of course, more recently, there is a concerted contraction in employment across both services and manufacturing. And all of that is happening with increasingly escalating inflationary pressure, most especially, of course, since the start of 2025 with the introduction of the tariffs. And then again, another start of the year jolt here for this year with the US-Iran war. So what you end up with is an economy that looks to be steady as she goes, except under the surface, that level of growth, sustaining that level of growth, seems to have come with increasingly hot prices. And that, of course, is no happy kind of thing, because generally, if inflation is rising for good reasons, it is because economic growth is picking up, more money is changing hands, demand is stronger than supply can catch up to, and you get inflation. But what you see here is that growth is no faster, by and large. It's been relatively steady, but you still get more and more inflation. It is almost as if the economy is straining more to achieve the same results. And what that's doing is creating a kind of overheating under the surface, where it seems like the economy shouldn't be growing fast enough to overheat. But nevertheless, that's exactly what seems to be occurring. Now, this is not just a US story. with the finishing of the S&P Global PMI roundup, we also have the worldwide numbers here done in conjunction with JP Morgan. And we can see here that, again, for global growth, it is much the same story. It looks relatively middling. So we're just below the long run average here, which is signaled by the dots there. So there's a kind of range that we've carved out since basically 2023. And within that range, we're basically nearer to the top, but seemingly heading lower, back in the direction of the middle of the range. And what we find is that as this occurs, there's a very interesting mix where the service sector seems to be fading, but manufacturing seems to be perking up. And it's difficult not to connect this with what you see in the US and the booming manufacturing sector. The ISM and the S&P Global numbers agree on this, largely around the stocking and the aggressive front loading of inputs and middle of the production materials by manufacturers in anticipation of still higher prices, buffeted basically by three concurrent forces. First, the tariffs. We're just today getting the rebuilding of that regime after the Supreme Court ruled that the majority of that regime, as introduced last year on the basis of IEEPA legislation, was unconstitutional. And so the tariffs went away in large part, then were reconstituted with temporary measures up to a point, and just today we learn are being reconstructed further. So that uncertainty is turning into more of an inflationary impetus. Then, of course, we have the Iran war, which through the closure of Hormuz and the surging of energy prices, fertilizer prices, all things petroleum derivative as a result, including services like shipping, like freight, like trucking, including all manner of other inputs, let's say plastics, which are dependent on petrochemicals. That's another inflationary impetus. And then, of course, finally, there is the AI building boom and the voracious appetite that has for inputs, be they metals or other construction material or middle parts like servers and chips. And of course, we see that in the servers and the chips. We see the extent to which those stocks have surged around the announcements of how much money is going to go toward building those things. And so manufacturers have these three aggressive pulls on prices. And so not surprisingly, they've decided, you know what, before things get even more expensive, let's stock up. And so you get this big push in manufacturing activity, but services weighed down by ostensibly exactly the same forces take a big leg lower. And this is what the price structure here is doing. We can clearly see that this is off the charts relative to history, and indeed for input prices and output prices takes us very much back in the direction of COVID extremes. Not quite the peaks, of course. These are global numbers. COVID and inflation was a disparate thing across the world, for some places worse than others. But we can see here that clearly the inflationary impetus is very strong indeed. And if we look inside the global service sector numbers, we can see who's being hurt. Again, these numbers are done around a center line of 50. And we can see growth in consumer services business activity has turned negative. And so we are now in a situation where looking at US GDP numbers as we have starts to really paint a picture. The consumer is already in retrenchment thanks to all of this inflation, as the PMI numbers seem to suggest. And so what you have here is the strange arrangement that in contribution to overall GDP growth, business investment, which is only about 14% of the economy, ends up contributing more, right? These are contributions to the percent change in real GDP. So you can see of this 1.6% growth in the first quarter, just a little over 1% is accounted for by business investment. A bit less than 1% is accounted for by consumption. No real changes here in the numbers, initially reported GDP versus revision for government spending, exports, and imports. So these things are relatively stable in terms of where their contributions are. But we can see here clearly, we have this strange setting where the economy does grow. It was a contraction of 0.5% in the fourth quarter, or rather growth of just 0.5% because of a contraction in government spending around the U.S. government shutdown. So we are growing, but more growth is coming from investment, which is only a 14% chunk of the economy, than is coming from consumer spending, which is nearly 5 times larger at 68% of the economy. How do you get there? Well, you have to have business investment growing much, much faster in order for a piece that is that small to outpace and contribute more than a piece that is much bigger. Otherwise, it can't work. And so what does that mean? Well, it sort of starts to show you how you end up with an economy that's only recovered about halfway the growth rate before the government shutdown. In the second quarter and third quarter of last year, the economy grew about 4%, a little bit more one quarter, a little bit less the other, but the average about 4%. In the first quarter of this year, after the shutdown, we've recovered less than half, so we're at about 1.6 here. But even so, even to achieve that modest rebound, because we've had to do it by running hot on business investment, we've ended up with an economy that's creating dramatic inflation even before we get into this shock from the war. And so, in a sense, this build out in AI infrastructure starts becoming not so much a tale of how the economy can still grow despite having the headwind of the war and the inflation that it has brought in front of it, but rather the war as an amplifying factor on an already inflationary economy that's needed a lot more inflationary growth to expand at all. And so what you end up with then is a very interesting situation indeed. Because, of course, since growth thus has become more inflationary in general, and that's what the ISM numbers seem to tell us, we've likewise seen a dramatic upshift in hawkish intent from global central banks. And as ever, the Bank of Japan is an outlier here. But the architecture of everything that's come together says, well, this weak growth you have, you're not going to get any help from central banks to get it to move any faster, because even this amount of growth is happening with so much inflation that central banks are much likelier to hike. Now about 68% chance of a hike from the Fed this year than they are to cut. And what this Iran war has done is really more so put a spotlight and amplified the issue rather than create it. So even if you were to have a Strait of Hormuz deal yesterday, it doesn't much change the bottom line. So from a positioning perspective, I am still betting on higher rates here. I'm still short gold through the futures, long the dollar with shorts on the Aussie, the pound, and the euro. On the spot side of things, I am also short the yen and the Swiss franc. I've got puts outright on the middle of the curve through IEF. I've got put verticals on the long end of the curve through TLT, looking for bonds to come down and rates to come up. I'm long the drivers nominally of the immediate inflation, so long oil, long natural gas through call verticals here. And I'm approaching the response to equities through selling calls. And the pricing here has become very interesting because at this point, you get better than one-to-one risk reward to sell calls in SPY and in the Qs and in IWM. So all three major indices, the Russell, the S&P, and the NASDAQ. And what that basically means is you get a setup where you receive your premium as you short the calls, but your max loss on the trade is actually smaller. Now, that's not free money, of course, because strange things happen in markets all the time. It does seem like the market wants to give you an attractive risk-reward kind of setup. And so with that in mind, I'm going to sit on this exposure, and I've actually added a bit more to the NASDAQ here to see if we can finally get some follow through on all of this downside momentum, because perhaps finally the market has taken notice of the fact that its first quarter growth arrangement isn't so much a solution, but the essence of the issue that ultimately makes all of this come apart. And not because growth falters, but actually because the economy overheats. And that is macro money for today. As ever, we are here right after overtime. That's a show that I co-host with Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm likewise writing for the news and insights portion of tastylive.com and commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money returns tomorrow. Happy trading.